It's actually old one. This you don't watch. This is completely this flyer is the right just 9 hours before it was uploaded, part 1. This you watch completely 10 hours is there. In this marathon, right from our basic concepts chapter to clubbing chapter, it is covered. Almost 8 chapters we covered. Now in part 2 we are going to discuss set off and carry forward, chapter 6a, TDS TCS. Remember guys, TDS TCS has lot of amendments in TDS TCS. Advanced tax, then alternate minimum tax, total income, default tax regime, where I even solved certain illustrations on 10AA, 115 BSc, 35 AD, 115 JE, put together some combination illustrations were there. That also I did. So part 1 you have 1 to 8 chapters, part 2 you have 9 to 12 chapters. Now immediately you might get, sir, what about return of income? I have not yet done return of income video. Maybe if my time permits, I will for sure do return of income revision also. This is regarding the entire part 2. Why late? Start, continue watching. Set off and carry forward, deductions, 100% of each and every topic is covered, my dear. Okay, and by the way, in this I used a material which is a colored material. In the part 1 also I gave an introduction. For example, you see here, just 1 minute. Yes, you see here, the material which I am using is this. You will absolutely love the material. Okay, so you can get the PDF of the same in our website, restofacma.com website. You can download and take a print if you want, or sir, I want hard copy, colored one. It is just 400 rupees concept book, 400 rupees. You can place order in the same website. You will get within 7 days the material. That's it. So why late? Enjoy the tax class like never before. Continue watching. Yes, let's begin set off and carry forward revision. Okay, in set off and carry forward, we have totally these many sections: 70 intra-head set off, 71 inter-head set off, 71B carry forward of house property loss, 72 carry forward of normal business loss, 32 subsection 2 carry forward of unabsorbed depreciation loss, and carry forward of unabsorbed capital expenditure on scientific research, carry forward of unabsorbed capital expenditure on family planning. All that similar treatment under 32. Okay, then we are going to discuss 73 carry forward of speculation loss, 73A carry forward of specified business loss related capital expenditure. Yes or no? Revenue expenditure for specified business, no, it's 8 years only always. Specified business related capital expenditure. Getting it? Actually, specified business, all types 80, I mean infinite only. Okay, revenue capital no need to bifurcate. Actually 70 specified business under 35 AD, they're mainly talking deduction about capital expenditure. Yeah, 73A, yes or no? Minus 74 capital losses, long-term capital or short-term capital loss. Then 74A, we have a loss from owning and maintaining race horses. Totally these are the sections. And finally there is a section called 80 which talks about due date for filing IT return, which talks about in order to carry forward the loss you must file the return of income within due date. These are the sections. Now suppose SSC is having multiple sources within same head of income. Suppose I have multiple houses. Now from few houses I have a loss after reducing interest. From few houses I have a profit even after reducing interest. Remember, under optional tax regime only interest on self-occupied property can be claimed as deduction. For let out and deemed let out property, you can always claim interest deduction. No limitation on that. For self-occupied house only, you can claim deduction. You can claim deduction towards interest only in optional. Under default tax regime, you can't claim. No, very simple. Within a head of income, if I have multiple sources, like I have multiple businesses in PGBP, I have multiple capital gains income, capital losses. Very simple. Loss from one source, I can set off with income from another source. In the same head, within the same head I will set off. Income and loss I can set off. One source I have a loss, another source I have income, I can set off. But there are certain restrictions. Speculation business loss, you can set off only with speculation business income. If you have a speculation business and there is a loss from that, you can only set off with speculation business income. What is speculation activity? In PGBP, I have not revised it actually, but you can read that and then cover. In our PGBP discussion introduction, there is a speculation business means what? Hedging is not a speculation. Shares derivatives is not a speculation. Commodity derivative is not a speculation. These three are not treated as speculation. And a company whose principal activity is trading, whose principal activity itself is investing, loans and advances, for them also buying and selling of shares is not treated as speculation. Banks, it is not treated as speculation. Are you getting it? So for banks and all, speculation concept will not apply. For companies which are exclusively involved in investing business, for them speculation concept do not apply. And for other people, derivatives is not a speculation, commodity derivatives is not a speculation, hedging contracts is not a speculation, forward contract is not a speculation. That's it, over. Speculation concept also over. Speculation means what? Buying and selling of shares without delivery. I buy the share and sell without taking delivery. Nothing but intraday transactions. They are all intraday transactions. That's it. Now, speculation, if I have a loss, I can set up that, but only with speculation business profit. Suppose I have a speculation loss, but I have another business, normal manufacturing business, I have a profit there. I can't set up these two, because speculation loss I can set up only with the speculation gain. Suppose I have a specified business loss. Specified business means 14 specified businesses are there. Under PGBP, I have a loss from them. Incomes minus revenue expenditure minus capital expenditure, 100% reduction is equal to I have a loss. No problem. You can set off it only with another specified business. Only. Suppose I have a loss in 3-star hotel and I have a profit in hospital with 100 beds. Set off. Sir, actually 100 beds hospital is there, right? I am not claiming 35 AD deduction, sir. It's a specified business only, but I am not claiming deduction under 35 AD. Is that income still eligible to set off this loss? Yes. See, they are saying specified business loss you can set up only with specified business profit. They are not giving any condition like, are you claiming deduction under 35 AD? They are not at all asking that. If it is a specified business loss, set up only with specified business income. That's it. Are you clear? Next. Sir, I am having a long-term capital loss. Suppose under capital gain set off income, no, I sold shares, long-term shares. I got a loss. I sold land and building. Short-term, I had a profit. Can I set off these two? They both are within the same source, no? Long-term capital loss, it can be set off only with long-term capital gain. Same like speculation and specified. Speculation business loss, specified business loss, they can be set up only with respective incomes. Long-term capital loss can be set up only with long-term capital gain. Same way, sir, I am owning and maintaining racehorse. From that I have a loss. How to calculate loss from owning and maintaining racehorse? How to calculate loss from that? Very simple. You know, loss is equal to, did you participate in any winning and won the money? Check out. Yeah, I won. I won some money. And did you incur revenue expenditure for maintaining the race horses? Yes, I spent a lot of money in the full last 1 year. I spent so much on feeding the horses, all that. But in one race, I won money. So I won money, approximately 1 crore in the race. But feeding the horses and all, 2 crore I spent. 1 crore is loss. This is called as loss from owning and maintaining race horse. You know, these people who are owning and maintaining race horses, no, they incur revenue expenditure. That revenue expenditure will be used for calculating loss under other sources. Their income is what? Winning money. If at all they win something in the horse race, no, that winning we will consider. Winning we will consider only on gross basis. So winning minus that one. Sir, in this year, no winning, sir. Everything loss only. Only entire expenditure I spent on horse maintenance. Remember, for calculating loss, no, only revenue expenditure on maintaining the horse you should take. You should not take race horse loss. Horse races we participated and there I incurred loss. That is to be ignored always. That is to be ignored. I spent money on maintaining the horse. That you consider. Income from winning minus money maintained on horses is equal to balance. If still loss, then that is called as what? Loss from owning and maintaining. And that loss you can set off only with the same income from owning and maintaining race horses. Suppose, sir, in agriculture, no, if there is a profit, you are ignoring because agriculture income is exempted. If there is a loss, what about it? That is also ignored. If you are getting profit, we are ignoring because it's an exempted source. If you are getting loss also, it is to be ignored. Loss from exempted source shall be ignored. That's it. 70 section is over. Then 71, which is talking about interhead adjustment, which is talking about Interhead adjustment. What is interhead adjustment? Very simple. Loss under one head of income can be adjusted with income under another head. See, right now, what I did, within the same head, I have some houses and all, I have businesses, I tried set off. By the way, tell me, I have a normal business loss. Can I set off with speculation business income? Restriction is for speculation loss. Normal business loss, no restriction. Yes or no? Is there a normal business loss discussion here? So I can set off normal business loss with any source of income within the same head of income. Can I set off short-term capital loss with long-term capital gain? Yes. Where is restriction here on short-term capital loss? Here restriction is there only for speculation loss, specified loss, long-term capital loss, loss from owning and maintaining resource. No restriction for other incomes. For other losses, I can set off with other incomes comfortably. Yes or no? No. Suppose I set off the loss. I still have a loss. I can set off with other heads of income. You see, I have given very clearly material here. You see here, only one point I've highlighted here, and house property point I've highlighted with a green background. Rest of the points you see, same white background. What does it mean, Under optional tax regime, under default tax regime, for normal business loss, speculation loss, specified loss, long-term capital loss, short-term capital loss, for all of them, the treatment is same. Whether it is optional tax regime or default tax regime, it doesn't matter. House property loss. If I have a loss under house property head, first set off with other house property incomes. You still have a loss, huh? Set off with other heads of income. Set off with other heads of income only under optional tax regime. You can set off with other heads of income only under optional tax. That too, how much you can set off? 2 lakh. Suppose, sir, I'm going with the default tax regime, sir, and I have a loss under house property. You can't set off. First of all, in default tax regime, you will get a loss under house property only for LOP, DLOP. You will not get loss for SOP. Why? SOP, you can't claim deduction at all. If NAV is equal to 0, you can't claim deduction towards interest under default tax regime. No deduction towards interest for SOP, UOP, where NAV is equal to 0. So loss is not at all possible in default tax regime for self-occupied house, unoccupied house. Loss is possible only for let out property, DLOP, where interest on borrowed loan is more than net annual value. Net annual value minus 30% deduction. Then still you give interest on loan. If the resultant figure is negative, then that's a loss from house property. Now that loss, if you still have, even after set off with other heads, note, by the way, in default tax regime, you can't set off with other heads. But in optional tax regime, you can set off with other heads of income. Yes or no? And I told you, under optional tax regime, still have a house property loss, sir. What I can do? You can carry forward for 8 years. After setting off with other heads up to 2 lakh rupee, I can still carry forward for how many years? 8 years. Under default tax regime, ICA book contains a mistake. I am telling you once again, it's a mistake. Don't again ask me below comment saying that why it is not. It is given in ICA book, it is not carry for. No, it's a mistake. That's it. And I spoke in the regular class. I showed in the regular class. I opened act and showed it's a clear-cut mistake. Yes or no? In the ICA book, they said house property loss cannot be carry forwarded, which is actually a blunder mistake. Getting it? You can carry forward. This point is given in ICA book, which is wrong. Very simple. Under default tax regime, house property loss you can't carry forward. Why? Under default tax regime, which laws you can't carry forward? That loss which you cannot claim deduction. In default tax regime, if you can't claim, you can't carry forward. If you can claim means you can carry forward. If you can claim means you can obviously carry forward. Yes or no? Restriction of not carry forward is there for what? Disallowed losses. Disallowed expenses, unabsorbed depreciation and all, you can't carry forward further. For those kind only it is there. Yes or no? So under default tax regime, if I have a let out property, deemed let out property, default tax regime, and I have a loss from that let out or deemed let out property, I will first set off with other heads. No, set off with other heads is not permitted. You can carry forward. If you cannot carry forward, then why deduction they will give? Deduction for LOP, DLOP is unlimited, no? Under default tax regime, they will give deduction, no? If they are giving deduction, then why they are giving deduction without carry forward, right? Fundamental question. So you can still carry forward. In ICA book, it is wrongly given. In ICA book, it is wrongly given. In one of the MTP, it is wrongly given. Actual provision is you can carry forward. In exam, if the same question comes, what to do? You write an answer in such a way, point write not carry forward. Below write alternative answer. As per the provisions of the law, it can be carry forwarded. But in the ICA study material, it was given not carry forwarded. You just write that. That's enough. Are you getting it? 99.99% ICA will give right answer only. ICA will go for right answer only. Means it can be carry forwarded. Able to understand. So, house property loss. Can I claim deduction for LOP, DLOP interest? Yes. If there is a loss, can you carry forward in default tax regime? Yes, you can carry forward. Sir, what about self-occupied property? Array for self-occupied, unoccupied, where NAV is equal to 0, you can't claim interest deduction itself. When you can't claim interest deduction itself, how come you carry forward? There is no question of carry forward for self-occupied, unoccupied. Sir, what about optional tax regime? Optional tax regime, self-occupied, unoccupied, interest you can claim deduction. Loss is there. Set off with other heads of income up to 2 lakhs. Still loss is there. Carry forward for 8 years. Sir, let out and DLOP, sir. I have claimed interest, sir. I have still loss. Set off with other heads of income. Maximum 2 lakhs only. Balance loss. Carry forward. That's it. I spoke about set off, self-occupied, unoccupied, let out, deemed let out. Both under optional tax regime, default tax regime. I spoke about set off. I spoke about carry forward. Clear? Next, sir, I have unabsorbed normal depreciation loss, normal loss. Immediately, whenever PGBP loss information, suppose in the question, they spoke about business loss. Suppose you are computing PGBP income in the current year. You got a loss. Immediately, what you should do, suppose you got a loss of 10 lakhs. You got a loss of 10 lakhs under PGBP. Add back depreciation. Add back depreciation. How much depreciation? For example, 15 lakhs is the depreciation. Now business income is profit. Before depreciation, you have a profit. After depreciation, you have a loss. Which means this entire loss is because of depreciation. This entire 10 lakhs is treated as depreciation loss. This entire loss is treated as depreciation loss. You can carry forward for infinite number of years. No restriction on that. Are you getting it? No restriction. You can carry forward infinite number of years. Depreciation loss, we call it as. This is nothing but loss due to capital expenditure. Similarly, if at all, very simple, compute business loss. First compute income from PGBP as usual. Claim depreciation, claim additional depreciation, optional tax regime. Suppose if it is default tax regime, claim normal depreciation only. Don't claim additional. Okay. Claim scientific research expenditure, capital expenditure, family planning capital expenditure. Every deduction you claim as usual. No compromise at all. You got a loss. How much? 10 lakhs. You got a loss of how much? 10 lakhs. Now add back depreciation. Sir, depreciation is 7 lakhs, sir. Now add back capital expenditure on scientific research, which is some 3 lakhs. Now add back capital expenditure on family planning. Now you see, when you are adding back, it became only 0, which means because of depreciation, you don't have a loss. Okay, I mean, you have a loss. Actually, you have a loss. Yes or no? Now add back, family planning on capital expenditure, 2 lakh. Oh, if at all you didn't claim all these capital expenditure, you have a profit of 2 lakh. After claiming deduction, you have a loss. After claiming all these deductions, you have a loss. Now, what do I call it as, 5 lakhs is depreciation loss. This 5 I will give 2, no. First I will give priority to depreciation. Still 5 lakhs. So, mine 2 minus 7 lakhs depreciation. But 2 lakhs only I will claim. So, my business profit, my revenue profit is equal to, my revenue profit is only 2 lakhs. Actually, before claiming this, whatever profit is there, that is revenue profit after reducing revenue expenses. After reducing revenue expenses. Now I am reducing capital expenditure related deduction. Now I am reducing what? Capital expenditure. One of the capital expenditure deduction is what? Depreciation. Another capital expenditure deduction is what? Scientific research. Another one is what? Family planning. Now 5 lakhs is depreciation loss. 3 lakhs is scientific research capital expenditure loss. 2 lakhs is family planning related capital expenditure. These 3 losses, you can carry forward infinite. You can carry forward infinite. No restriction on that. You able to understand? Very simple. You have a business loss, some amount. This is not fully your business loss. This includes some revenue loss as well as capital expenditure related losses. Find out capital expenditure related losses how much. Are you getting it? Now, for this business loss, no, add back capital expenditure deductions you claimed. What are the capital expenditure related deductions? Depreciation, scientific research, family planning. If there is a profit, means from business revenue activity, you have a profit. You don't have a loss. The loss is completely because of capital expenditure. Suppose after adding back also you still have a loss business, then that is exactly called as business loss. That business loss, what you can do? You can set off with business loss. You can set off with other heads of incomes. Happily you can set up business loss with other heads of income except salary. Whether optional tax regime or default tax regime, same provision except sorry, not this is actually depreciation loss. Okay, normal business loss you can set off against any head of income except salary. Sir, what about depreciation related loss? That also you can set off with any head of income except salary. Sir, depreciation has two parts. Additional depreciation loss is there. I am telling you, this breakup you will not find anywhere. In the ICA book is not there. Anywhere also you will not find. This clarity is very important for you. Yes or no? Because set off and carry forward, if an exclusive question comes, they will twist here only. I have additional depreciation also in. Yeah, that additional depreciation loss you can set off with any head of income except salary. See, first you will always set off with PGBP. If you don't have PGBP profit, brought forward depreciation, if you don't have PGBP, then you will set off with other heads except salary. Under default tax regime, additional depreciation, if at all anything is there brought forward, you cannot set off with other heads, because additional depreciation shall be added to opening WTB. Additional depreciation shall be added back to opening WTB. Yes or no? 115 BAC, it will be added to opening WTB. That's it. Now, you know, after still, you know, set off with other heads and all, still have a additional depreciation loss under optional tax regime, carry forward. Still have a normal depreciation loss under optional tax regime, carry forward. Business loss, carry forward 8 years. How many years you will carry forward? 8 years. Okay, suppose normal business loss I can carry forward for 8 years under optional tax, under default tax. Okay, what about additional depreciation loss? Happily carry forward under optional tax, but default tax you can't carry forward. It will be added to WTV, block of asset will be added. Normal depreciation loss, carry forward, carry forward. That's why you see here in house property, additional depreciation, specified business loss. Only for these three, the provision, the treatment of loss is different in optional tax and default tax. Now, sir, I have a specified business loss, sir. You can carry forward any number of years, but under optional tax regime, you don't get any deduction at all. Yes or no? Therefore, the brought forward specified business loss shall be ignored and cannot be carried forwarded further. Yes or no? Sir, I have a speculation loss, sir. I have a speculation loss. What about speculation loss? Array, you can only set up with speculation income. If you don't have speculation income, only, you know, you can only set up with speculation income. You can only set up with speculation gains. You can't set up with other heads also. So, if at all any loss is there, carry forward for 4 years. Carry forward for 4 years. Correct? Sir, I have a specified business loss. What about this? You can set up only with specified business profit. Sir, this specified business, no, it's a specified business, but it is not eligible to claim deduction, sir. If they are not claiming 3580 deduction, it doesn't matter. You can set up with specified business income, not an issue. So no, loss under specified business after claiming 3580 deduction, if there is a loss, you can set up with another specified business profit, even though the later is not eligible for deduction. In optional tax regime, sorry, in default tax regime, specified business itself, they don't get a deduction. Yes or no? By the way, in default tax regime, specified businesses will not get deduction under 3580 for capital expenditure. Revenue expenditure and all they can still claim. Yes or no? Sir, long-term capital loss I have. You can set up only with long-term capital gain in both the regimes. Short-term capital loss I have. I can set up with long-term capital gain or short-term capital gain. Sir, I still have a short-term capital loss. Can I set up with other heads? No. Capital gain set off income itself is untouchable. And you can set off same. Owning and maintaining risk, same source I can set off. You can't set up with other source also. Loss from exempted, ignore. Now, still I have a capital loss, sir. What shall I do? Carry forward 8 years. Loss from owning and maintaining, carry forward for 4 years. Note number 5, nothing but computation of loss. That's it. Clear? So, loss from specified business can be set up only with specified business income, even though the later is not eligible for deduction. Doesn't matter. Easy or not. All of you. Now, under PGBP, what should be the order of set off? First to know, calculate current year income minus current year depreciation minus current year capital expenditure on scientific, current year capital expenditure on. First calculate net income under PGBP current year after reducing all expenses, revenue expenses, capital expenses, everything. Still you have a profit. Then brought forward business loss is there, brought forward depreciation loss is there, brought forward family planning, scientific research, capital expenditure are there. Now which one first I should set off? First set off brought forward business loss, because it can only be set off for 8 years. Then you set off unabsorbed depreciation, then you set off capital expenditure on scientific, then you set off capital expenditure on family planning. If you still have a profit, you can use that profit for set off from other hits. That's it. Clear? Now here, if you remember, there is a section called 41 subsection 5. That section says you have 41 redeemed profits, 41 subsection 1 remission of trading liability, 41 subsection 2 sale of asset used for scientific, 41 subsection 2 balancing charge, power sector balancing charge, 41 subsection 3 sale of asset used for scientific research, 41 subsection 4 recovery of bad debts. In all these incomes, if you have a brought forward business loss, but 8 years over. It's expired, actually expired that loss, but that loss can be set off against 41 incomes. If at all you have any brought forward business loss which is already expired, normal business loss expired already, you can set off with 41 deemed profits incomes. That's it. Set off and carry forward is over. Finally, section 80. What this section says, remember, once in a particular head of income, after you set off the loss, after you set off the loss with other heads of income, if you still have a profit, if you still have a loss, you can carry forward, right? But here, one condition. If you want to carry forward business loss under 72, speculation loss, specified business loss, capital losses, loss from owning and maintaining race horses, getting it? You can carry forward only if the return of income is filed within due date. And if you are filing return of income with a loss, it is called as a loss return. That's why here the word is used is return of loss. You may call it as return of income, or you may call it as return of loss. At the end of the day, that loss is there. If you file that within due date, what is the due date? 31st July for non-audit cases, 31st October for audit cases. If audit is applicable for SSC under income tax or some other law, doesn't matter. Audit is there 31st October. No audit 31st July. Within that date, if you file IT return, then only you can carry forward 72, 73, 73A, 74, 74A losses. Unabsorbed depreciation not covered in the list. House property loss is also not covered in the list. That's it. Clear? Mainly this aggregation 68, 69, these are all unexplained incomes discovered now. Unexplained cash credit, unexplained investment, unexplained expenditure, amount repaid or borrowed on hundi. Getting it? All these are treated as income of the SSE in the respective year, and they are taxable at flat 60%, 60 plus 25% surcharge. Effectively 78% tax will come, including education cess, all that. Black money taxation provision. Yeah. That's it. Set off and carry forward of losses is over. Remember, set off and carry forward of losses I discussed extensively, discussing all peculiar issues. House property loss, if it comes, how to do. Self-occupied case, how to do in optional default, everything. Yes or no? Entire set off and carry forward just in 4 pages. That too with a lot of clarity. Clear? Set off and carry forward is over. Confident, everybody? That's it. Yes, let's discuss Chapter 6A deductions and deductions under 10AA. Deductions under 10AA. First I will cover 10AA deduction. Remember, under chapter 6A you have a section, you have a heading called heading C. Related to that we have 3 sections: 80 QQB, 80 RRB, 80 JJAA. These 3 deductions and 10AA deduction you can claim only if the return of income is filed within due date. You can claim these 4 sections related deductions only when CA certificate is obtained. Audit is compulsory. That is first condition. Are you clear? Now, 10AA. What is this section 10AA? At the end of chapter 6A deductions you will find. Remember, 10AA deduction and chapter 6A deductions both shall be reduced only from gross total income. When you are computing 10AA deduction, what is 10AA deduction? 10AA is for special economic zones, deduction for special economic zone towards export profit. What is export profit? Very simple. you know, SEZ will be there. In the exam, they will give you SEZ related problem. Sometimes, you know, in exam, they will give you total company turnover and their turnover in domestic tariff area they will give. Total turnover of the company they will give, domestic tariff area turnover they will give. SEZ turnover you should find out. How much is the total turnover of the SEZ you should find out carefully. Now in the turnover, SEZ has exported also. SEZ has exported. Find out export turnover in the problem given of the only SEZ. Remember, by mistake you may take total turnover of the company or DTA. Sometimes they'll give total turnover, DTA, domestic tariff area. Balancing figure will be SEZ. That they will not give you directly sometimes. So SEZ total turnover, export turnover how much? You know, what is the profit of SEZ for that year? Find out. That result is what? We call it as export profit. We call it as what? Export profit of the SEZ. Okay, SEZ has an export profit. What is the consequence of that? That is that whatever export profit is there, first taxable under PGBP. As usual, PGBP is taxable, gross total income. Under chapter 6A plus 10AA, you can claim 10AA deduction from gross total income. How much you can claim? For first 5 years of the business, 100% of the export profit, whatever is there, claim deduction under 10AA from gross total income. Next 5 years, claim 50%. That next 5 years, claim 50% profit, subject to investment in special economic zone reinvestment reserve. The amount deductible, you see here I have given star mark here. The amount deductible must be credited to special economic zone reinvestment reserve for utilization in the utilization. How many years you should transfer like this? Next 5 years. Actually, utilization must be for in the next 3 years. Utilization must be within 3 years. For what? You must purchase new plant and machinery. You must purchase plant and machinery within 3 years from the special economic zone reinvestment reserve. Very simple. You started SEZ operation. You started SEZ operation. By the way, when you started by 31st March 2020, the unit must be operated between assessment year 2006-7 and 2021. Assessment year means what? Due date is 31st March 2020. Sometimes no, you might have got approval by March 2020 only, but you started operations before March 21, enough. You are also eligible. If you start operations by 31st March 2020 or approval you got before 2020 but started operations by March 2021, then you are eligible for 10AA benefit. If you are eligible for 10AA benefit, what you can do? From first year to 5th year of 5 financial years, 5 previous years, you can claim 100% of the export profit as deduction. How to calculate export profit? Just now I told. Year 6 onwards to year 10, 50% of the export profit flat deduction from gross total income. Then 11th to 15th year, 50% of export profit flat deduction, subject to how much amount you transfer to special economic zone. So amount invested there or 50% of profit, whichever is lower only, you can claim deduction. The amount invested in special economic zone, you must spend it for, the amount invested in special economic zone reinvestment reserve, you must use it for investing in plant and machinery within 3 years from the date of transfer. If you fail to invest, whatever amount left in that account is fully retaxable again. Yes or no? To the extent deduction claimed. Next. And remember, deduction shall not exceed. By the way, you must transfer, right? You must transfer to special economic zone. That's it. Correct? That's it. Now, one more condition. You know, export turnover numerator, you are applying numerator formula, right? You apply numerator, right? Denominator, my total turnover 10 crore. You know, export turnover is 5 crore actually. Turnover to export is 5. But you know, I received in India. I collected foreign currency only 3 crore. I collected foreign currency only how much, you know? 3 crore. By due date for filing IT return. By due date for filing IT return. You see, receipt of export turnover within 6 months actually. They say not due date, actually within 6 months. Generally that is 6 months is nothing but due date for filing IT return. That's how it will come. Yes or no? But anyhow, 6 months only interpret. The proceeds from export must be received in foreign exchange within 6 months. Sometimes RBI might give a further extension. If extension is given, then extended period. Whatever export, suppose no 24-25 year, my SEZ sold 10 crore worth of goods. In that 5 crore is exports only. But you know, I collected within 30th September of the assessment year. Within 30th September of the assessment year, 3 crore only I collected. How much I collected? 3 crore. Then numerator 3 crore only we should apply. For remaining 2 crore worth of exports, you don't get any benefit because you didn't collect in foreign currency. You couldn't collect in convertible foreign currency. Able to understand? Okay, that's it. That's it. Then we have export turnover should not include freight charges, telecommunication, insurance expenses related to delivery of goods outside India, foreign exchange expenses for services rendered in case of computer software. So these charges will not be. The above expenses shall be excluded from both the turnover as well as total turnover when calculating, as they relate to delivery outside India. Freight charges in India, no, up to shipping port, they may be considered. Whatever the amount you are recovering from the seller for freight charges, no, the freight charges is 2 types: up to delivering to the ship location, from ship to foreigner, that particular location. That ship abroad freight charges only not included in turnover. Remember, first of all, that is not a turnover. But why are we considering it as turnover? Because we are reimbursing from seller, sorry, buyer. We are getting it from importer. That's it. Major provision is over. Easy or not? All of you? And by the way, 10A deduction you will get only when you are filing income tax under optional tax regime. If at all you are filing under 115 BAC, you will not get a 10AA benefit, and deduction is only towards export profit, that too generated from SEZ, which started operation on or before 31st March 2020. That's it. 10AA over. Easy or not? All of you? Next. Now I will go back to ATC. Now I will go back to ATC. What are all chapter 6A deductions we have? ATC it will start with, and it will go up to ATU. All chapter 6A deductions, you can claim deduction under optional tax regime. But under default tax regime, no deduction. ATC to ATU not allowed under default tax regime. However, ATCCD subsection 2, contribution, employer contribution to national pension scheme, central government pension scheme, getting it? Atal pension yojana allowed. ATCCH2, central government contribution to Agnipath scheme. ATJJA, 30% of additional employee cost incurred by SSE who is liable for tax audit. These 3 sections alone you can claim under chapter 6A as well. Remaining all other deductions you can't claim. Remember, there are 3 more sections set. One more rule is there. ATQQB, RRB, JJA. These 3 sections are together referred when you need to file return of income within due date. For that purpose, these 3 sections are referred. These 3 sections are referred when under default tax regime you can claim only these 3. Remaining you can't claim. That's it. Remaining all other points, nothing is there. Remember, under ATIC there is a section of return of income must be on or before due date for all these sections. In that orange letter, whatever highlighted, no, that is only there forever in our syllabus. Remaining all chapter 6A deductions you can claim whether you file return within due date or after due date, but to provide it, remember, only under optional tax regime. Under default tax regime you can't claim deduction under chapter 6A. You can claim only ATCCD subsection 2, ATCCH subsection 2, ATRRB. Sorry, ATJJAA. That's it. Yes or no? So, ATJJAA, CCD2, CCH2. Only these 3 sections you can claim deduction under default tax regime. Clear all of you? Now, ATC. Here, you will get deduction for investments. You will get deduction for investments. Not maximum deduction under this section is 1,50,000. And remember, all sections, no deduction under default tax regime. Remember this point always. Now, what deductions? You just have to read only highlighted points. I've highlighted with a light gray background. You see light gray background. Only those gray background one only. You just have to read it. Able to understand? Now, maximum deduction is what? Suppose, sir, I paid LIC premium, sir. Life insurance policy I took. For whom? No, myself, spouse, children, sir. Children dependent, major, minor, nothing. Getting it? Only 3. Myself, my spouse, children. To them I paid life insurance policy related premium. Can I claim deduction? Yes. How much I can claim? Depending upon the policy issue date. Depending upon the policy issued at 20%, 10%. In case of disabled person, 15%. If the policy issued is on or after 2023, for others 10%. The amount is maximum. This is the maximum percentage of sum issued. Actual amount paid, how much you see, maximum percentage applicable you see, whichever is lower, that much amount you can claim deduction under 80C. Now here one condition is there. The policy must be retained for 2 years. If the policy is terminated within 2 years, surrendered within 2 years, whatever deduction you claimed earlier will be re-taxable as income. Understood? Next, you can claim deduction for statutory provident fund. You can claim deduction for recognized provident fund. You can claim deduction even for PPF, public provident fund. Whatever deduction, whatever, whether you paid on your name, spouse name, children name, in case of HF, members name, maximum 1,50,000 is allowed as deduction. I made a contribution under Sukanya Samriddhi scheme in the name of my girl child. Getting it? Whatever amount I have contributed, fully I can claim it as deduction. And same way from Sukanya Samriddhi scheme, and in future I can withdraw money. Whatever I withdraw, fully exempted. Clear or not? I invested in National Savings Certificate, fully deduction. You can claim deduction under 80C. I paid tuition fee in India for full-time education to Indian. In India, I pay tuition fee for my children. Getting it? Only children. If I pay tuition fee for myself and my spouse, no deduction. For children tuition fee, if I pay 80C deduction. Yes or no? Then, suppose relating to house property, principal repayment. What is it? Principal repayment of loan on house property you will get. Remember, interest repayment you will get deduction under 24. That too only if it is optional tax regime in case of self-occupied, unoccupied property. In case of let out property, default tax, optional tax, in both the cases you will get. Yes or no? Principal repayment 80C you will get only under optional tax regime. Default tax regime you can't claim. Yes or no? Yes. Principal repayment, provided you are repaying to these people. You cannot borrow loan from unorganized sector, friends, relatives. That loan is not covered here. Stamp duty cost you can claim, whatever you pay at the time of purchase. Registration fee, other transfer expenses you incur at the time of purchase like brokerage commission, you can claim. What you cannot claim? Membership fee you can't claim. Expenses incurred for repairs and renovation you can't claim. Interest expenditure you can't claim. Now for house property you are claiming deduction for principal, stamp duty cost, all that, right? Condition: 5 years you should not sell that house. If at all you sold the house subsequently within 5 years from the end of the year in which you claimed 80C deduction, whatever deduction you claimed in the past 5 years will be re-taxable in the 6th year. Sorry, re-taxable in the year in which you sold. Sorry, 6th year if you sell, no problem. Within 5 years if you sell, whatever deductions you claimed in 2 years, 3 years, 4 years, 5 years will be re-taxable. Clear? Next, investment in 5-year term deposit with a bank. Investment in 5-year post office in a scheme with the central government. 5-year term deposit you invested, bank or post office, doesn't matter, fully you can claim deduction. You are paying contribution to national pension system. You are paying contribution to national pension. Immediately when the student see contribution to NPS, no, he will think of 80CCD. Remember, first see which tire number they said. Tire number 2 they said, then 80C. Tire number 1 they spoke, then 80CCD section will apply. 80C will not apply. 80C, contribution to national pension scheme, second time. This deduction can be claimed only if it is a government employee, and deduction is applicable only if the contribution is to 80CCD Tier 2 account, NPS Tier 2 account. Tier 1 account contribution is covered under 80CCD. That's it. Are you clear, all of you? 80C is over. Then we have another section called 80CCC. What is 80CCC says? Contribution to pension fund of LIC. Whatever contribution you are making to pension fund of LIC up to 1,50,000 you can claim it as deduction. Now there is another section called 80CCD. What that section says, you know, contribution to national pension scheme or contribution to Atal Pension Yojana. Contribution to national pension scheme, contribution to Atal Pension Yojana. Getting it? This contribution, this contribution, this section we will cover and then we'll wind up now. Then again we'll continue in the next session. Getting it? 80CCD, contribution to national pension scheme. You see, in this 80CCD, deduction is given in 2 parts. deduction for employer contribution, which is under ATCCD, where you will get under optional tax regime as well as default tax regime both. Then you will get deduction for SSC contribution, my personal contribution. I will claim deduction only under optional tax regime. Now what is the maximum deduction? Here there is an amendment. This default tax regime is there, right? This is amendment for the first time applicable for May 25 exams. For the first time applicable for May 25 exams. Deduction up to how much? 14% of salary. Deduction up to how much? 14%. By the way, employer contribution, sir. Your employer, in your name, he paid to pension yojana, national pension. Yes, sir, he paid, sir. How much he paid? First tax under income from salary. Then whatever amount he paid, right? Under ATCCD subsection 2, claim deduction. How much you will claim? How much ever amount he paid? No, how much ever amount he paid, full tax it. Up to 14% of salary, you can claim deduction in case your employer is a government. Sir, my employer is private, sir. Then 10% of salary, I can claim deduction for his contribution. For his contribution, which is treated as income in my salaries, whatever amount he contributed, now I can claim deduction up to 10% of salary under ATCCD subsection 2. Sir, I'm going for default tax regime. Then 14% of salary deduction. This is an amendment. Then 14% of salary. Understood or not? Everybody. Sir, okay. Not only my company, sir. I also paid out of my pocket. What about that? You paid. You are an employee in the company, right? You paid, right? Whatever amount you paid, in the problem they will give you percentage and all. Never believe that percentage. How much they paid? 20%, 10%, 15%, something they'll give. First convert that into money. Suppose the amount paid came 1,80,000. First identify the money in the problem. First identify number. How much amount convert? They may say 10% of salary, 15% of basic salary, 25% of basic plus DS. Something they will tell. Calculate, identify what they told. Apply the percentage of what they contributed. Get amount first. Get amount first. 1B, allocate 50,000. Under subsection 1B, allocate 50,000. Do in the same way problem. Allocate under 1B how much? 50. Sir, 50,000 allocated, sir. Balancing figure how much is there? 1,30,000 is there. Allocate it here. This 1,30,000 is restricted to 10% of salary. If it is an employee contribution, as an employee I contributed to national pension scheme. How much amount contributed? First figure out, calculate the amount first. You see, identify the total amount first. Then allocate under 1B 50. Balancing figure allocate for subsection 1. Why you know? Subsection 1 is covered under ATCCE overall limit. There is a section called ATCCE. What this section says, you know, ATCCE, deduction under ATC, ATCCC, ATCCD subsection 1 only. Yes or no? You know, all these three put together, maximum deduction is again restricted to 1,50,000. Now, in this ATCCE purview, ATCCD subsection 2 not covered, 1B is not covered. That's why if at all you are contributing any amount, first allocate to 50 because it is not covered in overall limit. Suppose if I allocate entire 1.8 here, no, already ATC 1.5 lakh utilized already. You know, if I allocate 1,80,000 here itself under 1B, if I do not allocate, I will lose 50,000 benefit. Yes or no? Sir, I'm a self-employed. My company and all contribution, nothing is there. My own contribution only is there. That time higher deduction up to 20% of gross total income. So first allocate 1B 50. You still have extra amount you contributed. That amount you can claim deduction under subsection 1. But maximum deduction cannot exceed 20% of gross total income. Very simple. Employer contribution. First add it in income from salary. How much ever amount, how much ever. That's it. ATCCD subsection 2. Government employer. 14% of salary deduction. Private sector employer. Optional tax regime. 10% of salary. Default tax regime. 14% of salary. Yes or no? ATC employee contribution. First allocate under 1B 50,000. Balancing figure allocate under 1 but restricted to 10% of salary. I am a self-employed person. 1B allocate 50,000. Balance amount restricted to 20% of gross total income. Sir, what is salary? Basic plus DA terms of employment. Remember, commission and all is not there. Commission and all is not there as a percentage. Only basic plus DA. Are you clear? Now, You are contributing to national pension system, right? Sometimes you can withdraw later. Sometimes you can withdraw. Suppose no, you are withdrawing by closing the scheme. You are withdrawing by closing or opting out. You are just closing. You are permanently closing that scheme and you are withdrawing. 60% of the amount is exempted flat. Only 40% is taxable. Sir, I'm not closing, sir. I'm only withdrawing part of the amount. Oh, part of the amount to withdraw. Na? Amount withdrawn how much? Minus exemption how much? Till date you contributed how much identify? Employee contribution, SSC contribution how much you identify? Only your contribution till date in the past 5 years through 2 years whatever multiplied by 25%. That much is exempted in case of partial withdrawal. Are you clear? So that is withdrawal. You know, suppose no, if at all amount is withdrawn because of the death of the original account holder, then nothing is taxable. Or suppose I withdrawn amount, sir, I invested for purchasing another annuity, sir, then also nothing is taxable. Clear? That's it. 80CCD over 80CCE. 80CCE section says the maximum deduction under 80C, triple C, CCD subsection 1 shall not exceed 1,50,000. Yes or no? Then under 1B and subsection 2, you can claim additional deduction that is not subject to 80CCE overall limit. That's it. Clear all of you? That's it. We'll continue the next session remaining topics. Okay. So we completed in the previous session up to 80CCD, right? Now 80CCH. 80CCH is regarding what? Contribution to Agniveer Corpus Fund under Agnipath scheme. Who will contribute? Central government will contribute, and the person who enrolled in that scheme, Agniveer, he will contribute. The relationship is employer and employee. Central government contribution is treated as salary in the hands of the Agniveer first, in the income from salary. Whatever amount central government contributed, first we will tax it, correct? In the hands of the employee under income from salary. And whatever contribution is there, that can be claimed as deduction under 80CCH, correct? First the contribution of central government will be included in salary. Then deduction will be allowed for the same under 80CCH subsection 2. Remember, this subsection 2 is eligible for both the regimes, whether you are going for optional tax regime or default tax regime. Then coming to 80CCH 1, Agniveer personal contribution, that will be directly allowed as deduction under 80CCH subsection 1, but you will not get this deduction under default tax regime. Personal contribution, no deduction under default tax regime. Once again I am repeating, 80C to 80U, no deductions under default tax regime. Only these three, 80CCD subsection 2, CCH subsection 2, AJAA, only these three sections you will get deductions under chapter 6A or even 10AA for that matter. Getting it? In this entire chapter, what are all the sections we are discussing? Only these three you will get deduction under default tax regime. That's it. Correct? Similarly, from Agnipath, this Agniveer Corpus Fund, no, tomorrow, once he withdraw, he can withdraw the money, right? Any payment from the Corpus Fund to the Agniveer, to the person enrolled under the scheme, whatever the amount he is withdrawing, fully exempted. That's it. Then coming to 80D, deduction in respect of medical premium. Deduction in respect of medical premium. You see, this deduction will be given in two categories. The deduction will be given in two categories. 80D, the deduction is in two categories. By the way, 80D is for what purpose? Mediclaim or medical premium or contribution to central government health scheme. Either buying a medical insurance policy from a approved insurer or central government health scheme. Under 80D, you will get deduction for what category? You will get a deduction for medical premium paid. For whom? There are two categories. SSC, the contribution, the medical payment, medical premium amount paid, you will get deduction under two categories. First category, SSC himself, spouse and dependent children. Dependent children, they can be major or minor, doesn't matter. Children definition means major or minor, anybody. Yes or no? Only if they say minor, then minor children we will use the word. 64(1)A, clubbing provisions, they specifically use the word minor children. Getting it? Then second category 2 is for what? I can also pay medical premium for my parents. How much is the maximum reduction? Simple, 25,000 for category 1, 25,000 for category 2 also. Many students misinterpret for parents 25,000. No, it's not for parents 25,000. If the category persons, no, any of them is a senior citizen, then 50,000 limit is applicable. Many think that category 2 parents, it is 50,000. No, it's never wrong. Suppose if any of this person, SSE or spouse, between them, any one person, if at all, is a senior citizen, then 50,000 limit applicable for category 1. Obviously, if the SSE is a senior citizen, parents are obviously senior citizen, 50,000. Now, in this section, there is a thumb rule. What is the thumb rule? Maximum deduction. How much will be the maximum deduction in this section? Maximum answer. I gave you a thumb rule. Maximum deduction. In exam, this is like a checkpoint. Maximum, how much you will get? You see the problem. SSC age, spouse age, how much you see? Both are not senior citizens. Then 25 limit applicable. Parents, mother and father, both the age. Parents means more specifically for whom we have taken insurance policy. Their age you should see. Sometimes you might be taking insurance policy only on the father, but not on the mother. Or you may be not taking on father, but on the mother. Mother age is 59, father age is 62. But you took policy on whom? Mother only. Now, mother is not a senior citizen. Yes or no? The automatically, what is the limit applicable? 25,000. Are you getting it? If medical policy is taken on the any person whose age is 60 or above, between parents, suppose you took both of them, any one of them having senior citizen, then automatically 50 limit applicable. Are you getting it? Okay. By the way, one more category, one more point. If any of them are senior citizen, that's enough actually. Right now I told one logic, right? If mother only is senior citizen, yeah, we need not apply. If any of them are senior citizen, because they can claim medical expenditure also. They can claim medical expenditure deduction. Suppose if any of the parent, one of the parent does not have a policy, 50 limit is applicable automatically. Yeah. So thumb rule as usual, what we discussed in a regular class, the same rule will apply. SSC spouse, are they both normal citizens? Yes. Then 25 limit. Parents, any of them senior citizen, any one of them? Yes. Then automatically 50 limit will apply. Suppose SSC normal citizen, spouse SSC, parents, any one of them are senior, then 50. So maximum deduction will be 75. SSC is also senior, parents are also senior, then automatically maximum deduction under this section will be 1 lakh. This is the maximum deduction under this section, 80D limit. This is the maximum deduction under 80D. Now, suppose if, the policy, insurance policy is taken by HUF. For HUF, maximum deduction is 25. If any member of the HUF is senior citizen, one person also, then automatically the limit is extended to 50. Now, further, remember, this is the provision, correct? Huh? This is the provision. Now, for what you will get deduction here? You will get deduction, whether 25, 25, 50, all that is for medical insurance premium. It must be paid in other than cash. 1. You can also claim deduction for preventive health checkup expenses. Preventive health checkup expenses, which can be incurred in cash or other than cash. Any way you can incur. Preventive health checkup alone, you can incur in any way. How much you can spend? Under category 2, maximum deduction 5,000. Under category 1, maximum deduction 5,000. Again, towards preventive health checkup, whether you claim under category 1 or category 2, put together, maximum deduction will be 5,000. Again, I told, right? Section limit 25, 25. 25, 50, 50, 50. This 5,000 is within that only. Here first medical expenditure for each category, myself, my family, how much I spent. Maximum 5,000 I can claim deduction. For my parents, maximum I can claim 5,000 deduction. Again, both of us put together towards preventive health checkup, maximum we can claim 5,000. Is this a separate limit, extra limit beyond the 25, 25, 25, 50, 50, 50? No, it is within the same limit. Category limit is same. Within this category limit only, you can claim this 5,000 deduction. Are you getting it? We have even solved problems in our class. Test your knowledge questions everywhere. Yes or no? In ICA book itself, we have illustrations, TYG. That is best, more than enough. Next. Then third expenditure. You will get deduction for medical expenditure, not medical premium. Remember, medical expenditure on senior citizen. Either it might be SSE or it might be parents. Anybody it can be. But this is a medical expenditure you are incurring. Why you will incur medical expenditure? You will have insurance policy. No. Here, the person for whom medical expenditure is spent, no, he doesn't have a insurance policy. Medical insurance policy is not there. That's why we are spending out of pocket medical expenditure. Can that also be claimed as a deduction? Yes. Maximum how much you can claim? 50,000. This must be spent in other than cash. Remember, you need a proof. If you spend in cash, there is no proof. So other than cash only, you must spend medical expenditure. That can also be claimed as deduction up to how much? 50,000. Remember, this expenditure is eligible only if it is spent for a senior citizen who do not have a medical insurance policy. Further, this expenditure limit is within category 1 and category 2, within the category limit only. What is the category limit? Normal citizen 25, category 1. Seniors, parents, normal citizen 25,000. SSC, normal citizen, parent senior 50. SSC senior, parent senior 50, 50. That's it, over. 8AD section is over technically. Sometimes you might be. So that is what here we have given. Medical insurance premium paid other than cash. Medical insurance other than cash. Here you see category 1, self spouse. Here parents. Parents may be dependent or independent, doesn't matter. But children must be dependent. So what is it? Normal citizen, senior citizen. Preventive health checkup also can be claimed as a deduction up to 5,000 for both the categories put together. Yes or no? But again, this will be within overall limit. Shall be within the overall limit. Medical expenditure on a senior citizen who do not have a medical policy other than cash shall be within the overall limit. Maximum how much? 50,000. That's it, over. Easy or not? HUFs also. Medical premium 25. If any member is a senior citizen, 50. Medical expenditure for senior citizen, 50,000. Preventive health checkup expenses for HUF, the section is silent on it. That's it. Clear? Next. So sometimes we might be paying medical insurance premium one time for 5 years validity or maybe 4 years validity. In such a case, you can't claim deduction for the entire premium in single year. You have to claim proportionately. You have to claim proportionately. Very simple. For example, I paid in 24-25 medical premium. In which month you pay doesn't matter. 24-25, the payment date comes under 24-25. How much I paid? 1 lakh premium I paid. And this policy is valid up to for 5 years. This policy is valid for 5 years. Very simple. 24-25 divided by, just identify 5 years, right? For example, I took a policy on, 1st March 2025 I took this policy. 5 years means 28th February 2030. Correct? 6, 7, 8, 9, 10. Yeah, correct. 2030. Now, how many years are involved here? Identify. 24-25 is involved. 29-30 is also involved. 24-25, 24-25, 26, 27, 28, 29. 6 years are involved. Be careful. See, my policy validity is what? 5 years only. But how many previous years are involved? 6 years. Remember. Able to understand? Now, what is the deduction? 1 divided by number of previous years. The year in which lump sum payment is paid plus the subsequent years during which policy remains in force. Years means what for us in income tax? Financial year, April to March. So actually you took policy on 1st March 2025 and the policy is applicable up to 28th February 2030. 5 years only validity. But how many financial years are involved in this? I see 6 financial years involved. So 1 divided by 6 you will claim it. Are you getting the point? Policy is 5 years only, but I will claim deduction for 6 years. But by the way, total deduction is always same. Suppose I spent 1,20,000 policy premium. By 6 is equal to every month 20. How much I am claiming in 6 years? Put together 120 only. So denominator 6 or 5 is not a big deal, because at the end of the day, maximum deduction cannot exceed amount paid. Denominator, many students confuse. Getting it? Many students confuse in the denominator. The denominator is not 1 divided by 5 years policy, then 5 they will put. That's wrong. You should put how many years involved. So that's why you should see date on which it started, date on which it expired. Starting date, it comes under which year? End date comes under which year? In between, how many years are involved? Financial years. That's how you should calculate. Able to understand. All of you. That's it. So with that, 80D is completed. Confident everybody? Then coming to 80, 80U, 80DD, 80DDB. These are the deductions with respect to disability and diseases. There is a section called 80DDB. Here, that section is eligible only for residents. The SSC must be resident individual or resident HUF. That's a deduction can be claimed for, expenditure on treatment of specified disease or ailment. Expenditure on treatment of specified disease or ailment. You must spend money. How much you spent, that much only you can claim deduction. Now, on whom you should spend? On the SSC himself or their dependent. Dependent means what? In the next page I have given, you see it. Dependent means what? Meaning of dependent, the same definition is applicable for 80DD, 80DD also. Dependent. Dependent means what? Spouse, children, parents, brother, sister, who is dependent on the SSC. All of them should be dependent on me. All of them should be dependent. Only then I can claim deduction for their disease treatment. If they are not dependent on me, I cannot claim deduction. Now deduction here is for what? Medical expenditure on dependent's treatment, who is suffering from some specified disease or ailment. 80DDB section gives deduction. How much you will get? Normal citizen, suppose the person for whom you are incurring this disease expenditure is a normal, then maximum 40. You see, I have clearly used the word max word, whereas in 80D I used the word flat. Getting it? 80DD expenditure is irrelevant, you will get a flat deduction, whereas here you will have to lower of actual or 40. Senior citizen, then lower of actual or actual. Here it is 1 lakh, printing mistake. Okay, here it is 1 lakh. So maximum how much it is? 1 lakh. That's it. Now suppose this is regarding what? Treatment expenditure incurred for specified disease or ailment of individual plus dependent. Everybody put together 80 DDB only. However, suppose if the individual is suffering from disability, SSC himself is suffering from disability, he can claim 80U deduction. Individual himself is suffering from disability. Now for disability, doctor has to give a certificate. In that certificate, disability percentage will be given. If the disability is 80% or more, you will get a flat 1,25,000 deduction. Flat 1,25,000 deduction. No questions asked. Flat 1,25,000 deduction. How much you are spending? Have you taken insurance policy? How are you? That and all irrelevant. Flat 1,25,000. Suppose disability percentage is less than 80, then it's called as a normal disability. Then how much reduction? 75. Sir, I am not suffering. My dependent is suffering. Then can I claim deduction? I am only maintaining him. I am only incurring all the expenses and all. My dependent is dependent on me. Yes or no? Then what about this? Then 80DD you can claim deduction. Normal disability of the dependent 75. Severe disability flat 125. This is per dependent. All dependents put together. This is section limit. This is a section limit. You can suppose there are 4 dependents on me. All 4 of them are suffering from disability. I cannot claim 4 multiplied by 75, 4 multiplied by 1. No, you can't claim. This is a section limit. Are you clear? Sometimes we will take insurance policy. Individual will take a insurance policy for dependent's safety. If something happened to me, he must survive. For that reason, I will take insurance policy. But unfortunately, he died earlier. Dependent died earlier. I received the maturity amount. That is fully taxable under income from other sources. If the individual received maturity amount from the insurance policy taken for the purpose of benefit of dependent, where the dependent is predeceased the individual, he died before, he predeceased the individual, then the amount received by the individual is fully taxable under income from other sources. Are you clear? So deemed income, if the dependent with disability predeceases the SSE who took the policy and the amount received is tried to be treated as income, yes or no? However, if the dependent with disability, he is receiving annuity or lump sum before their death, getting it, and discontinued, that deemed income, if the dependent himself is receiving the maturity amount, that is, this income taxation will not apply, deemed taxation will not apply. And further, you have 80DD, 80U, right? Suppose I am claiming, suppose my brother is having disability, he is dependent on me. Since he is a dependent on me, I am claiming in my income tax return 80DD deduction showing my brother name. Getting it? Because he is suffering from disability, I claim a deduction. Now my brother is also filing IT return. He is again claiming 80U because he is having disability, right? No. If at all I am claiming 80DD in his name, he cannot claim again 80U. In other words, if at all he is claiming 80U on his name, I cannot claim 80DD on his name. For the same person, 2 different persons cannot claim deduction. That's it. 80DD, 80DDB, 80U, all the 3 sections over. Easy or not? Yes or no? Next, 80DDB, one condition is there. In 80DDB, you see conditions under 80DD, conditions under 80DDB. 80DDB is for what? Treatment for medical expenditure. There one condition is there. Suppose I spend medical treatment expenditure 1 lakh, but actually 80,000, no, insurance company reimbursed me. How much I actually spent? 20 only you will get deduction, because no, lower of actual amount to spend, no, lower of actual amount to spend or maximum amount, correct? Actual amount to spend means what? Out of your pocket, how much you incurred, that's it. You may pay 1 lakh, but medical insurance company reimbursed 80,000 to you. So how much you spent actually? 20. That's it. That's what the point says. Over. Clear? Then 80D series over, 80C series is over. Now 80E series. 80E series is completely for interest. Deduction for interest. 80E, interest on education loan. 80EE, interest on house property loan. 80EEA, again house property loan. 80EEB, vehicle loan, electric vehicle related interest. Yes or no? Now, education loan, higher education. It must be for higher education. Where? It may be in India or outside India. What you can claim? Interest expenditure on education loan you can claim. How many years you can claim? 8 years you can claim. Loan should be taken from whom? Either a financial institution or approved charitable trust you can take. Higher education means what? After 12th standard, whatever you study, 13th standard onwards, that is straight away treated as what? Higher education. For whom I can claim deduction? Individual is pursuing higher education, he can claim. Relative is pursuing higher education. Relative means what? Spouse, children, or the student for whom I am taking a responsibility, guardian. Yes or no? For them or for myself, if I took education loan, interest amount paid, I can claim it as deduction. How much you can claim? No limit on that. Over. 80E. Simple or not? Then we have deduction for interest for new home buyers. I used the word very clearly. New home buyers. Under 80EE, 80EEA, two sections are there. Getting it? 80EE is dealing with the old financial year, 16-17. Suppose no, you got a loan which is sanctioned during 16-17. Loan was sanctioned in 16-17 financial year, 1st April 2016 to 31st March 2017. In that year, the loan was sanctioned. And you know, value of the house shall not exceed 50 and loan sanctioned amount shall not exceed 35. And at the time when the house is purchased, no, you don't have any other. On the date on which you are getting the loan sanctioned, right? You don't have another house. You don't have any house, which means this loan is sanctioned for the house which you are going to buy for the first time. That's why I named it as what? New home buyers. For them only they will get deduction. What they will get deduction? They will get up to maximum deduction. How much? 50,000 per financial year until loan is repaid. For what? 50,000, okay, deduction. For what? Interest amount. You will get deduction towards interest on loan taken. You will get a deduction for interest on loan taken. Very simple. Okay, 16-17 year. Interest on housing loan taken. See, interest on loan taken, no. Here one point is no deduction is allowed for the same under 24B. Then only you will get deduction. If you claim interest deduction under 24 house property, you can't claim here. So simple. Suppose I am SOP, UOP. NAV is equal to 0. Yes or no? Maximum deduction under house property, how much I can claim under optional tax regime? 2 lakhs. Yes or no? Suppose I spend 2.5 lakh loan. 2.5 lakh interest is there have. Up to 2 lakhs I will claim there only. Because I can set off with other heads of income also. Yes or no? Remaining extra interest, if at all per annum I incurred, that extra interest I can claim under 80E. 80EE. Conditions. 16-17 loan must be sanctioned. Loan amount should not be more than 35. Value of the property should not be 50 lakhs. Remember, value of the property means not STV. Simple value. Whereas in 80EEA, stamp duty value they specifically gave. Able to understand, all of you. Sir, suppose no, SSC is choosing a let out property, sir. SSC is going for a let out property. Now, entire interest amount you can claim under house property itself happily. But remember, if it is a let out property, entire interest, even though you are claiming, if at all there is a loss, you can only set off with other heads only up to 2 lakh. Suppose if at all you are having higher loss because of interest amount, then claim interest amount up to the loss that can be set off. Extra interest claim here, 80 better. Yes or no? That's it. Sir, SS is following a default tax regime, sir. For SOP, UOP where NAV is equal to 0, you can't claim deduction at all there. 80E also you don't get any deduction because default tax regime. Suppose, sir, SS is an optional tax regime. Let out default tax regime, default tax regime, let out property. Entire interest amount claim under house property head only. Because no, you can carry forward the loss at least. Yes or no? Because 80E is not there for default tax regime. That's it. Similar logics will apply for 80EEA. In 80EEA, that is also for deduction towards interest. But later, initially this section was open only for 1 year, but later, instead of extending this section, government brought a new section. What? Loan must be sanctioned in the 3 years period, 1st April 2019 to 31st March 2022. Now we have another interest 80 EEB. There it is 2023. Here it is 4 years. Here it is 3 years. Here it is 1 year. Loan sanctioned date must be in which date? In 80 EE 1617. In 80 EEA 2019 to 2022. 80 EEB electric purpose 2019 to 2023. Able to understand? Now, stamp duty value shall not exceed 45 lakhs under 80 EA, and you should not have any house as on the date of sanctioning the loan. Means this is also for the first time buyers. So once again the section is reintroduced in 2019 year. Getting it? This time maximum deduction for interest is how much? 1,50,000. Whatever logic I told, SOP, UOP, DLOP, everything is exactly here same. Just that here it is 50,000, here it is 1,50,000. So you should apply beneficial treatment, which we already covered in our regular class with some illustrations and all. Clear, all of you? That's it. By the way, who is eligible? 80 EE individual. 80 A also individual. Suppose you are already claiming 80 E, means you already have one house, so you can't claim again 80 EA. Able to understand? That's it. Next, here DLOP, all that points have given clearly. Okay. Next, electric loan. Electric vehicle loan. Any individual who have taken a loan for purchasing electric vehicle, deduction is available for interest payable. Now, how much reduction? 1,50,000 towards interest. When the loan must be sanctioned between 2019 to 2023, interest claimed is allowed as, should not be allowed under other heads. Suppose I bought electric vehicle for my business purpose. It is added block of asset. If I am paying interest on that loan, I will claim under 36. That time I will not get deduction under 80 EEB. So indirectly, which SSC is, if an electric car is purchased for not for business purpose, then only 80 EEB is indirectly eligible. That too under optional tax regime. Suppose if the SSC is going for default tax regime, you can't claim 80 EEB. That's it. Yes or no? Next. Then we have 80G, donations. One of the most confusing section for many. So we made a simplest table. Simplest way to calculate, how to calculate answer under 80G. 90% of the cases students do wrong in 80G. Very simple. In 80G, donations, this is actually nothing but deduction towards donations. Deduction towards donations. What donations? Whatever donations you pay, these donations are divided into 4 categories. These donations are divided into 4 categories. Category 4 is having 5 kinds of donations. Category 3 is having 2 donations. Category 2 is having 1 donation. Now, how you should claim deduction? Simple. First, in the problem, they'll give you donations list. Donation paid to charitable trust, donation paid to government, donation paid to Olympic Association, donation paid to Prime Minister National Relief Fund, some donations names and they'll give. You should remember which donation comes under which category. How to remember that? I'll cover it. Okay. Now, very simple. Suppose you saw the problem. You found some 10 or 15 donation list. First group it. How many of them comes under category 1? For example, under category 1, 5 lakhs worth came. Under category 1, 5 lakhs worth of amount donations came. Some 3-4 donations were there. Total put together 5 lakhs. By the way, donation exceeding 2,000 rupees can be considered only if it is paid by other than cash. Suppose if at all donation amount to somebody is more than 2,000 in cash, we will not consider. We will not consider. Then again, there are some 3 more donations where total donation value is 2 lakhs only, and all the donation comes under what? Category 2. Then I have paid another donation. I have paid some other donations. 3 or 4 more donations were there. Total put together 2 lakhs only, and they come under category 3. Then balance number of donations are there. Out of 15-20 donations, I removed 1, 2, 3 category. Now balance is put together approximately 2,50,000 is there. First, this is what given in the problem only. I am just dividing them into 4 categories. Okay, fine. Now what should I do? Calculate donation, calculate deduction. How much reduction? 5 lakhs. First category, 100% of amount paid. I paid amount 5 lakhs. So answer is 5 lakhs. Second category, 50% of amount paid. 2 lakhs I paid. So answer is 1 lakh. Third category, fourth category. You cannot straight away calculate 100% of amount paid. We didn't use that word. We said 100% of qualifying amount. Here we said 50% of qualifying amount. Qualifying amount means what? amount paid or 10% of adjusted total income, whichever is lower. Oh, which means category 3 maximum amount that covers under 3. Here in our example 4,50,000 is the total. Category 3 and 4 put together, how much is there? 4,50,000. How much is qualified? How much is eligible? Amount paid is not eligible. Amount paid or 10% of adjusted total income, whichever is lower, only that much is eligible. For example, adjusted total income we calculated. What is adjusted total income? Very simple. Calculate gross total income minus chapter 6. First, no, capital gains and all you reduce. Special capital gains, special 111A, 112, 112A. Lottery's point is not considered here. Getting it? Lottery need not be reduced. Then deductions under chapter 6A except ATG, because some students know when they're reducing ATG, when they're reducing chapter 6, they reduce category 1, category 2 here. Never do that. ATG itself, don't touch it. But remaining all the deductions are there, right? 80C, 80CCC, all that, reduce it. Now you will get this one. Suppose this value is 30 lakh only. Adjusted total income, how much? 30. Into 10% means what? 3 lakh. Oh, category 4, category 5 put together, amount paid is 4.5, 10% of adjusted total income 3 lakhs, whichever is lower. Only qualifying amount is how much? 3 lakh only. Category 3 and 4 put together, how much department will consider? 3 lakhs only they will consider. But you paid how much? 450. So how I will allocate? Category 3, no, full I will allocate. Because 3 lakhs I can consider. Category 3 is only 2 lakhs, right? 2 lakhs I will consider. Remaining out of 3 lakhs, 2 lakhs is allocated for category 3. Still I have 1 lakh only. 2 lakh 50 I paid, but I will consider how much? I will consider how much? Here 2 lakhs I will consider, correct? Here I will consider 1 lakh. Okay, now maximum qualifying amount is 3 lakhs. The qualifying amount we allocated for category 3, category 2 based on amount paid. Here amount paid 2 lakhs. We are eligible for 3 lakhs qualifying amount. So 2 lakhs fully allocated. Category 4 amount paid 250. But we are only having 1 lakh limit. Therefore 1 lakh is allocated. Now very simple. Apply percentage logic. 100% of qualifying amount. 2 lakhs into 100%. 2 lakhs is the deduction. 50% of qualifying amount. 1 lakh into 50. 50%. 50,000. So what is the total answer? 5 lakh plus 1 lakh. 6 plus 2. 8 lakh 50,000. This is the answer. Now here one point you should remember. At the beginning of chapter 6A, I missed this point. Total deductions under chapter 6A plus 10AA cannot exceed your normal incomes. Total deductions under chapter 6A plus exemption deduction under 10AA both put together cannot exceed your gross total income, which consists of normal incomes. If my gross total income, normal income portion is only 5 lakh, my total chapter 6A deduction 10 lakh, 10A deduction 3 lakh, total 13 lakh is there, but my normal income 5 lakhs, I cannot claim more than 5 lakh. That's it. Able to understand. Next, remember donations in kind. Sometimes in exam they'll give you donation given kind, market value they'll give you, ignore. Yes or no? Deduction is not allowed if at all donation is paid in cash exceeding 2,000. Now in exam they'll give you list of donations. We should identify what will come under category 1, what will come under category 2, what will come under category 3, what will come under category 4. If at all you have a doubt, once again repeat the video. Getting it? Fine. So what all comes under category 2? Simple. Prime Minister Drought Relief Fund, National Relief Fund, CARES Fund, they all come under category 1. Prime Minister Drought Relief Fund comes under category 2. Category 2 means what? Directly 50% deduction, amount paid into 50. Category 3, you will get donation 100% but subject to qualifying amount. What amounts? Donation paid to government for family planning purpose. For promoting family planning, I pay to government for family planning. Suppose no, I pay to government only for some charitable purpose other than family planning. Other than family planning comes under category 4. By the way, to whom I am paying? Donation paying to government and local authority. Here also donation paid to government and local authority. If it is family planning, category 3. If it is somebody else, if it is something else purpose, category 4. That's it. Then, sir, donation paid by a company to sports association, sports association institutions for sports related donation comes under category 3, and that amount is eligible only if it is paid by company. Only for company SSC they can claim. Yes or no? Then what are all items comes under category 4? These items. Suppose I am donating directly for charitable trust. Category 4. I am paying for housing accommodation, town planning, that authorities, town planning, urban planning, all that authorities, category 4. I am paying for promoting minorities interest, category 4. I am paying for renovation, repairs of temples, mosque, gurudwara, church, archaeological place, artistic importance, yes or no, place of worships. So if I am paying any donation to them, category 4. So what are category 4? Charitable trust, government for charitable purpose, other than family planning, then housing development, city development, town development for them, then for promoting minorities interest, then for renovation, reconstruction, or all that, repairs of mosque, temple, gurudwara, all religious places, archaeological places, all that, category 4. Category 3, what are all? Sports related by company, yes or no, then government for family planning, then prime minister drought relief fund, all these comes under 2, 3, 4 category. You can easily, you remember 2, 3, 4, then remaining all other donations comes under category 1. So in category 1, what to be remembered, highlighted with only red color, only this you remember, that's it. State government fund for medical relief, for army fund, CM relief fund, governor's relief fund, national sports fund, national culture fund. Remember, national sports fund is different. Contribution to any authority set up for promotion of sports, that is different. That is category 3, which is subject to qualifying limit. Swachh Bharat Kosh, Clean Ganga fund, PM Cares fund, all these comes under category 1. That's it. ATG over. Easy or not? All of you clear? Then ATGG. What is 80GG? This is okay. 80GG, I'll come back to it later. Let me cover donations only. Okay. 80G is dealing with donations, right? 80GGA is also dealing with donations. But here, donations are for scientific research, social research, rural development. Able to understand? Or you are donating to public sector companies for eligible projects. For eligible project. Or you are contributing to rural development fund, national urban poverty eradication fund. Sometimes some students know national urban poverty eradication fund, the moment they see, they think category 1 of 80G. They blindly think category 1 of 80G, but at the end of the day, your answer will be same only. Because 80GG, a contribution to national urban, 100% reduction. Category 1, even if you interpret 80G, no, you will get 100% reduction. So generally, whether you write the section number 80G or 80GG for these points, no, the answer will be correct only. But if at all you think, will it come under category 1 or will it come under 80GGA? If at all you are unable to decide, don't write section, you claim deduction happily. 2, 3, 4 you remember. Any other donation automatically comes under category 1. Suppose you saw national urban poverty eradication, rural development fund you saw. Suppose you are unable to recollect 80GG and 80G category 1, you are unable to remember. Don't mention section, you claim deduction, you get the same answer. Are you getting the point? Yes. However, social research, scientific research, obviously 80GGA. By the way, this entire 80GGA deduction is eligible only for the SSE who do not have PGBP income. Suppose if the SSE has a PGBP income, all these deductions can be claimed by him under 35 itself. Here also, amount exceeding 2000, no, if at all paid in cash, you don't get deduction. 48 3 modes you are paying. Electronic fund transfer, account pay check, account pay draft, you will get. Bearer check, crossed check, cash, you will not get a deduction. Over. Easy or not? All of you? Easy? Then donations to political party electoral trust. Donation paid by Indian companies. Donation paid by Indian companies. You can claim deduction under 80GGB. How? You should pay donation completely other than cash. Even 1 rupee you paid in cash, you will not get deduction for that. Donation includes one more point here, very important point. Suppose a company is there, they are spending some advertisement expenditure in a political party, brochure, newspaper, like that. Under 37 PGBP section 2B, it is disallowed, and the same amount is treated as donation to them, and under 80GGB the company can claim it as deduction, because donation definition to political party under Companies Act includes advertisement expenditure also. So that's why under income tax 80GGA you can claim deduction for actual donation paid plus advertisement expenditure incurred in political party. Both are treated as donations paid by the company to political party. Remember, only Indian companies allowed, foreign companies not allowed, government companies prohibited for giving donation. Then sir, what about 80GGC? Here many interpret it as other than company. No, wrong. It's not other than company. MCQ, very important. Only four categories are covered: individual, HUF, AOP, BOI. Yes or no? Okay. You see here, firms are not covered. Getting it? 80GGC is not available for AJP and local authorities. Actually, firms also you can claim. Firms also you can claim. Not an issue. Just 1 minute, I will see that word. Whether firm is exclusively covered or not, I will see, because in 80GGC specifically the section limit is given. Just a minute. Yes, this is Act. Yeah, except local authority and artificial jurisdiction person only. So firm is covered. Getting it? So though I have not given the list, firm is covered. That's why I say 80 GCC is not available for AJP and local authority. Getting it? Don't write the word other than company. Sometimes in MCQ they'll give you 80 GCC deduction is available for whom? Companies, Indian companies. B, government companies. C, local authority and AJP. Sorry, I mean C, any person other than local authority and AJP. Yes or no? Any person other than D, any other than company they'll give you. Many students will write other than company if at all the word is there. So other than AJP and local authority, firm is also eligible. Simple, other than AJP and local authority. So the interpretation is correct only. Able to understand. Next, deduction is for what? If at all you are donating to a registered political party or registered electoral trust. That's it. Clear or not? Easy or not? Then 80 GG, rent paid. Deduction for rent paid. Suppose no, if the SSC is incurring rental expenditure. If the SSC is incurring rental expenditure. Why is he incurring? He is staying in some other city. He is staying in a city where he does not have a own house. He does not have a own house there. He, his family member, his spouse, none of them are having a own house. So he is staying in a city for the purpose of business, for the purpose of employment, or some reason he is staying in some other city. There he is staying in a rented house. So there rent paid is allowed as deduction. How much? Rent paid minus 10% of adjusted total income. Adjusted total income means what? Same definition which is given under 80G. Gross total income minus chapter 6 deductions. My other than 80GG minus capital gains 111A, 112A, 112, reduce it. You will get adjusted in the 10%. Up to 10% rent paid expenditure, rent paid up to 10%, you will not get any deduction. Beyond 10%, if at all you are paying rent, no, that extra rent amount will be given as deduction. Or 25% of adjusted total income, maximum deduction 5,000 per month. Are you clear? Then suppose no, if the SSC is receiving HRA, he can't claim deduction. Remember here they are saying, they are talking receiving HRA. Claiming exemption or not doesn't matter. Yes or no? Next, no deduction if the SSC or spouse or children or HUF having a own house in the same city. Yes or no? And SSC if at all claiming SOP, DLOP, not UOP. UOP I am not covering. Why? Because UOP means what? I am staying in different city. My house, I have a own house in another city, but it was not occupied. Yes or no? Then only it is called as UOP. Suppose if at all you are claiming optional tax regime, NAV is equal to 0 towards UOP reason, still you can claim 80 GG deduction. Suppose you are claiming SOP or you are showing DLOP because of SOP nature. Yes or no? When you say SOP, you are staying in your own house, right? Why are you paying rent? You will not get deduction. Able to understand. 80 GG over. Clear, confident? Everybody? Then 80 JJA, I'll come back to it. First 80 okay, QQB RRB also I'll come back to it. 80 TTA TTB. 80 TTA TTB is for what? Deduction towards interest. Deduction towards interest income. 80 TTA deals with the savings interest. Yes or no? Suppose no, SSC is getting savings interest from bank, post office. Whatever interest first you get, no, tax it under income from other sources. However, when you are getting post office savings interest, 10 subsection 15 up to 3,500 rupees exempt. Suppose no, I am getting savings, bank interest 7,000, say post office savings interest 7,500 I am getting. Under other sources, how much is taxable? 14,500. Sorry, 14,000 is only taxable. Income from other sources, how much is taxable? 14. How, sir? Bank interest fully taxable. Post office 7,500 I am getting, no, 3,500 is exempted. 3,500 is exempted. 4. Oh, 11,000. How much is taxable totally? 11,000 is taxable under income from other sources. So now IFOS 11,000. Okay. My gross total income is also 11,000 only. I don't have any other income. You can claim again 80 TTA deduction up to 10,000. Already 11,000 is taxed. So up to 10 only. Suppose no, in other sources, no, savings interest taxed amount is 8,000 only. Then 80 TTA also 8,000. So the deduction cannot exceed tax amount or 10,000, whichever is lower. Yes or no? Next. Now here savings deposit. Individual and HUF. You can be a resident and non-resident, doesn't matter. Yes or no? Income shall be first included in IFOS. Able to understand. Then what is 80 TTB? This is introduced later on for senior citizen purpose. The two resident senior citizen. Suppose if the resident senior citizen is getting interest income, fixed deposit interest, savings interest doesn't matter. The moment you see senior citizen, you should remember 80 TTP also. And the moment you say senior citizen, resident, interest income is there. Automatically 80 TTP adjustment you must do in the exam. In exam, they will not tell you 80 TTA TTP clue. They will say interest income clue. That interest income means what? You should claim 80 TTA, 80 TTP under optional tax regime. Default tax regime, no deduction at all. Yes or no? Now, first senior citizen, whatever interest is getting, no, first tax it, IFOS. Savings interest, up to, savings interest, whatever income you get, first tax it. Post office savings interest, 3/5 you give exemption, balance amount tax it in IFOS. Fixed deposit interest, fully tax it. Gross total income minus, you can claim deduction under 80 TTB up to 50,000 rupees or interest income taxed under other sources, whichever is lower. That's it. Easy or not? All of you. That's why I have given post office interest, all that is also correct. Next. So next 80 QQB, RRB, JJAA. These three are income based deductions. No, sorry. These three are heading C deductions. 80 QQB heading C plus income based. 80 TTA TTB is not heading C but income based. 80 JJAA is heading C but expense based. Able to understand? So three sections we have heading C related. In chapter 6 deductions, no, heading C is there. 80 JJAA, QQB, RRB. Now many students confuse in QQB calculation part. Very simple. QQB, RRB, both of them is for what? You are getting royalty income. First taxed under PGPP. You are getting royalty income. First taxed under PGPP. For example, no. For example, suppose 80 QQB is dealing with royalty on books other than textbooks. 80 RRB is dealing with royalty on patents. Okay. Now, what 80 QQB says, suppose you are getting a royalty income. You are getting every year lump sum money, irrespective of sales, no link with the sales. You get a lump sum fixed amount. You published one book, one publishing house, they told you they will give you fixed amount. You will get only fixed amount 5 lakhs yearly. So, I got 5 lakhs. PGBP income is how much? 5 lakhs. How much is the PGBP income? 5 lakhs. Getting it? I don't have any expenditure, nothing. Now, under 80 QQB, I can claim deduction for this lump sum royalty. How much I can claim? Actual amount how much? 5 lakhs. Maximum deduction? 3 lakhs. Whichever is lower. That's it. So, 80 QQB answer is how much? 3 lakh. Are you getting it? Sometimes you will get royalty income as a percentage of books. As a percentage of books sold. For example, the company, they are giving me as a percentage of books. They are giving me as a percentage of books. How much they paid me? 2,80,000 rupees they paid me. How much they paid me? 2,80,000. The same problem, I think similar number only there in the problem also. Okay. 2,80,000 they are paying me. At what percentage? 18%. At what percentage? How much they are paying? 18. As a percentage of sale, 18% they are paying me 2,80,000. Okay, fine. Do tax under PGBP. PGBP how much it is? 2,80,000. And you know what? I spent 40,000 rupees expenses already for getting that income. So how much is my net income included under PGBP? 2,40,000. Now, for this proportionate royalty which you get as a percentage, you will get a deduction. How much you will get deduction under IIT QQB? Up to 15% of sales only. 15% royalty only you will get deduction. Okay. 2,80,000, 2,80,000 is equal for 18. How much is for 15? 2 lakh. 2,80,000 is for 18. 18. A calculator, do it, no? 2 lakh. Okay. 2,35,000 for the sake I will keep. Okay. 2,35,000 I will keep. For example, for the sake of convenience, 2,35,000 is equal to 15% royalty. 18% is equal to 2,80,000. For convenience sake, 15% royalty is 2,35,000. Yes or no? Up to 15% royalty only you will get deduction. How much you will get deduction? 2,35,000. But you know what? This amount is you are getting from abroad. For example, see, suppose if this amount is you are getting in India, no problem. 2,35,000. How much deduction you can claim? Already 40,000 rupees is you claimed, no, expenditure related deduction towards royalty. Already you claimed 40,000 deduction. That 40,000 eliminated. Balance 1,95,000 is the maximum deduction. Further, suppose, no, sir, I am getting this 2,35,000 from abroad, sir. Okay, from abroad. The royalty for me is paid by a foreign company, foreign entity, they are paying me. Then there is one condition. Within 6 months, from the 31st March, end of the financial year, from the end of the relevant year, within 6 months, how much you received in India? That much only is considered. See, 15% only maximum. But you know what? I received in India 2,10,000 only. Within 6 months from the end of the financial year, I received only 2,10,000. Then 2,10,000 minus 40,000. Then 2,10,000 minus 40,000. 1,70,000 only I can claim deduction. If at all you are getting royalty percentage income from abroad, how much deduction eligible is linked with how much is collected in India in foreign currency, convertible foreign currency. Within 6 months from the end of the financial year, how much is brought in India, only that much is eligible for deduction. Be able to understand. First, always calculate 15%. This is the maximum deduction. Then again, maximum deduction is restricted to how much is brought in India. Again, from that eligible deduction amount, already deduction you claimed in PGBP, reduce it. See, if you do not claim any PGBP, you will get full deduction. Since you are claiming already towards royalty expenditure, some amount you are claiming already. So deduction cannot be extra. So deduction here will be adjusted, whatever deduction. That's why here matter is also given. You see, royalty. So deduction other than lump sum royalty. Suppose I am getting deduction is equal to royalty income before expenditure. Calculate first. Not exceeding 15% of the value. So before expenditure, how much is the royalty income up to 15%? Calculate. If any expenditure is claimed under PGBP, the same shall be reduced from deduction eligible under 80QQB. From 80QQB deduction, reduce that. 80QQB deduction, how much? Income earned outside India, if at all, must be brought into India within 6 months. Yes, and only that much is income eligible. So first deduction. Deduction means what? 15%. Then reduce it to, reduce that money to how much is brought in India. That much deduction you can claim. But again, if PGBP deduction is claimed, that you should adjust it. Balance amount only you can claim it as deduction. Look at that once again problem, you will understand. That's it. Clear all of you? Sir, I am getting royalty for patents. There is no proportionate patent income. Only lump sum. Maximum deduction is lower of amount received or 3 lakhs. That's it. Over. 80QQB, RRB, both are over. Able to understand. Next 80JJAA. 80JJAA. What is this 80JJAA is about? 80JJAA is talking about employee cost, additional employee cost. What deduction you will get? You will get 30% of additional employee cost. Very simple. Sir, in my business I recruited employees, sir. I am paying salaries to them. I can claim deduction under PGBP for salary. 37 deduction I can anyhow claim. In addition to that, to promote employment opportunities, to encourage more and more employers, generators, so no, 80JJAA section is brought. What this section is saying, you claim PGBP happily, no problem. How much you claim with no salary cost? In that salary cost, 30% you can claim additionally under 80JJAA for 3 years. For how many years you can claim? 3 years. 3 years, if at all you are incurring additional employee cost, 3 years, if you are incurring additional employee cost, you can claim. Every year you can claim. By the way, for additional employee you can claim 3 years. Second year, suppose I started my business year 1, this year. I recruited employees. Whatever salary paid to them, this year how much I paid? Into 30%. Next year how much I paid to them? Into 30%. Third year how much I paid to them? Into 30%. Next year again I hired some more people. 2, 3, 4. Third year I hired again some more people. 3, 4, 5. Like that will go. Now, deduction is calculated at 30% of additional employee cost. Additional employee cost means what? Employee cost incurred in that year. Employee cost incurred in that year towards additional employees. Towards additional employees, how much employment cost I incurred? Who is an additional employee? Who is an additional employee? This is the question. Additional employee means what? In case of new business, no, amount paid to new employees during the year. I started business this year only. Everybody I recruited is a additional employee. All of them, whatever salary I paid, that is called as what? Additional employee cost. Sir, I am an existing business already. Last year 31st March I have 150 employees in my last year I have 150 employees. This year no, 50 employees left. 70 employees joined. 50 employees left, 70 employees joined. Now totally 170 it became this year. Only 20 will be considered as additional employees. Only 20 will be considered as additional employees because already you have 150. Now you have only 170 as a whole. Don't say 70 people I hired, sir. 70 you hired, 50 you did replacement. That is not new employee you hired, it's a replacement. So extra how many you hired? 20. Only that 20 is eligible for additional employee definition. Only that 20 will come under additional employee. In case of existing business, additional employee cost will be 0 if no increase in total employees or amount is paid in cash. If at all you are paying salary in cash, no, you will not get 80 JJAA deduction. You will get 80 JJAA deduction only if you pay other than cash, even 1 rupee also. Able to understand? Fine. Now, again, who is an additional employee? Simple, an employee employed during the year. This year we recruited him, yes or no? And due to which there is a total increase in number of employees compared to last day of the previous year. Sir, this year I hired 70 employees, but out of 70, only 20 employees are additionally recruited. 50 employees, no, they left 50 recruited, replacement only. Able to understand? Again, the following people are not counted in additional employee number. Now I have 20, no, extra. 20 out of 20 I can't count again. From this 20, I should eliminate people. Employee whose emoluments are more than 25,000. Whose emoluments? Emolument means what? Monetary salary plus non-monetary perquisites all put together. Emoluments, but excluding provident fund contribution, pension fund contribution, gratuity, leave encashment, that and all you should not consider. Yes or no? Provident fund, for his future related anything you pay, that is not considered. Present, how much you are paying for him. Present, what benefit he is getting. Monetary, non-monetary, allowances, perquisites, everything you consider. Total emoluments, if at all it is more than 25, he is not considered under additional employee. Suppose, no, out of this 20, no, 4 employees, no, they are drawing 30,000 per month. Eliminate it. Okay, then employee for whom entire contribution is paid by government under pension plan. Government is taking care of his welfare, future welfare. You know, all that. For example, Prime Minister Rozgar Yojana, for example, it is not there in the ICA book, I'm just giving you. Okay, under that scheme I recruited employees. Under PM Rozgar Yojana I recruited these employees. Getting it? They will not be considered in additional employee definition. Like that I have 5 employees during the year. Like that I have 5 employees during the year. Sir, there are some employees who are not participating in RPF. There are 5 employees who are not participating. 2 employees who are not participating. Sir, I recruited employees, sir. They were employed for less than 240 days in this year. In this year, they were employed for less than 240. Employed means what? They worked. It's not working days. On which date they joined? They were there up to 31st March also. From the date of joining to 31st March, what is the gap? Less than 240 days. Don't count them. Like that, for example, 2 employees were there. So 9 plus 14, 13. 20 minus 13 is equal to only 7 employees are treated as additional employees in this year. To them, how much salary you paid this year? Multiplied by 30% you can claim deduction. Multiplied by 30% you can claim this year deduction. To these 7 employees, next year also you will pay salary for, right? 7 into salary paid into 12 months into 30%. Third year also you pay some salary amount, right? 30% of the salary paid in the third years. For these 7 employees you will get deduction. Further, now 2 employees I reduced here. 2 employees I reduced, saying that they were employed for less than 240 in this year. Next year they will be considered as 2. Next year means year 2, these 2 employees will be considered. For them you can claim deduction for year 2, 3, 4. In second year, how much you paid salary into 30%. Third year, how much you paid salary into 30%. Fourth year, how much you paid salary into 30%. Very simple. An employee who is employed for less than 240, he is also additional employee. But for this year, he can't claim. You can't claim any deduction for them. From second, third, fourth year onwards, you can claim deduction towards them. Are you clear? Employee employed for less than 240 days is not an additional employee. Now, the 240 days logic is treated as 150 in case of footwear, leather and apparel industry. Getting it? For footwear, apparel and other industry, it is not 240 days logic, 150 days only. If at all they are employed for less than 150, then only we will exclude them from the additional employee limit. But remember, these employees will be counted in the next year onwards. Yes or no? Employees satisfying 240, 150 condition in the succeeding year will qualify for deduction from that year for 3 years. Easy or not? Yes or no? Now here audit report is compulsory. 1 month prior to the due date, by 30th September audit report is compulsory. This business should not be formed up by reconstruction or splitting up of existing. It must be a newly started business. The business should not be acquired from another. Simple. It must be a newly started business. Okay, you started the business, you didn't acquire from somebody, then you are eligible for 80 JJAA deduction. Clear or not? How much you can claim? 80 JJAA, 30% of additional employee cost. Additional employee cost means what? Salary paid during this year to the employees. Which employees? Those employees who are newly hired. All newly hired? No. Newly hired, because of them, total number of employees compared to last year of the last day should increase. Only that increased recently recruited employees, you should take them into account. Salary paid this year, how much? Into 30%. Next year salary paid to them into 30%. Third year salary paid to them into 30%. Now additional employee does not include employee drawing more than 25,000, employee not participating RPF, employee whose pension plan is taken care by government, employee who is employed for less than 240 days, less than 150 days. But this fourth category, temporary exclusion in this year, but they will again be considered in the next year. Able to understand? All of you? That's it. Entire chapter 6A deductions and 10A deduction both are over. Confident? We completed within 1 hour 20 minutes. Chapter 6A. 1 hour 20 minutes or 1 hour 10 minutes or 1 hour 15 minutes. See the quality. Yes or no? Each and every point we covered. In fact, in a regular class, we discussed much more in depth with so many illustrations. Correct? That's it. Confident now? Able to recollect everything? That's it. Okay. In TDS, no, before you start TDS revision, okay, you come back to this particular timestamp once again after finishing TDS advanced tax revision. Once again come back to this timestamp. Now first listen, then proceed to TDS. Then after listening entire TDS revision, again come back to this. Okay. Now what is this? There are section combinations you should remember. Section combinations. 194A, 194C, 194H, 194I, 194J, 194R, 206C. Okay, 206C. Subsection 1, 206C, subsection 1F. In these 8 sections, these sections are applicable to the payer, to the seller, who is any person other than individual and HUF. In the preceding year, in case of individual and HUF, in preceding year, turnover is more than 1 crore in business, profession gross receipts are more than 50 lakh. Then only these 8 sections apply. First point. Then 194DA, amendment. I'm talking about amendment. Amendments are there in which sections I'm talking about. Okay. 194DA, major amendments. I'm talking about that two major amendments. 194DA, 194G, 194H, 194M. Okay. 194M, 194, this one more, IB. In all these sections, TDS rate up to 30th September 2024. This is most important amendment, 5%. From 1st October 2024, 2%. Are you clear? Then there is another section, another combination. What is that combination? This is important for theory question. Right now what I'm going to tell you. 194IA, 194IB, 194M. These sections are applicable, okay, even for personal expenses. And these sections, TAN number under 203A section do not apply. Clear? Then 206C, 1H and 194Q. These two sections are applicable only for buying of goods or seller of the goods. Which goods? Other than 206C subsection 1, 206C subsection 1F, 206C subsection 1G. Then there are 2 more sections where minor amendments happened. 194C, exclusion 194J they mentioned. Exclusion 194J, work do not include professional service given under 194J. Actually that is not required, but that's an amendment brought. 206C, yes or no? 1F, earlier it is applicable for motor vehicle where value exceeding 10 lakhs. But now notified goods are also added. Notified goods with effect from 1st January 2025. That's it. These are the amendments. 194C, 206C, 1F. Here amendment is there. This entire category is amended. This entire category is what? Amended. Don't worry. In the TDS revision at respective places, I repeated these sections multiple times. You will understand better. Are you confident? Easy or not? Generally, 206A, high rate of TDS by the payer to the payee if payee does not furnish PAN. 2 times of the section rate, 20%, whichever is higher. But 194Q, maximum TDS 5%. 206CC, yes or no? Higher rate of TCS by the seller from the buyer you should collect. At what rate? 2 times 5%, 1% for 206C, subsection 1H. That's it. All these points I covered in the respective section. That's it. As an intro, I am giving you. Okay, clear, easy. Let's begin TDS, TCS and advanced tax revision. So first we will finish TDS related revision. Then we'll get back to advanced tax. See, generally in the basic concepts topic, we might have, what we understood is income is earned in the previous year. For that, computation of tax, assessment of tax, filing of return, payment of tax will be made in the next year, and that next year is called as assessment year. But department will collect tax in the income, tax on the income. They don't wait up to next year. They directly collect from you at the source itself. Suppose you are getting income, right? Somebody is paying you, right? From the somebody who is paying you, from there itself they will collect the tax belonging to you. And the person who is paying you, to the extent of tax, whatever he has to pay to department on behalf of you, will deduct the tax and then pay it to you. Getting it? Tax is collected in the same previous year when you are earning income. One in the form of TDS, another one in the form of advanced tax. Getting it? Through TDS they collect at some percentage. Through advanced tax they will collect the remaining amount. Literally, income tax department will collect entire your tax amount in the previous year itself without waiting up to assessment year. If at all you are having any pending tax liability in assessment year, still you are liable for interest under 234B. Yes or no? Fine. Anyhow, the 234BC will come back in advanced tax revision. Now, so TDS and TCS. What is the difference between TDS and TCS? TDS is tax deducted at source. TCS is tax collected at source. TCS is collected by seller from buyer. TDS is collected. TDS is deducted by payer while paying amount to payee. If you see, suppose payer, in seller and buyer, seller is actually payee, buyer is actually payer. TCS, payee will collect from payer. Technically, TDS, payee will deduct. No. Payer will deduct some money, balance amount will be paid to the payee. This is also called as withholding of tax. We have already seen similar point for what is TDS in 40 subsection A, 140 subsection A, 1A. Most of the TDS provisions and TCS provisions are applicable to business assessees. Only few sections are there, like 194 IB, 194 IA, 194 M. Generally these three sections, 194 N, cash withdrawal. Personal purpose also TDS is liable. Able to understand? That's it. Fine. Anyhow, more about each and every section we'll discuss slowly one by one. So what is the difference between TDS and TCS? It might come for 3 or 4 marks question. Okay, a theory question might come. Directly I will start with the sections in TDS, then I will come back to this diagram. At last I will come back to this diagram. What is the TDS mechanism? How TDS mechanism works exactly? That we'll discuss at last. First let us discuss each and every TDS section. 192 TDS on salary. Like in this chapter, many of you will have a confusion. Like some sections, they say TDS at the time of payment. Some sections say at the time of credit or at the time of payment, whichever is earlier. Simply in this diagram, what sections deals with at the time of payment only? TDS shall be deducted here at the time of payment only, whereas here at the time of credit or payment, whichever is earlier. Credit means what? Recognizing expenditure in the books. See, for the payer, that's an expenditure. Amount paid is a expenditure for the payer. Now for the payer, whatever amount he is paying, it's an expenditure for him. That amount will be deducted. Sorry, that amount will be recognized in books rate expenditure. Suppose if at all I am recognizing on accrual basis expenditure, but not yet paid at the time of recognition itself, TDS adjustment, TDS deduction must be made in the books of accounts, and that must be remitted to the department. So in all these sections, at the time of recognizing in the books of accounts the liability or payment, whichever is earlier, so at that time TDS has to be deducted. Whereas in all these sections, when you are recognizing in books of accounts the expenditure or liability, doesn't matter. Only at the time of payment you will deduct TDS. That's it. Now 192. Getting it? At the end of the TDS chapter, once I will revise that payment to credit, all that. Okay, how to remember that sections easily. 192, employer, employee. Employee may be resident or non-resident. In our entire TDS provisions, recipient shall only be resident. Generally, If at all we are paying any amount to non-resident, non-resident related TDS provisions are discussed under 195, which we don't have in CA inter syllabus. It's there only in the CA final. Payment to residents, only few payments, like 192 salary, 194B, BB, BA, all these billings, the payment can be made to a resident or it can be to a non-resident also. Able to understand? So there only non-resident is also covered. Rest of all the sections, recipient to whom you are paying, payee must be resident. By the way, in TDS, the terminology is payer, payee, deductor, deductee. Whereas in TCS, the terminology is seller, buyer. Seller will collect the tax from buyer. That's it. Now, so here, who is paying it? Employer is paying. Employer is paying the salary to employee. Very simple. How to tax has to be collected? What is the threshold limit? Every section uniformly drafted like this. Getting it? So who is the payer? Who is the payee? What is the rate of TDS? What is the threshold? When it should be deducted? Then exemptions and additional conditions like that. Yes or no? First, under 192, employer has to ask employee regarding what is the tax regime they follow. First ask them. They will tell you normal or default. Suppose employee did not reply. We by default assume default tax regime. Correct? Now, in this section, what is the complexity? Employer has to identify, the company which is paying salary has to identify what is total income of employee. Identify total income. Suppose employee total income is 10 lakhs, sir. Exactly 10 lakhs total income. Total income means what? Gross total income minus chapter 6 deductions, which means company has to ask employee what are the salary incomes that he is getting from this company, other companies. Company has to ask the employee what is house property income he has. We should ask the employee what is capital gains income, all that. Ask gross total income information. Also ask him optional tax regime, then ask him chapter 6A details and all, then compute total income. Sir, like that I computed. Total income came 10 lakhs. Total tax liability including education cess is approximately 1,20,000 is coming. Now deduct it over 12 months. April month 10,000, May month 10,000, June month 10,000. Deduct it equally over 12 months. That is why they use the word average rate of tax. There is no specific percentage here because tax is calculated based on slab rates. Yes or no? So find out the estimated tax liability of the employee, ask him TDS details, all that. After reducing that, balance the tax, deduct it under 192. Able to understand? So employer will do estimation of tax liability and accordingly this amount will be collected. Sometimes, for example, this 10 lakhs if you see, what is the total income 10 lakhs? How much is the tax liability? Actually 1.2 lakh. Out of this 10 lakhs, for example, 3 lakhs is a non-monetary perquisite, 9 lakhs is a monetary and monetary, non-monetary elements perquisite all put together. Now, company sometimes, what they do, this 1.2 lakhs is the total tax, right? Company sometimes non-monetary perquisite related tax component, company will say they will bear it. The company will say they will bear. What? Non-monetary perquisite related tax. Now, sir, for 10 lakhs worth of salary, 1.2 lakhs, 1.2 lakh. This 10 lakhs, 3 lakhs is non-monetary, 9 lakhs is the others. Now, how much is for non-monetary perquisite? 1.2 into 3 by 10 is equal to how much? 30%? 36,000. Sorry, not 3. Here it is 7. Okay. Here it is 7. Sorry, it's a 7. Okay. So, 3 by 10 non-monetary, 36,000. Balancing figure is how much actually? So 1.2, 84,000, correct? 84,000. Now, sir, out of 1.2, 36 lakhs is 36,000 is belonging to non-monetary perquisite related tax portion. This 84,000 is related to remaining total income. How do we compute the tax liability on non-monetary? By applying average rate of tax. For 10 lakhs, 1.2 lakh means 12% is the average rate of tax. 3 lakhs is the non-monetary perquisite value into 12% is equal to 36,000. That's why they use in this section average rate of tax. Average rate of tax. Now, what the company proposed, the company said this 36,000 they will take care. They will pay. So, from my salary every month, from my salary in the full year, 84,000 only will be deducted. When the when they are paying me money, right, monthly salary, 84,000 will be deducted in full year by 12. Able to understand? So maybe 12 divided by 84 means 7,000 per month. 7,000 they will deduct from my salary every month. Now 36,000 companies paying, out of their own pocket. That's an expenditure for him, They can't claim deduction. Under PGBP 40 subsection A, this amount paid, amount of income tax paid by employer on the non-monetary perquisite of employee is actually a business expenditure for him, but he can't claim deduction because it's an income tax obligation. You can't claim deduction. For employee, my tax company is paying. That is also a benefit to me, but it is exempt under 10 subsection 10 CC. That's it. Remaining 84,000 will be deducted from employee every month. Are you clear? Now, you need to ask some evidences for deductions, because when we are computing total income of the employee, he gave me so many deductions details. You should collect evidences. For HRA, to whom he is paying rent, landlord, name, owner name, PAN number, all that. If at all rent paid per annum is more than 1 lakh. Leave travel, expenditure of travel tickets, all that. Interest on house property, bank statement, bank name, all that. Chapter 6A, investment and expenditure related bills will be there, right? Those details are required. Sometimes this itself can be asked as a 3 marks question in the exam, theory. That's it. 192 is over. Understood or not? Next, 192A. This is regarding premature withdrawal from provident fund. We all know in recognized provident fund, if at all you are withdrawing after 5 years of continuous service, fully exempt. Suppose if you are withdrawing within 5 years, then we will see why he is withdrawing. Because of ill health, because of discontinuance of the job, because company closed. If at all these are the 3 reasons, then also it is exempted. Other than these 3 reasons, you are withdrawing for some personal purpose, then fully taxable. Amount withdrawn is fully taxable. What is taxable? Employer contribution, interest on employer contribution, interest on employee contribution. These 3 components are taxable. The amount you withdrawn includes employee contribution also, but that is just your amount you are getting back. That is not taxable. You able to understand? This is the taxability. Suppose if the employee withdrawing PF, which is a taxable withdrawal, then if the withdrawal amount is more than 50,000 or more, the company straight away apply TDS at 10% on taxable portion. For example, employee withdrawn from provident fund 1 lakh. If you see the breakup of 1 lakh, 20,000 is employee contribution. Remaining 80,000 is employer, interest on employee. Now since total withdrawal amount is 1 lakh, since crossed 50, section will apply. But when you are applying 10%, you will only apply on taxable portion, which is 10%, which is 8,000 rupees. Are you clear? Suppose if you are withdrawing, which is exempted, after 5 years of service, if you withdraw fully exempted, no TDS on that. That's it. Easy or not? Next, interest on securities. Who are paying? Anybody, every person who is paying interest on securities. Who will issue these securities? Either government, local authority, company, statutory corporation. Anybody can issue. They are paying interest on security. They need to deduct TDS at the time of paying the interest. If annual interest is okay, fine. TDS is deducted at what rate? 10%. To whom you are paying? Resident. When they should deduct TDS? At the time of recognizing in the books. Time of credit means recognizing in the books, or time of payment, whichever is earlier. Now, time of credit. Credit in the books means what? Recognizing liability. Whether you recognize liability saying interest expenditure, whether you recognize liability with some suspense account, which name you are using for the liability doesn't matter. You recognize liability, right? That's enough. You need to deduct TDS under some section. Are you clear? Next, there are what is the threshold limits, or what are the exemptions under this sections? Some interest payment paid, some interest payment on securities, that is exempted. No TDS will apply. No TDS. Remember, it is about no TDS. It's not about exemption of that income for the recipient. For the recipient, the incomes are taxable or incomes are exempted as per our exemption rules, taxability rules. This here I'm talking about. Here, when I say exemption, TDS is exempted on that. That's it. Now, interest payable on debentures by widely held company. If a widely held company is paying interest on what? Debentures. To whom they are paying? Individuals and HUF. Then threshold limit is 5,000 rupees. Up to 5,000 rupees per annum. The threshold limit is what? In a financial year. If a widely held company means what? Listed companies, generally. Listed companies, government corporations, all that. Public interest entities. We call them as what? Public interest entities. Getting it? If these companies are paying any interest, up to 5,000 to individual and HUF, up to 5,000 no TDS. Suppose if the amount is crossing 5,000 a year, on full amount of interest, 10% TDS will apply. Yes or no? Remember, the exemption is given only for widely held company. Suppose if a closely held company, a private limited company is paying interest, unlisted public company is paying interest too, individual or HUF, 5,000 limit is also not there, full amount, even 1,000 rupees interest is liable for TDS. Yes or no? Suppose interest is paid by widely held company only, but to a partnership firm, to an LLP, to a company they are paying, then no threshold limit. Even from 1,000 rupees onwards, you need to collect, you need to deduct TDS. Yes or no? Suppose interest amount is paid on securities, but the securities are owned by insurance company and any other insurer. Any other insurance means what? Simple insurance company, any insurance, private or public or government, doesn't matter. Insurance companies are the owners for the securities. On those securities, the issuer company paying interest, no TDS will apply. Are you clear? Interest on securities of government, interest on securities of government, straight away exempt. However, 8% saving bond, 7.75% taxable saving bonds, floating rate saving bonds. This is newly added as the amendment in the newly recent Finance Act. For the first time, May 25 exams only this is applicable. So on floating rate savings bonds, annual interest, if it is more than 10,000 only, TDS. Only for these three interest only 10,000 threshold limit is applicable. Suppose if interest is paid by government securities, if the interest is paid on government, no need to deduct TDS at all. Interest on government securities, no need to deduct TDS. But for these three bonds, but for these three types of bonds where annual interest is exceeding 10,000, then only TDS will apply. At what rate? 10%. Next, if interest is paid on national development bonds, no TDS. Interest paid on national savings certificates, no TDS. Interest paid on debentures issued by, some institute or authority or society. Which society? Cooperative Land Mortgage Bank, Cooperative Land Development Bank. If they are paying any interest, no TDS. Interest paid on Power Financial Corporation capital gain bonds, interest paid on IRFC capital gain bonds, no TDS will apply. But you see, Rural Electrification Corporation is not covered here. Able to understand? Yes, that's it. So simply, what is the takeaway? TDS at 10% will apply if annual interest payable to individual HUF is exceeding 5,000 on debentures issued by widely held company. On interest payable by closely held company, straight 10% without limit. Interest payable on government bonds if annual interest is exceeding taxable government bonds. That's why I use the word very clearly. Taxable. What are the taxable government bonds? 8% taxable savings bonds, 7.75 taxable floating rate bonds, 2020. Yes or no? That's it. Only on them TDS will apply. That too if the annual interest payable exceeds 10,000. Then TDS will be deducted at what rate? 10%. That's it. 193 over. Clear? Next, 194. Okay, 194 I'll come back to it. 194A I will discuss, because 194A also talks about interest only, but other than interest on securities. Then what interest? Interest on loans, interest on borrowings, interest on public deposits, interest on fixed deposits, recurring deposits accepted by the bank or post office. Simple. You are paying interest on what? Some loan you borrowed, some borrowing, some deposits, whatever you are paying interest on that. Then TDS will apply. At what rate? Same 10%. But this section is applicable only for any person other than individual and HUF. This section is applicable for any person other than an individual HUF. But what about individual and HUF? For them this section apply only if turnover from business is exceeding 1 crore in preceding financial year, or gross receipts are exceeding 50 lakh in preceding financial year. If their turnover or gross receipts are exceeding 1 crore, exceeding 50 lakhs in the preceding financial year, then only for individual and HUF it is applicable. This applicability limit is same. This applicability limit is same in these sections: 194A, 194C, 194H, 194I, 194J, 194R, 206C subsection 1, 206C subsection 1F. Yes or no? For 206C1, 206C1F, in all these sections, TCS section also you see seller definition. You see TCS open and see just right now. TCS section open and see seller definition, second page of the TCS topic. Yes or no? 206C subsection 1 covered. Seller of timber, seller of forest produce, seller of scrap. Yes or no? 206C 1F, seller of motor vehicle, correct? Or notified goods. So for these 8 sections, payer means same definition. Payer means same definition. These 8 sections are applicable to the same category of SSE. Which SSE? Any person, whoever is paying these 8 types of payments, for them only TDS will apply. Individuals and HUFs, these 8 sections will apply only if business turnover is exceeding 1 crore in the last year. You know, or in case of profession, gross receipts are exceeding more than 50 lakh in the last year. Many students here misinterpret. Last year, if at all they are having audit, this section is applicable. No, it's not audit. They never use the word audit. Turnover more than 1 crore, this section apply. Turnover more than 50 lakh, this section apply. Whether they are going for audit or not doesn't matter. Yes or no. Next. Who is payee? Obviously, you are paying to resident. Now, there are exemptions under this section. There are exemptions under this section. Like if you are paying the following interest, no, you don't have to deduct TDS at all. For example, on savings deposit, you don't have to deduct TDS. By banking company, savings deposit interest paid by banking company, no need to deduct. Post office related point, they are silent. The section is silent on post office savings interest, but we will apply the same logic, and post office also they don't deduct in reality. Are you getting it? Then interest creditor are paid by a firm to its partners. If a partnership firm is paying interest to partners, no TDS under 194A. But there is another section called 194T. In 40 subsection B, we have seen. As per 194T, new section which is added, which is not there in our TDS chapter, but is there in our 40B PGBP. Yes or no? As per 194T, if annual amount paid to partner by the partnership firm, remuneration, interest, that and all doesn't matter. If the firm is paying to partners, yeah, they are paying. Firm is paying to partners. Yes, they are paying. Interest on capital, interest on loan, remuneration, something they are paying. Is it more than 20,000? Yes, straight away 10% TDS apply under 194T. So, if an interest is paid by a firm to partner, 194A does not apply, but 194T will apply. Yes or no? No TDS for deposit schemes of central government. Yes or no? Next, no TDS if at all you are paying interest to banks, society, LIC, insurance company, unit trust of India notified. No TDS on interest on compensation paid by insurance company under motor accident claim tribunal. If insurance company is paying interest on compensation, because of the compensation is awarded under motor accident claim tribunal. Suppose if the insurance company is just recognizing in the books, interest expenditure, they recognize it in books only, no TDS. But they are paying, yes, TDS apply. Threshold limit is 50,000. Up to 50,000, no TDS. But if it crosses 50,000, straight away on the entire amount, TDS will apply at what rate? 10%. Zero coupon bonds, no TDS. Any other notified, no TDS. Now let's discuss, interest paid by banks. Interest paid by banks, interest paid by societies we will discuss. Generally, sir, I am not a banker, sir. I am not a banker. I am an individual. I borrowed a loan from my friend or relative, sir. I am paying interest, sir. TDS applicable? Yes. If the amount is crossing 50,000. Actually, you see the section here. No interest, no TDS on interest. If aggregate amount in financial year does not exceed 5,000. If the payer is anybody, sir, the payer is a bank or the payer is a cooperative bank, then 40,000 is a threshold limit. Senior citizen, what is the threshold limit? 50,000. Yes or no? Now, sir, how this 40,000, 50,000 limit shall be computed? Is it per fixed deposit? By the way, banks and all has to deduct TDS only on only on time deposits. Time deposit means what? It may be fixed deposit or it may be recurring deposit, anything. Savings deposit is exempted, no TDS at all. Sir, a bank is paying on interest on time deposit or fixed deposit, sir, or recurring deposit. 40,000 is the threshold rate. Is it per deposit? Is it per FD? No. Is it per branch of the bank? No. Full bank. State Bank of India has 20,000 branches across India. I may be having in 10-20 branches, 1 lakh FD. All branches put together, how much interest they are paying me, you should see. Entire State Bank of India paying me how much interest, you see. If it is more than 40,000, TDS at 10% will apply on the entire amount. Suppose I am a senior citizen, recipient is a senior citizen, then bank will apply 50,000 threshold limit. Sir, bank does not have core banking solution. See, if core banking solution is there, full bank wise you should see. Others means what? Core banking solution is not there. Then branch wise we will see. Yes or no? Post offices also has to deduct TDS on notified schemes. Only for these schemes, if the interest amount paid by them exceed 40, 10%. Otherwise, 50,000. Yes or no? Suppose interest is paid by some other person, sir, 5,000. This is the threshold limit. Now, the most confusing part in this section, I simplified it here. Sir, interest paid by cooperative society. Interest paid by cooperative society. Many institute book is very confusing. Many books are very confusing. This is simplest way. Interest is paid by whom? Cooperative society. Which cooperative society, sir? Not a cooperative bank, because cooperative bank is covered here. Cooperative bank is covered here. Other than cooperative bank, a society is paying interest, sir, on loans borrowed, deposits taken by them. Okay, which society? Sir, society is there, right? Their turnover does not exceed 50 crore in the last year. Their turnover does not exceed 50 crore in the last year. Look, 194A, applicability to cooperative society. If a society whose turnover in the last year is not exceeding 50 crore, then interest paid to member, interest paid to another society, interest paid by primary agriculture cooperative society, primary credit society, cooperative land mortgage bank, cooperative land development bank. No TDS, no TDS, no TDS. And finally, if a cooperative bank is paying saving interest, no, then also no TDS. Yes or no? Sir, I am a cooperative society, sir, where my turnover is exceeding 50 crore in the last year. All these exemptions will not apply. If annual interest is exceeding 40, flat 10%. Senior citizen, you are paying 50,000 is the threshold limit. Cooperative society are the liable for deducting TDS. Look at the last year turnover, more than 50 crore, no exemptions. Straight away 40,000, 50,000 threshold limits. However, savings interest is always exempted from TDS. Now coming to, sir, I am a society, sir. Last year my turnover is less than 50. Then 3 types of payments I am exempted. Interest paid to member is exempted. Interest paid to another society is exempted. Interest paid by primary agriculture society, primary credit society, that and all exempted. Able to understand. By the way, when I say cooperative society, I am talking about other than cooperative banks. Are you clear? So simplest way you can understand. No confusion at all. 194A is completed. Easy or not? All of you? Now we'll go back to 194, TDS on dividends. Remember, there is another section called 194K, units of mutual funds. Income on units of mutual fund. Suppose I bought shares and securities of a company. On that I am getting dividend. Which shares? Equity, preference, whatever. Which dividend? Final dividend, interim dividend, deemed dividend also. Remember, deemed dividend is also covered. Yes or no? If at all I am getting dividend on shares, 194E section is applicable. If a company is paying, mutual fund company is paying income to unit holders on mutual fund units, 194K is applicable. In both the sections, threshold limit is 5,000 per year. In both the sections, 10% is the TDS rate on dividend. Yes or no? When they should deduct TDS? Earlier of payment or distribution of dividend. There also it is earlier of payment or distribution of income to unit holders. Yes or no? 194K. 2 sections I am completing simultaneously. Who should deduct? Principal officer, resident shareholder, 5,000. That too, if the shareholder is individual only. That too, payment is made by other than. No threshold in other cases. No threshold means what? Suppose if the company is paying dividend to another company, no TDS. Suppose if a subsidiary company declared dividend, holding company is getting dividend on full amount, even if it is 1,000 rupees, TDS has to be deducted at what rate? 10%. That's it. 194 is over. Easy or not? All of you? Then winnings. 194B. Winnings related totally 3 sections are there. 194B, 194BB. Both these sections are very similar. 194BA slightly different. 194BA is what? Suppose I am getting winnings from online games. How I do online games? Generally, I will install the app in my phone or laptop and I will add some deposit amount. Then I will start playing the online game. Then I will be getting some winning. Yes or no? Some games I will be losing. Some game I will be winning. So amount will be credited to the online. Yes or no? Now, how much is the TDS? 30% on the net winnings in the user account. What do you mean by net winnings? Gross winning identify. Total balance in the ledger account you see. Balance how much you see? From that minus deposit amount you reduce. The balance is called as what? Net winnings. On the net winnings, how much TDS will apply? 30%. When you will? At the time of payment. When the TDS will be deducted? At the time of withdrawal from the ledger. Withdrawal from the ledger, TDS will be deducted at the time of withdrawal. Sir, during the year I am not withdrawing at all. I just keep that amount as it is like that. Then year end, TDS will be deducted at the end of the financial year. March month they will deduct the TDS. If at all you didn't withdraw, on the winnings portion, 30% TDS will be deducted at the year end. Easy or not? Yes or no? There is no threshold limit here. There is no threshold limit. Winning amount 1,000, 30% TDS will apply. Sir, what if Winnings is in kind. How TDS will apply? If the winnings amount is not cash, the winning amount is kind. Car we are giving. Car value 10 lakhs. Yes or no? That's the winning amount. How should I deduct TDS? You can't deduct TDS in kind. Therefore, ask the recipient. Winner is there, right? Winner no should pay 3 lakhs. 10 lakhs is the value of the car. Then into 30% TDS. Ask him to pay 3 lakhs to department as advance tax. Ask him to pay 3 lakhs as advance tax. Take the challan. Then release the car. Are you getting it? Suppose if the winnings which is in kind or cash and kind, but cash portion is not sufficient to cover TDS amount, then winner has to pay the pending amount through challan as it advance tax of the department, and the challan proof has to be given to the the person who is releasing the winning. That's how TDS. MCQ is there. Getting it? How MCQ, option A, the company has to collect from the winner money, TDS money, and then deposit. That's wrong. The company has to ensure winner paid the tax to the department directly, advance tax in the form of yes or no. The challan details you should take. That's how the section is drafted. MCQ, especially this logic is very important for the purpose of MCQ. Are you clear? That's it. Now, sir, I am getting some winnings, sir, but other than online game, other than horse races. See, winnings are again broadly classified into two types. Any winnings other than online and horse race, and horse race. In both the cases, what is the TDS rate? 30%. At the time of payment only. In both the cases, at the time of payment only. Rate of TDS, 30%. For horse races, you have a separate 10,000 threshold limit in a year. For remaining winnings, you have a separate 10,000 threshold limit in a year. If the amount is crossing 10,000 on full amount, 30% TDS. Clear? Easy. There is no much complication in B and BB. BA is only somewhat confusing, which I told you now clearly. What is net winning? All that I clearly told. Next, 194C. 194C is for what? Again, applicability. 194C is applicable for which SSC? 8 sections I told. 8 sections are applicable only to any person other than individual and HUF. For individual and HUF, turnover in the last year more than 1 crore. Profession gross receipts are more than 50 lakh. Then only this section is applicable. What payment is covered under 194C? Under 194C, contract payment is covered. Payment to contractors is covered. Okay, I am paying to contractor for what? For work. For carrying out work. Don't use the word works contract. Works contract is a legal term. That is different. I am paying for carrying out work, not works contract. Yes or no? So we had a contract between me and another person have a contract. He is doing some work for me. For that work reason, I am paying him. Able to understand what is work? Work means what? Supply of labor for carrying out work. Suppose if at all they are supplying professional and technical people, for example, then 194J technical service. That comes under 194J technical service. If at all the contractor he is supplying me professional people and technical people, not labors, then it comes under technical service, provisioning of technical and professional personnel. Yes or no? They come under 194J, fees for technical service. That comes under. Getting it? For technical service fee, 2% TDS under 194J. Here you are paying amount for carrying out work. Carrying out work means what? Supplying labor for work purpose. Advertising, it comes under carrying out. Broadcasting and telecasting with production specification. Remember, broadcasting, telecasting alone is not covered. With the production is covered. Suppose I am paying some amount to a company where they do broadcasting and telecasting. They take care of broadcasting, telecasting. Production also they take care. Production of ad as per my specification. I will tell them how the ad should be. They will design the ad according to my specification. Means they are carrying out some work. The amount paid is for the work, and they are doing telecasting, broadcasting. The TDS will apply under 194C. Suppose I designed ad completely. With some ad agency. Okay, I designed complete ad. Just I gave the ad to the television company to play it. Just broadcasting, telecasting they should do. Nothing else. 194C section will not apply. Are you clear? All of you. Same way, ad agency will pay to television company. Suppose I went to one ad agency for advertisement. They designed the ad. I paid them 10 crore lump sum money for telecasting, broadcasting, designing of the ad. Now this ad agency is paying 5 crore to television company for telecasting. Now ad agency is paid to television company for telecasting. No. Ad agency designed the ad. Television company is just telecasting the ad. What work they are doing? So no TDS on that under 194C. No TDS under other sections also. Are you clear? Now, ad agency, for designing the ad, no, they hire film artists and all. For them they pay. That is liable for 194J. Are you getting it? Because film artist comes under profession. That's it. Then what is work includes? Work includes, supply of labor, advertising, broadcasting and telecasting, which includes production purpose, production specifications, carriage of goods, transportation service is also covered under works contract. Sorry, transportation service also comes under work other than railways. Yes or no? Transportation is also work, remember. Catering is also work, remember. Manufacturing or supplying, suppose I supplied material, I supplied paper to my vendor. I supplied paper to my vendor and I asked him to please print and then give me. Printing service comes under 194C. Printing service comes under what? 194C. Printing of papers comes under 194. Suppose I supplied, papers to the supplier and he is just printing the content as per my specification and then giving me back. Printing work he is carrying out, right? That comes under manufacture and supply. Yes or no? Manufacture and supply of a product based on customer specification using materials provided by customer. Material I only gave, what to do also specification I only gave, he just have to work on it and then give back. That is called work. Suppose he is only buying the paper, he is only printing everything and then he is just supplying me as a sale of books, then that comes under sale of books. It will not come under work. Able to understand? Printing service generally comes under work. If at all paper is supplied by the buyer, paper is supplied by the service receiver. Able to understand? So clarification, printing point also you remember. In sometimes in exam printing also will be given as an example. Are you clear? Next, exclusions. Professional services under 194J. This is newly added in the Finance Act 2024 amendment. Earlier, even if this point is not there, we do the same only. Now specifically the section says 194J is not covered under 194J, services will not come under 194C. Then professional services, yes or no? Then contracts which are purely sale of goods, like I ordered some books, they only bought the paper, they only printed everything, yes or no? So they just gave me, maybe specification I'll give, that doesn't matter. At the end of the day, material is owned by them. Yes or no? That comes under sale of goods. On sale of goods, 194C will not apply because he didn't carry work on my material. He should do some work on my material. Transporter, on my material he is carrying. Yes or no? Telecasting, broadcasting, my advertisement they are doing. Yes or no? Some work they are doing. That's why 194C will apply. Able to understand? Then I have given regarding broadcasting, telecasting, all that have already been discussed in production house. Entire this issue be discussed in our classroom. Okay. Next, now when TDS has to be deducted, if the amount is paid to a resident contractor, at what rate? Individual and HUF. If the contractor, the person who is doing work for me, if at all he is an individual HUF, 1%. Suppose if the work is carried by some other person, then 2%. So partnership firm, LLP, AOP, BOI, company contractors, 2% directly. Yes or no? Sir, pay, he is a transporter, sir. And he is a small transporter as referred under 44 AE. Who is a small transporter? A transporter involved in plying, hiring, leasing of goods carriage vehicle, and the number of vehicles at any point of time during the financial year does not exceed 10. So he is called as a small transporter. He must give a PAN number and he must give a declaration that he is a small transporter. If at all he gave a PAN number and gave a self declaration that I am a small transporter, whatever amount I am paying him for transportation, which is a work actually, whatever amount I paid, not subject to TDS. Are you getting it? That's it. Now threshold limit. When TDS will be deducted? If the single payment is exceeding 30,000, TDS will apply. The single payment is less than 30. But yearly payment is crossing 1 lakh. Yearly payment, April to March, full amount paid is crossing 1 lakh. Then the moment it cross 1 lakh, right, total payment, that time retrospectively on total amount, 2%, 1% will apply and you will deduct. Are you getting it? For example, I paid in quarter 1, I paid 40,000. Sorry, quarter 1, I paid 28,000. In quarter 2, I paid 29,000. In quarter 3, I paid 25,000. In quarter 4, I paid 31,000. But you see, total amount is crossed 1 lakh. Now in the quarter 4, how much you paid? 28 plus 29, almost 57. 57, 62, 82, 82 plus 31. 1 lakh 13,000. Correct? So when you pay fourth money, fourth time, it not only crossed 30, total amount also crossed 1 lakh. Therefore on entire 1 lakh 13,000, 1% or 2% TDS will apply. So if it is 1%, 1,130. If it is 2%, 1,260. This amount you will deduct from last 31,000 and balance only you will pay. That's it. Yes or no? Now exemptions under contract, no. If at all individual or HUF is making for personal purpose contract, if at all I am doing interior renovation work purpose in my residential house, that's a personal expenditure. Personal expenditure is not covered under 194C, but personal expenditure is covered under 194M if the personal expenditure in that year is exceeding 50 lakh to a single person. Yes or no? Fine. Anyhow, 194M I will discuss later. Clear. 194C is over. Easy or not? Next, 194D. 194D, insurance commission. You know, there are three sections which are dealing with the commission: 194D, 194G, 194H. Whereas G and H has an amendment which is applicable for the May 25 exam for the first time. May 2024 exam, this is applicable for the first time. Again, at the end of this class, once again I will do full revision, full amendments related. Okay, fine. So 194D, insurance commission. 194G, lottery commission. Commission paid to lottery dealer. 194H, any other commission or brokerage paid who are dealing in goods and services. Yes or no? For example, I am buying a movable property. A broker is there. He is asking some brokerage that is covered under 194H. Now, 194D, insurance commission. Suppose if the person, I am paying insurance commission. Okay, I am a dealer with insurance company, or I may be insurance company. I am paying to whom? Insurance agent. What am I paying? Insurance commission I am paying. Yearly, if the amount is exceeding 15,000, if the yearly commission is exceeding 15,000 insurance, you know, this threshold limit is same in 194G also. The limit is same in 194H also. Suppose I am paying insurance commission, 15,000 limit applicable. To the same person I am paying lottery commission. Again, separate 15,000 limit is applicable. I am paying some other commission. All other commissions put together, maximum limit in a year is 15,000. Able to understand. So yearly threshold is what? 15. Suppose if at 15,000 it crossed, and obviously recipient must be resident. If at all the recipient is a non-corporate, not a company, then 5%. Suppose if the recipient is a domestic company, then 10% TDS. Are you clear? Only for insurance commission 5 and 10 logic is applicable. Whereas remaining commission 194D, 194G, 5% TDS up to 30th September. From 1st October it is 2% TDS. Yes or no? Fine. Let me discuss 194G also now. What is 194G? There are these sections. I think 5 sections we have: 194G, 194H, 194M. 194M also the same, no? Yeah, 194M, more than 50 lakh, 5% with effect from 1st October it is 2%. Yes or no? 194IB, yes or no? Rent more than 50,000. Then 194 DA, yeah. DA is also, yes. 194 DA. In these 5 sections, remember, in these 5 sections there is an amendment. In these 5 sections there is an amendment which is applicable for the May 25 for the first time. In all these 5 sections, no, the amount you are paying, right? What is 194 DA? Maturity amount in the insurance policy. 194G is what? Commission to lottery agent. 194H is what? Any commission or brokerage which is not covered under 194D, which is not covered under 194G. 194M is what? Payment for work, payment of professional fee, payment of brokerage or commission for personal purposes, more than 50 lakh in a year. 194M, 194IB, payment of rent more than 50,000 per month in a month. Yes or no? In all these sections, no, up to 30th September, 5% TDS applicable. From 1st October 2024 up to 30th September 2024, 5%. From 1st October, 2%. In all these 5 sections, 5% TDS up to 30th September 2024. From 1st October 2024, 2% TDS. Clear or not? Now, what is 194G? Same. Yearly threshold limit is 15,000. Amount of commission paid to lottery seller for sale of lottery tickets. Rate of TDS up to 30th September related commission amount 5%. From 1st October commission amount 2%. Are you clear? Yes or no? That's it. Then 194H. Any other commission but not insurance related commission, lottery related commission. And remember, 194H is applicable to same categories. Any person other than individual HUF. Individual and HUF, if the business turnover is more than 1 crore, profession receipts are more than 50 lakh. Yes. So how much is the TDS? 5% if the commission is payable up to 30th September. 2% if the commission is paid on or after 1st October. Yes or no? Next, you know, what do you mean by commission? Amount is received by one person on behalf of another for services rendered other than professional services. for any other services of buying or selling, or for some transactions related to assets, immovable properties, whatever, yes or no? Remember, professional services which are covered under 194J, they do not come under 194H. No TDS on commission paid by BSNL. Advertising related, no TDS at all under section 194H. Correct? Now, fees retained by advertising company from media house. I think this is not required. In our regular class, we clearly discussed on this, but this is not required here. Okay. Payment for engaging models, photographs, artists are separate and they may attract TDS under 194J. Yes or no? That's it. 194H is also over. Threshold limit is what? 15,000. At the time of credit or payment, whichever is earlier. Clear. Commission point is over. Now we will discuss 194DA. What is 194DA? Insurance company is paying money under insurance policy. When insurance company will pay money under insurance policy, three circumstances. One, yearly cashback might be there. Yearly cashback might be there. Two, maturity amount. Three, surrender. Surrender of the policy. Simple. All these days you are paying premium to company. Now company is paying back your money. They should deduct TDS under 194DA if annual amount paid exceeds 1 lakh. If the annual amount paid is 1 lakh or more, the moment it touches 1 lakh, TDS will apply. At what rate? If the amount is paid up to 30th September, 5% TDS. If the amount is paid from 1st October, 2% TDS. But you know, there is one exemption. If the insurance company is releasing money to you, and that money which you are getting, for example, for you it is exempt under 10 subsection 10D. For example, the money received is exempt under 1010D. You are getting 10 lakhs, 20 lakhs, 30 lakhs, 40 lakhs. It doesn't matter. Fully exempted. That income itself is exempted. TDS will not apply. TDS will not apply on that. Are you getting it? Which means insurance company, when they should deduct a TDS on the insurance amount, only when the insurance amount is taxable for you under income from other sources under 56 subsection 2 clause 13. Yes or no? Only then they should deduct TDS, provided amount paid shall exceed 1 lakh. Suppose insurance company released money 90,000 only. That is taxable for you. 1010D exemption does not apply. TDS will not apply because the amount is not exceeding 1 lakh. Amount is less than 1 lakh. If the amount is touching 1 lakh or more than 1 lakh, both are liable. At the time of payment, they should deduct the TDS. If the amount is paid before 30th September, 5% TDS. If the amount is paid on or after 1st October, 2% TDS. That's it. Are you clear? Next. 194G is over, 194H is over. Now 194I. In 194I, here just add one word: immovable property and furniture. What is that? Furniture. Getting it? Under 194I, you are paying rent for immovable property and furniture. TDS rate is 10%. You are paying rent for plant machinery equipment. TDS rate is 2%. I am paying what here? Rent. For what? Immovable property I am paying rent, or furniture I am paying rent. 10% TDS. Suppose I am paying rent on lease of machinery, lease of equipment, which is not immovable, which is not furniture, then 2% is the TDS. By the way, remember GST component, because when I am paying rental amount, the other person might raise on me GST amount also, because rent is liable for GST, commercial renting. Yes or no? On the GST component, no need to deduct TDS. Not only here, in most of the sections, GST component, if it is shown separately in the invoice, on the GST component, we don't collect, we don't apply TDS provisions on GST component. Able to understand? Yes. Now, when TDS will be applied? If the rent amount per annum is more than 2,40,000 in a financial year, directly TDS will apply. For example, one company is there, they rented me immovable property, they also rented me plant and machinery. They are collecting 2 lakhs rent for plant and machinery, they are collecting 2 lakhs rent for immovable property. Both put together you should see, because you are paying to single person only, both of them. Both put together is 4 lakh, which is exceeding 2.5 lakh. TDS will apply. 194I section will apply. Now at what rate you should deduct? On immovable property portion, 10% is equal to 20,000, whereas on plant and machinery portion, 2% is equal to 4,000. So 20 plus 4, 24,000 is the TDS under 194I. Yes or no? Now who is paying this rent? Any person other than individual and HUF. In case of individual and HUF, this section will apply only if the turnover is exceeding 1 crore in a preceding financial, or gross receipts are exceeding 50 lakhs in preceding financial year. Remember, this applicability section is same for 8 sections. Once again, 194A, C, H, I, J, R, 206C subsection 1 TCS seller, 206C, subsection 1F, seller of motor vehicle or notified goods. Notified goods is newly added in the Finance Act latest. In these 8 sections, the person liable for TDS, the person liable for collecting TCS must be same. Any person other than individual and HUF, individual and HUF will be liable only if the turnover in the preceding financial year is more than 1 crore. If gross receipts in the preceding financial year is exceeding 50 lakh, that's it. 194I section is mostly over, correct? Now, sometimes farmers will be paying cooling charges to cold storages. That comes under work. 194C will apply. That is not treated as rent. Yes or no? Payment of passenger fee by airline is not considered as rent. One time payment for long term lease. I took an asset on lease. One time single payment only. That is not covered under 194I. Are you clear? Now if you see 194I do not apply to individual, do not apply to HUF if they don't have a business or profession, or they have a business or they have a profession, but the last year turnover is less than 1 crore, last year receipts are less than 50 lakh, then 194I does not apply. For them 194IB is applicable, because IB section also dealing with rent amount only. IB section also dealing with what? Rent expenditure only. Now what this IB section says, 194 IB section says very simple. I am an individual in HUF who is not covered under 194I. Then if you are paying rent, monthly rent is more than 50,000. Monthly rent is more than 50,000. Per month rent or part of rent. One day you took function hall on rent. 1 lakh you are paying. You are eligible. You are liable for 194 IB. If you are deducting TDS under 194 IB, TAN number is not required. 194 IA, 194 IB, 194 M. In these 3 sections, if you are deducting TDS, TAN number do not apply. TAN number do not apply. Yes or no? Remaining all other sections, if I have to deduct TDS or if I have to collect TCS, TAN number must be there for the deductor, for the payer, for the seller. Yes or no? Now, okay sir, I am paying monthly rent 50,000 cross it, sir. TDS will apply for that month. TDS will apply for that month. At what rate? If the monthly rent is belonging to up to September month, 5%. If the rent amount is belonging to October month onwards, then 2%. Yes or no? Then when you should deduct this TDS? TDS will be deducted from the rent paid for last month of the year. March month rent you will pay, right? From that month, in the 12 months, every month more than 50 identify. That many months multiplied by rent amount of that month. Yes or no? Into 5%, 2%, as the case may be. Apply that and then deduct TDS in March month. Sir, I am vacating property in January itself. Then in January month you should deduct the TDS. Suppose the person to whom I am paying the rent, no, he may be owner or he may be a sublessor. He may be a owner or sublessor. In 194IB, I am paying rent, right? To whom I am paying? He need not be owner. He may be subleasing me, subletting me. Yes or no? Now, if at all the owner does not give me, or the person who rented me this does not give me PAN number, then I will deduct TDS at 20%. We know very well. But that should not exceed last month rent. That should not exceed March month rent or last month of the tenancy rent. TDS shall not exceed that much. And we already solved a problem on this in the ICA book. Yes or no? That's it. So with this section is over. Clear or not? Next, 194 IA. You are buying immovable property. You are buying immovable property. On purchase of immovable property, whose consideration or whose stamp duty value on the date of registration, if nothing is mentioned, we should take registration stamp duty value. If at all it is exceeding 50 lakh, TDS will apply. If it is less than 50 lakh, TDS will not apply. Are you clear? At what rate? 1% of the consideration or stamp duty value if it is higher, whichever is higher. So either stamp duty or consideration, any one cross 50 lakhs are enough. On that value, 1% TDS you will deduct and pay balance amount to the buyer of the immovable property. You are the seller of the immovable property. Yes or no? Sorry. You are buyer of the immovable property. You are the buyer of the immovable property. You are paying amount to seller. Deduct 1% and pay the balance amount to the seller. Correct? Yes or no? Next, remember there is one amendment. 1st October onwards, if multiple owners are there, multiple sellers, multiple buyers are there, for each seller and buyer 50 lakhs limit shall be applied. Property we should see. Property we should see. Property consideration how much? That you should see. Yes or no? Consideration is aggregated. They said aggregated means what? Single property value you should see. Yes or no? Joint owners may be multiple. That doesn't matter. Are you clear? Even TAN requirement does not apply for 194 IA. Remember, consideration must also include club membership fee, car parking fee, anything. Are you getting it? So when you are paying immovable property, you are buying a flat. In that flat cost is 40 lakhs, 15 lakhs amenities cost. That is also to be considered. Able to understand. 1% TDS. Clear or not? Now, when you are buying immovable property, I already told in gift provision. Yes or no? You are a buyer of immovable property. If it is inadequate consideration, gift provision might apply. For seller, capital gains provision might apply for him if it is a capital asset. For the seller, if it is a stock in trade for him, the building which he is selling, then PGBP 43 CA will logic also will apply. Accordingly, 43 CA, 50 C, 194 IA, all these sections, 56 subsection to clause 10, gift, everything you should apply cumulatively and then take. In exam, sometimes they will ask you buyer, seller, at what price, everything. They will ask you tax implications under income tax law. Clear? That's it. Then we have something called 194J. 5 types of payments are covered. What are the 5 types of payments? Professional service fee, technical service fee, non-compete fee, royalty, director fee. Totally 5 payments are covered. Now, for whom this section is applicable? Any person other than individual and HUF. Suppose I am a partnership firm, I am a company. All 5 types of payments if I am making. All 5 types of payments if at all I am making. Yes or no? This 194J is applicable. Sir, I am not firm partner, all that. I am an individual and HUF. And my turnover in the last year 1 crore crossed. My receipts in the last year 50 lakhs crossed. Then for me, is this section applicable? Yes, applicable, but only 2 payments. Only fees for professional service, fees for technical service. For individual and HUF, no. 194J section is applicable for professional service fee, technical service fee. Suppose individual is paying royalty, 194J section will not apply. Individual is paying non-compete fee, 194J section will not apply. Yes or no? Next, who is the payee? Resident payee. Who is the payee? Resident payee. TDS at what rate? Sir, for professional service, 10% is the TDS. For royalty, 10% is the TDS. Non-compete fee, 10% is the TDS. Director remuneration, 10. Everywhere, 10% only. Yes or no? However, for these 3 types of payments, technical services, or if the recipient is engaged in call center operations, royalty for cinemas, technical service, royalty for cinema, or if the recipient is engaged in call center, then TDS rate is what? 2%, 2%, 2%. Yes or no? When they should deduct TDS? If professional fee is exceeding 30, then only TDS. Fees for technical cross at 30,000, then only TDS. Royalty for cinemas I'm paying 30,000 crossed in a year, then only TDS. Any other royalty 30,000, non-compete fee 30. Threshold limit is not there for director remuneration. Yes or no? Threshold limit is not there for director remuneration. Simple. What payments are covered? Fees for professional service, fees for technical service, royalty for cinemas, royalty for others, non-compete fee, director remuneration. For all of them, each amount, each expenditure, 30,000 separate limit is there. Remember, 30,000 limit is not combined all put together. It's a separate limit for royalty, separate limit for technical, separate limit for fees for professional. Yes or no? Suppose no, to single person, I am paying professional fee, I am paying technical fee, 20,000 I paid. Both put together 40. Section I will not apply because each professional service fee less than 30, technical service fee less than 30 in a year. Yes or no? Therefore, the section will not apply. All the amounts, 30,000 separate threshold limit. However, director remuneration, no threshold because section is silent on that. Able to understand. By the way, director remuneration means what? Director sitting fee. Director remuneration means what? Director sitting fee. Yes or no? Now again, if at all you are making for personal purposes, professional fee, technical fee, all that, no TDS at all. Are you clear? So what is professional service? What is technical service? All that. What is royalty? Everything is defined. Royalty also includes computer software purchase. You are paying amount for software purchase. That comes under royalty. Suppose no, I am paying amount in a subsequent transfer. He is reselling me the software. Yes or no? And earlier, no, when he originally bought, he deducted TDS. Transferee, he gave me a declaration that I already deducted last time. Now I'm just reselling the software without any modification. Then I need not deduct TDS on the purchase of software from the previous owner who is reselling it. Are you getting it? That's it. 194J is over. Already 194K we already completed. Then 194 LA, I should have discussed it in IA itself. 194 IA is what? Purchase of immovable property. 194 LA is also purchase of immovable property. Both are purchase only. But in 194 IA, we are purchasing under compulsory acquisition mode from the seller. Seller is not voluntarily selling, compulsory acquisition. And annual, the amount we are paying, no compensation is crossed 2,50,000. Then TDS will apply at 10%. TDS will apply at 10%. But you know, in 194 LA, agricultural land, whether rural and urban, does not cover. But 194 IA, I missed this point. Rural agricultural land is not covered in 194 IA. Suppose if I am purchasing urban agricultural land, 194 IA, 1% logic will apply, 50 lakhs crossed. 194 LA, rural or urban, doesn't matter, because compulsory acquisition of urban agricultural land is exempt under 10 subsection 37. That's it. Clear. Next, 194M. 194M is applicable to individuals and HUF who are not covered under 194C, not covered under 194H, not covered under 194J, or they are making payment for personal or business, doesn't matter, but they are not covered under these three sections. I am paying for work, I am paying for professional fee or technical fee, I am paying for commission or brokerage, some amount I am paying for my business purpose or my personal, doesn't matter. I am not covered under those three sections. Am I liable to deduct TDS on payment to work, payment for professional, payment for brokerage? Should I deduct? Yes. If the annual amount is exceeding, 50 lakh, if the annual amount is exceeding 50 lakh, you should deduct TDS. Okay, at what rate? Up to 30th September, whatever the amount is belonging to, 5%. From 1st October, if at all you are paying the amount, 2%. Remember, threshold limit is not separate for October and separate for, before October and after. Year full, how much amount paid? 50. Then up to September, 30 lakhs I paid, sir. After September, 40 lakhs I paid, sir. Then before October month, before 1st October, then up to 30th September, on this 5%, on this 2%, you will apply TDS. Are you clear? Remember, 5%, 2% logic is there. Once again, I'm repeating, 194G, 194H, 194IB, yes or no, 194M, and 194DA, insurance payment. In all these 5 sections, up to 30th September, 5% TDS, from 1st October, 2% TDS, yes or no? That's it. TAN number concept do not apply in this section also. Clear? Then 194N, TDS on cash withdrawal. You are withdrawing cash. Who is paying you? Bank is paying you. Post office is paying you. Cooperative bank is paying you. So this section is applicable for banks, societies, cooperative banks, and post offices. Then they need to deduct TDS when you are withdrawing cash. Then yes, sir. Suppose society is withdrawing cash. What is the limit when the TDS shall be deducted? Others are withdrawing cash when they need to deduct. Others, in the last 3 years, 1 year at least you filed ITR. In the last 3 years, current year you ignore. You're withdrawing now. 24-25 you're withdrawing. We will see 23-24, 22-23, 21-22. In these 3 years, have you filed return of income? I'll ask. Yeah, you filed it. Then no problem. Above up to 1 crore, no TDS. 1 crore cross, 2% TDS. Sir, last 3 years, all the 3 years I'm not a ITR. I'm not filing ITR. I'm a non-filer. Technically. Then the moment 20 lakhs cross, TDS will apply. Up to 20 lakhs, banks cannot question. The moment 20 lakhs cross, up to 1 crore, 2% TDS. Beyond 1 crore, if you are withdrawing, 5% TDS. For cooperative society, instead of 1 crore, it is 3 crore limit. Instead of 1 crore, it is 3 crore limit. Society, suppose cooperative society is withdrawing cash. They filed ITR, sir. Then beyond 3 crore, only 2% TDS. Sir, they are not filing ITR. First to 20, no TDS. From after 20 to 3 crore, 2%. Beyond 3 crore, 5%. That's it. Are you clear? By the way, ITR filed means what? ITR filed within due date only will be considered. If at all in the last 3 years, I filed ITR after due date, then I will be treated as not filed only. Able to understand. Next, by the way, if the amount is withdrawn by government, if the amount is withdrawn by banks, if the amount is withdrawn by business correspondents of the bank, if the amount is withdrawn by ATM operators, if the amount is withdrawn by notified persons, for them no TDS will be applicable under 194N. Yes or no? Easy or not? That's 194P, pension. 194P, pension. 192, 192A, 194P. All the three are dealing with salary related heads only. 194P, for whom it is applicable. Suppose I am an individual resident, aged 75 or more, and I have a bank account with one bank called State Bank of India. Only with them I have a bank account. I don't have bank at anywhere else. I get pension money from my ex-employer. In the same bank account I receive. With the same State Bank of India, I'm having fixed deposit, time deposit, something I have. I'm getting interest. I don't have any other income. Then this section calls me specified senior citizen. The The State Bank of India, where I'm having bank account, right, from where I am receiving my pension amount, from where I'm receiving my interest amount, where I don't have any other interest or any other income from any other bank, yes or no, then the State Bank of India is called as a specified bank. Now I will go to State Bank of India, I will give a declaration under 194P to State Bank of India that I don't have any income, I don't have any bank account, I don't have any income, I get only pension income, I get interest income, both are received through your bank account only. Then the State Bank of India will take the declaration, they will compute your gross total income, they will compute your chapter 6 deduction, they will compute your total income, they will compute your tax liability, and that tax liability State Bank of India will deduct from you. They will deduct from you at the time of payment of pension and interest to you. They will deduct from you and pay to the income tax department. Now what is the benefit here for me? I am exempted from IT return no matter how much my income is. Doesn't matter. I am exempted from filing IT return because State Bank of India is deducting my entire income tax liability, including surcharge, including cess, everything they are deducting. Yes or no? Just like in 192, how you compute employee tax liability, here bank will compute senior citizens tax liability. Yes or no? So they will deduct TDS and then pay to the government. Are you clear? So that's it. So recipient is who? Specified senior citizen. Payer is who? Specified bank. When a bank is called as specified bank, when a bank, they are not earning any other income except pension and interest which is credited with the specified bank. Yes or no? That's it. Easy. 194P not a big deal. Yes or no? Then 194Q. Where real complexity. Okay, fine. Before 194Q, I will discuss 194R. What is 194R? I am a businessman. My dealer is giving me a gift because I achieved some target. Cash or kind of something is giving me. That is called as a perquisite for me under PGBP, which is taxable under charging section 28 PGBP. I am receiving a perquisite. I am receiving a benefit. Who is giving me? My dealer. Now the dealer has to deduct TDS because dealer is the person who is giving. I am giving to my wholesaler or retailer on meeting some targets. I am giving them a gift, a refrigerator, car, something I am giving gift. I should deduct TDS if the annual value of the gift is more than 20,000. If the perquisite value, benefit value is more than 20,000. At what rate? 10%. By the way, which dealer has to deduct TDS? Only if he is any person or individual in HUF where turnover is more than 1 crore or receipts are more than 50 lakh. Then only for me this 194R section is applicable. And then I am giving a perquisite to my wholesaler, retailer, business people. I am giving some gift to my wholesaler, retailer or some business people. Yes or no? Then TDS will apply. Are you clear? Yes or no? It's easy. Give to any benefit or perquisite convertible into money or not. Doesn't matter. Is it a cash or is it a kind of? Doesn't matter. Clear? Next, 194Q, which is linked with 206C 1H. Yes or no? 1 minute. 2 minutes, we'll take a gap and then continue this. Yes, let's continue the discussion. Okay. 194Q. Suppose you are buying goods from a seller. Generally, goods purchase and sale, no. Goods transactions, no. They are subject to TCS only generally. But there is one section called 194Q which is applicable for the buyer but not the seller. Suppose if I am buying goods, I am a buyer. This section is applicable to me when when my preceding year turnover is crossing 10 crore. Then only this section is applicable to me. When my preceding year turnover is exceeding 10 crore, then only for the buyer this section is applicable. Okay, to whom he is paying? Seller. For what he is paying? For purchase of goods. Which goods? Any goods. Doesn't matter. I am a buyer paying money to the seller for purchase of goods. Are you getting it? Suppose if the goods are covered under 206C, if the goods are covered under 206C timber, 206C1 timber, 206C 1F car. Yes or no? These two sections, foreign currency I am purchasing, 206C 1G. For these goods, this section do not apply. However, remaining goods I am buying, then this section is applicable. Sometimes for seller, there is another section called 206C 1H. That section says, if at all you are buying, you are selling any goods. For seller, this section is talking about whom? Seller. This section says, if you are selling any goods, and you are selling any goods other than timber, forest, tendu leaves, scrap, yes or no, notified goods under 206C1, motor vehicle, notified goods under 1F, foreign currency, you are saying, other than that remaining goods you are selling. then 206C 1H is applicable. So which goods are covered under 194Q? Which goods are covered under 206C 1H? Same goods. 206C 1H, what goods are covered? 194Q, what goods are covered? Both are same. In both the section, all goods are covered except 206C 1 goods, 206C 1F goods, 206C 1G goods. Except these three, remaining all other goods are covered under these two sections. Are you getting it? Now 206C 1H says seller whose last year turnover is more than 10 crore. If at all you are selling to a single buyer for more than 50 lakh in a year, seller has to collect, what is it? Seller has to collect 0.1% of consideration, which is including GST. Value of consideration is exceeding 50 lakh. For determining value of consideration, GST component also you will consider in TCS provision 206C 1H. Are you getting it? So if it is more than 50 lakhs worth of goods to the buyer you are selling in a year, including GST, you must deduct TDS at 0.1%. Sorry, you must collect TCS at 0.1% from the buyer. Okay, this is 206C 1H says. What 194Q says, if a buyer is buying goods exceeding 50 lakh in a year, if at all is buying goods exceeding 50 lakh in a year, buyer has to deduct 0.1% of the amount paid to seller for the amount which is more than 50 lakh. Up to 50 lakhs don't deduct. This is a slab limit, not a threshold limit. In TCS and here 194Q, 206C 1H, in both these sections it's a slab limit only. Only for these two sections it's a slab limit. Yes or no? It's not a threshold limit. Buyer, for example, okay, there is a buyer and buying goods from seller. At what price? 1 crore. 1 crore worth of goods I am buying. By the way, this is not covered under, these goods are not covered under 206C subsection 1, 206C subsection 1F, 206C subsection 1G. Because in all these three sections, goods only covered. Foreign currency is also called as goods only, technically. So in these sections, it is not covered. Remaining goods you are buying. Remaining goods only seller is selling. Then for seller, 206C section 1H is applicable. For buyer, 194Q is applicable. 194Q says 0.1% deduct. Yes or no? Deduct on 1 crore, right? But only on 50 lakhs you will deduct. Up to 50 lakhs you don't deduct. 0.1% on 50 lakh means what? 5,000, which means after deduction 99 lakh, 99,000, 95,000. Correct? Sorry, 99 lakh, 95,000. Simple. 99 lakh, 95,000 you should pay to seller. This is what 194Q section says. But what 206C section says, 206C, 1 crore, right? Yes or no? Plus 0.1% on 50 lakh, which is 5,000, is equal to 1 crore 5,000 rupees collect from buyer. 206C 1H section says to the seller, you collect 1 crore 5,000 from buyer. But 194Q section says to the buyer, you pay only 99 lakh 95,000. Both the sections are saying different amount. Buyer will say, I will pay 99 lakh 95. Seller will say, no, you should pay me 1 crore 5,000. For me, TCS section is applicable. If both the sections are applicable on the same transaction, then TDS will apply. 194 section will win. Yes or no? Now, by the way, 194Q is applicable to buyer whose preceding financial year turnover is more than 10 crore. Seller whose preceding financial year turnover is exceeding 10 crore. Suppose buyer turnover last year is less than 10 crore. Then 194Q do not apply to buyer. Automatically 206C 1H is applicable. Are you clear? Suppose buyer turnover is less than 10 crore. Seller turnover is also less than 10 crore. Both the sections will not apply to buyer and seller. The transaction is exempted under TDS. Yes or no? All of you, suppose let us assume you are buying 1 crore, right? Let us assume you are buying a car worth of 1 crore. Suppose you are buying a car worth of 1 crore. Car is not covered under 194Q, 206C 1H because car is covered under 1F. Automatically seller only has to collect TCS. If any good is covered under 206C 1, 206C 1F, yes or no? If at all goods are subject to TCS under 206C 1, 206C 1F, 206C 1G, then 206C only will apply. Only if the goods are covered under 1H category, then 194Q also we have to check. If both are applicable, 194Q will prevail over. That's it. Section is over. 194Q, 206C, 1C, 1H. Easy or not? All of you. Then directly. So that's it. If both the sections apply, tax shall be deducted under 194Q. Now let's begin TCS. Okay, just a minute. Yeah, now let's continue TCS. Then finally we will come back to administrative provisions. Okay, 206C TCS. What is the section says? You know, there are totally 5 sections in TCS. Subsection 1, 1C, 1F, 1G, 1H. 1H just now we completed, correct? Yes or no? Now in 194Q and 194H, one more point is there. Suppose no 194Q, buyer only has to deduct. If seller is not giving PAN number, then maximum TDS rate is 5%. Yes or no? Suppose 206C 1H is applicable. Seller has to collect TCS from buyer. Buyer is not giving PAN number. 1% will apply. Then 1% in 206C 1H, no, here higher rate of TCS. If buyer is not giving PAN number to seller, seller has to deduct at TDS at higher rate 5%, but max 1% in case of 206C 1H. Yes or no? 194Q, if at all buyer has to deduct TDS, buyer has to deduct TDS when they are paying to seller, seller is not giving PAN number. Generally maximum TDS rate is what here? Maximum TDS rate is what there? Maximum TDS rate is what? 20%. But under 194Q, maximum TDS rate is 5%. Yes or no? That's it. Then remaining provisions I'll come back to it later. Okay. Then suppose no specified goods you are selling. What are they? Minerals, not mineral oil. Okay. Scrap, other forest produce, timber, alcohol, tendu leaves. Then these are the rates at which TDS will be applicable. This you see later. Okay. Sir, I am giving him parking lot, I am giving him toll plaza, I am giving him some quarry or license. For that I am getting some compensation. Yes or no? I should also collect 2% TCS. I am selling motor vehicle to him where the value is exceeding 10 lakh. You know where the value, here each car value should see only X showroom price, bike value, X showroom price, car, bike, bus, lorry, whatever, vehicle, X showroom price is more than 10 lakhs. X showroom means what? Including GST. Under TCS provisions, every sale value means including GST. Are you clear? Then recently one more point added for notified goods from 1st January. This is recently added for the first time for May 25 exams, latest amendment. Notified goods, what are they? They didn't mention. Notified goods are also covered under 1F, which means a seller has to collect if vehicle value is exceeding 10 lakh, 1%. For notified goods straight away, 1%. Clear? Next, 1H is already over. Now let us discuss 1G. 1G is dealing with what? Sub 1G is dealing with 2 types. Overseas tour package, remittances. What is it? Remittances. Remittances under LRS scheme. Are you getting it? Overseas tour package, separate 7 lakhs limit. Remaining remittances all put together, 7 lakhs the basic exemption limit. Getting it? Now for overseas tour package, first 7 lakhs rupees worth of payment straight away 5% TDS. If the amount is exceeding 7 lakh, 20% TCS. In our class, no regular, no, we already solved our some past exam question or MTP questions we solved. Yes or no? That's it. Sir, I am remitting for some other purpose, not overseas tour package. I am not purchasing any foreign tour package. Getting it? Foreign tour package, if you are purchasing straight away, 5% up to 7 lakhs. 7 lakhs it crossed on the extra amount, 20%. Sir, I am not for foreign tour package. I am paying for some other purpose. What? Education and medical. Here add word medical and medical. You are paying for education and medical. Then first 7 lakhs, 0. 7 lakhs crossed, 5% TDS. If at all the amount is crossed, 7 lakh, 5%. Sir, it amount crossed 7, sir. Education purpose on I am paying, sir. But out of loan, education loan we are paying. Then 0.5% is the TCS. Then what is the TCS? 0.5% is the TCS to be collected by foreign currency dealer who is remitting foreign currency on behalf of remitter. From remitter they should collect the TCS. Yes or no? Sir, I am remitting for some other purpose. Any purpose you remit, first 7 lakhs in a year is exempted. In the year 24-25 you are remitting. First I will ask you, for what purpose? Overseas tour package, straight away 5%, 20% as usual. Remaining amount, first 7 lakhs I will not ask any question, exempt. Beyond 7 lakhs you are remitting. For what purpose? Education and medical, sir, then 5%. Education for loan, out of loan, 0.5. Some other purpose, 20%. Some other purpose you are remitting. Suppose you are gifting to your cousin abroad. Yes or no? You are remitting some cash amount abroad, foreign currency remittance. Yes or no? 7 lakhs crossed in a full year, straight away 20%. Now many students misinterpret here. 7 lakhs for education separately, for other purpose separately. No, whatever purpose you are remitting, up to 7 lakhs is exempted in year. FIFO basis calculate the limit. Okay na? April to March is there. I remitted 7 lakhs through foreign currency dealer, not overseas tour package. Overseas tour package is a separate provision altogether. I am remitting some money through foreign currency dealer. Up to 7 lakhs, he will not ask me any question. 0. 7 lakhs crossed. 2 lakhs I am remitting now today. 7 lakhs already crossed. 2 lakhs I am remitting. For what purpose? Medical purpose, 5%. Another 2 lakhs I remitted. For what purpose? Education purpose, 5%. Some 10 lakhs I am remitting. For what purpose? Education purpose, out of loan, 0.5%. I am remitting some another 2 lakhs or 4 lakhs. What purpose? Some other purpose, not education or medical, 20% TCS. First 7 lakh, no questions asked. That's it. 1G section over. Easy or not? Then who is a seller? From subsection 1F point of view, same. I told you, remember, for 8 sections the seller definition, the person who has to collect TCS, the person who has to deduct TDS is same. 1H, turnover must exceed 10 crore. Now under 1, no, timber, tendu leaves, scrap, all that is there, right? Seller of timber, tendu leaves, all that they should collect TCS, no, scrap at 1, no, 2.5%, 5%, something like that, yes or no? But if the buyer is purchasing for manufacturing purpose, for his personal consumption, not for reselling it, no TCS. 206(1)(f), car we are selling, motor vehicle we are selling. Motor vehicle we are selling to whom? Road transport company. Public sector company engaged in road transport. Public sector company engaged in transportation of passengers. Nothing but road transport corporations you are selling. Yes or no? No TCS. 1H for importers, for exporters it will not apply, because exporters exporting goods means he is selling goods to the importer in India. How exporter can comply with Indian TCS provisions and also he can't. So he will not have to deduct. Yes or no? TCS provisions are not at all applicable if the buyer is a public sector, government to high commission, embassy. That's it. Over. Now we still have 2 or 3 more provisions. Getting it? Now there are some administrative provisions. What are administrative provisions? Important provision I will discuss. TDS. Payer has to deduct, no? While amount is paid to payee. Suppose if the payee does not give PAN number, then TDS will be deducted at 2 times the section rate or 20%, whichever is higher. And for 194Q, for goods purchase related, 5% max. Yes or no? Same way in 206CC also, same logic, which is applicable for seller of the TCS. Suppose I am selling goods, buyer is not giving me PAN, then at what rate I should deduct TCS? 2 times of the section rate or 5% maximum TCS. But if it is 206C 1H, 1% is the maximum TCS. By the way, overall, if it is 2 times, no. 2 times means what? For example, 1G, foreign remittance is there, 20% is there. Maximum TCS rate cannot exceed 20. In TCS section only maximum TCS rate is given. In TDS, no, non-furnishing of PAN, maximum rate they have not given. Yes or no? Minimum rate is 20, we know. Maximum rate there is no. 206 AA. That's it. Again, higher rate of TDS, higher rate of TCS is applicable if at all non-filer is there. Suppose I am selling goods to a buyer. He did not file his IT return in the last year. And in the last year, he has a TDS amount of more than 50,000 or TCS amount more than 50 or both. Yes or no? Last year, he has a TDS or TCS amount more than 50 and not filed IT return. Getting it? That time, 2 times of the tax or 5%. Maximum cannot exceed 20. 206C CCA. Same way, in TDS also, deductor, payer has to deduct. When paying amount to specified person who has not filed IT return in the last year and has a TDS or TCS minimum 50,000 or more, that time he should deduct 2 times the section rate or 5%, whichever is higher. This TDS section 206AB, high rate of TDS for non-filers, will not apply for salaried payments, pension payments, yes or no? 192, 192A, 192B, 194 IA, IB, 194M, here 6 you remove, and 194N. Are you clear? Easy or not? That's it. Suppose no, if both these sections apply, higher will be applicable. In TCS also 206CC, 206CCA, if both are applicable, whichever is higher, that rate you will collect. That's it. clear, all of you? Then what is the responsibility of the person deducting the tax? Simple. Whatever the tax you deducted, by next month 7th day you should pay it. For March month, by next month 30 you should pay. Not only paying challan, you should also file ETDS statement. You should also file ETDS statements, correct? You should file quarterly statements. Quarterly statements means what? Q1 30th June quarter ending, 31st July you should file ETDS statement. Q2 30th September quarter ending, 31st October you should file return. Q3 31st January you should file the return. Q4 2 months time limit, 31st May you should file the TDS return. So the person who is deducting or collecting, they have a responsibility to file ETDS statement. Quarterly they should file, monthly they should pay. Monthly then they should pay April month TDS TCS 7th of next month. April, May, June up to February 7th of next month you should pay. March month alone by 30th April you should pay to the government through challan. Yes or no? That's it. Suppose I failed to deduct or I failed to remit, then I am liable to pay interest. If I am failing to deduct 1% per month or part of a month, per month or part of a month means calendar month. We already did one illustration also in the class. Yes or no? Then from which date? From deductible date. So date of payment they will give no that date. June month it is that date. You ultimately deducted in January month. Total June, July, August, September, October, November, December and January. So June to December, 7 months and January. Total 8 months will apply. Yes or no? Don't calculate month means 7th of this month means next month 6th, 1 month. No, that's not how it is to be calculated. June month you deducted. 10 days only there in the June month. Full month you will consider. January 5th you deducted ultimately. January also you will consider. Yes or no? 1% till the date of deduction. So date on which you are liable, check out. Date of deduction you check out. What are all months involved, check out. That's it. That many months. Finally, you deducted in January. You should pay by 7th February, right? But you didn't pay. You paid on 7th July. You deducted in January and you paid on July month. Yes or no? So now January month deduction is, January means due date for payment is what? 7th February. Generally students will compute interest from 7th February onwards. No. In case of late remittance, 1.5% is the rate of interest. Interest is calculated from deduction date itself. Deduction date is in January. January month you should calculate 1.5% interest. You ultimately paid in when? July month. Up to July month, 7 months you should calculate 1.5% per month interest from deduction date till remittance. That way I gave intentionally due date onwards and I striked off. Are you clear? Then SSC in default and all is that, that's okay, not that required. Okay, I already discussed enough in the class also. I clearly discussed on this. Clear or not? That's it. So with this, TDS and TCS provisions are fully completed. Confident? Yes. Okay, advanced tax. I will discuss briefly the advanced tax provision. The crux I will discuss. Okay, advanced tax liability. The provisions are covered under 207 to 219. The charging section is 208, 207 and 208. Both are talking about applicability. Advanced tax provision does not apply to a resident senior citizen who do not have PGBP income. Advanced tax liability will arise in the current year if my gross tax liability minus TDS and TCS, estimated gross tax identify, estimated TDS TCS identify, gross tax minus estimated TCS TDS you reduce, balance tax payable you will get estimate. If that is more than 10,000, if it is more than 10,000 or more than 10,000, you have to pay advanced tax. Now this tax payable amount you should pay in the form of advanced tax. When and all you should pay 4 installments. On or before 15th June, 15% of the tax payable amount you should have discharged. On or before 15th December, minimum 45% of the tax payable you should discharge. On or before 15th December, minimum 75% of the tax payable you should discharge. On or before 15th March, 100% you should discharge. Are you getting it? So each installment, how much you will pay? Simple. Here you will pay 15, 30, 30 and balance will be 25. Totally 100 amount, 100% of the tax payable you will be depositing. So cumulatively 45, cumulatively 75, cumulatively 100. That's it. This is how advanced tax mechanism has to work. Are you clear? Now, sir, for example, no, I didn't pay advanced tax. By the way, 4 installments logic is applicable for every SSE. However, suppose I am an SSE who is declaring income under presumptive basis under AD and ADA, but not AE. For For these SSEs, only single installment applicable. Only single installment is applicable. Amount paid up to 31st. Okay, single installment. By the way, up to 15th March, advance tax 4th installment, correct? Single installments. By 15th March, you pay 100% of the tax payable, enough. March 15th later also you paid some tax, but on or before 31st March, that is also treated as advance tax. Suppose I did not pay like this. 4 installments are there. I paid, but that is not enough. Then I am liable for interest on short payment of advance tax. I am liable for interest on short payment of installment. Interest, I am liable for short payment of installment. How should I compute the shortfall? Very simple. In exam you should compute. In exam they'll give you a problem. They will give you IT return income, how much they will give you. For example, 10 lakhs they gave. Income, how much they gave? 10 lakhs. On that, compute tax liability. For example, 1 lakh only the tax is coming. How much is the tax is coming? 1 lakh. Getting it? Now, how to compute the problem under 234C? Interest under 234C is applicable. Now, 15th June, first installment, 15th September, 15th December, 15th March. How much you will pay? Minimum 15,000 you must have paid. By 15th June, 45,000 must be there in the advance tax account. By 15th December, 75,000 must be there. By 15th March, 1 lakh must be there. But you know what? SSE paid here 10,000 only. SSE here, second installment he paid 20,000. Totally he paid how much? 30,000. Third installment he paid 20. Totally he paid 50,000. Fourth installment he paid another 20, where he is making it totally 70. Cumulatively how much paid you should always identify. Don't put amount paid in each installment. Put cumulative amount paid up to date. Then identify shortfall. Identify shortfall. How much it is? 5,000. How much it is? 15,000. Shortfall means what? This minus this. This minus this. This minus this is equal to how much it is? 25,000 shortfall. Here it is 30,000 rupees shortfall. Then interest will be applicable. At what rate? Into 3 months into 1%. Into 3 months into 1%. Into 3 months into 1%. What is the logic? I already told in our regular class clearly. We computed alternative mechanism also. Yes or no? Is equal to how much? 5,000 into 1%. 50 into 3 months. 150. Here it is 450. Here it is 750. Here it is 300. What is the total interest under advance tax? 600 plus 1050. 1700. 1650. That's it. That is the interest computation. That's how you must do advance tax interest. Watch once again. You will understand the process. This is how you must do. In exam they will give you IT return, how much income they gave, returned income, or sometimes they'll give you total income of the SSE. So total income they'll give you. Find out gross tax liability minus TDS and all you reduce. Balance amount is more than 10,000. Then advance tax obligation will apply. This amount is tax payable only. In this example, TDS is not there. Let us assume. So allocate each installment. How much they paid, they will give you. Sometimes they will pay 0. Then on the entire shortfall, you should calculate interest like this. 3 months, 3 months, 3 months and 1 month. Yes or no? Now, for first installment and second installment shortfall, no. Before you calculate interest, one checkpoint is there. Here you paid how much? 10,000. You are supposed to pay how much? 15. Okay. Percentage if you see, 10% only you paid. Second installment you paid 30% only is there as part of tax payable. But the section says what, if the first installment is minimum 12, second installment minimum 36. By second installment due date, minimum liability, how much you paid? Minimum 36 you paid. First installment minimum 12 you paid. If at all minimum 12 and minimum 36 says there, even though shortfall is there, no interest at all. No interest. This is only a checkpoint. Many students know, they think 12% applicable here, 36% applicable, and they calculate shortfall like that. Never. Shortfall is calculated 15, 45. Based on that only shortfall is calculated. But interest amount should I compute? First installment shortfall, second installment shortfall. Should I compute interest amount? This is the question. Interest amount is exempted for first installment shortfall, second installment shortfall. If the advance tax paid paid in first installment is minimum 12% of tax payable. Total advance tax paid by second installment due date is minimum 36% of tax payable. Then for first and second installment, no need to calculate interest at all. Even though there is a shortfall, SSE paid 12 or 13, which is less than 15. SSE paid 36 or 40%, which is less than 45. Shortfall is there, but exemption is given. And I told you why there is a logic. Why? What is the logic behind this? I already told you. This is how you should compute 234C interest. Clear? Now remember, in 234C you are calculating shortfall interest amount only up to March month, but you are filing IT return in July or August or September or October, somewhere you are filing. You are paying pending amount of tax in July, August, somewhere you are paying. What about the remaining period? Delay, no, you are paying late only. No, advance tax you didn't pay. For late payment only they are collecting interest. What about interest from April month of assessment year? 234B section will apply. As per 234B, as on 1st April of the assessment year, identify shortfall. How to identify shortfall? Gross tax liability you compute based on assessed income. Based on assessed income. Assessed income means what? 143 subsection 1, 143 subsection 3. In the IT return order, income tax order you will get. In that, how much is the total income? Identify. Sometimes, when you're doing a problem, they will not give you assessed income. Income tax order information they will not give. That time, IT return income only you should consider. That time, IT return income, how much you declared only you should consider. So, based on that, gross tax minus TDS minus up to 31st March of the previous year you paid advance tax rate, that also you reduce, then you get a shortfall. Are you getting it? How to? So gross tax liability, for example, 1,20,000 minus TDS 20,000, balance tax payable 1 lakh, and you know what? Up to 31st March 70,000 only I paid. So as on 1st April 30,000 shortfall is as it is there. Now 234B interest is applicable at what rate? On the shortfall 1% per month. For how many months? April month onwards till you pay this pending amount. You clear pending amount 30,000. Then until the date, or assessment order pass date is there. In exam they will give you assessment order date. 143.1 intimation date, 143.3 assessment order date. Up to that month you will calculate interest. If nothing is given, they only mention about 30,000 he settled with the income tax, then up to settlement date. Are you clear? Generally we will compute this up to due date. 4 months in case of July, in case of October 7 months. Due date if it is October, no, then 7 months we compute, because generally this amount will be paid by SSE in due date. When they are filing IT return, that time they will pay. Suppose if the SSE paid this amount much more earlier, then up to payment date, how many months involved? For that many months only 1% per month we will calculate. Again, this interest calculation is exempt. When look at this. If up to 31st March, whatever amount paid is there, right? If it is more than 90% of tax payable, more than 90% of the tax payable you paid in the form of advance tax, even though shortfall, suppose here 90,000 you paid, shortfall is 10,000 there as on 1st April, no need to pay 234B interest, because minimum 90% of your advance tax liability you paid. 234B is also over. Are you clear? Advance tax provision is over. But in advance tax, one concept is there which can be tested in exam regarding casual incomes. Theory question might be tested. Getting it? Theory question might be tested. What is this concept? Suppose you started recently the business, or you got a lottery income in December month, or you got a capital gains in December month, or you are getting dividend income in December month. Because of this shortfall is there in June and September. Your income itself is in December. How come shortfall will be there in June and September? Don't consider this income related tax portion when you are calculating shortfall in June and September. Now, only one condition. You got capital gains in December, March installment, you pay tax on that fully. No 234C interest. That's it. 234C, 234B, applicability, exemption of advance tax, presumptive taxation, everything I covered in 10 minutes. 11 minutes hardly. I clearly covered. Now what is your duty? Listen to this once again, okay? Then read the provisions given in this book. You will get supreme clarity on advance tax. That's it. Clear? Let's begin total income chapter, where we are only having one provision to discuss. You know, in ICA book, no, if you open this chapter, no, total income chapter, no, there is so much of unnecessary discussion and all is there. Once again, they'll talk about all the provisions, default tax, all that, not required. What is the most relevant provision in the total income chapter that I am covering here? Rest of the points which are there in total income chapter in ICA book, no, they are all covered in other chapters for us. That content unnecessary confusing you, no, don't go for it. AMT provision, total income and AMT, alternate minimum tax. What is alternate minimum tax? Suppose, no, by the way, the sections are 115 JEE and JC, both are dealing with only same concept. Okay, one section is talking about applicability, another section is talking about procedure. That's it. One is talking about applicability, one is talking about the procedure. JC talks about the procedure. Okay, JEE is talking mainly about the applicability. Now, what these sections are saying? Suppose, no, any person other than company, because for companies, AMT, MAT, there is another provision, 115 JB is there. For company, there is another section called 115 JB, which is not there for in our syllabus, CA intro. It is there only in CA final. What this section says? Any person who is claiming deduction under, look at this carefully, if this provision, introduction, if you do not understand, that's it, gone. Any person who is claiming deduction under chapter 6A heading C, not all chapter 6A, remember, heading C chapter 6A. What are heading C chapter 6A? Heading C chapter 6A, in our syllabus we have only 3 sections, AT, JJ, AA, QQB, RRB. Employee, additional employee cost deduction, those who are claiming deduction towards royalty income, those who are claiming chapter 6A, AT, JJ, AA, QQB, RRB, or other heading C deductions which we don't have in our syllabus. Yes or no? So SSCs who are claiming chapter 6A deductions other than ATP also we don't have in our syllabus, so don't worry. So in our syllabus we have only what? These 3 sections. So if the SSC is claiming deduction under these 3 sections of chapter 6A, or SSC claiming deduction under 10AA, or SSC is claiming deduction under 35AD, income based deductions, nothing but. If the SSC is claiming deductions for incomes, not all again, interest on savings deposit, that is not covered again here, by the way. Okay, SSC claiming deduction, these are all deductions given based on some business specialty. If the SSC is claiming deduction under 10AA, or if the SSC is claiming deduction for specified business capital expenditure under PGBB under 35AD, or if the SSC is claiming additional employee cost 30% deduction, QQB, RRB, royalty related deduction, then AMT provisions will apply. AMT provisions will apply. What is AMT provision? Purpose of AMT, I will tell you. Simple logic. You know, suppose, no, I started a 5-star hotel. I made a profits and gains from business or profession 10 crore before 35 AD deduction. Before 35 AD, that a capital expenditure before I claim, no, my revenue income minus revenue expense is equal 10 crore profit I have. But you know, hotel construction cost 200 crore, I claim a deduction now, building cost. Resultantly, my income reduced to negative 190. And what the section says, we have a section called 73A, you can carry forward for infinite number of years. So because of this, what is happening? SSCs are not at all paying tax. Same way, suppose I am incorporating a company in a special economic zone, I mean enterprise in a special economic zone, any entity, and I'm exporting, only export I have. Entirely I'm receiving in foreign currency within 6 months, 10 AA. Remember, we have already seen. My full profit is exempted, I literally pay 0 tax. Because these sections, no, they are bringing your income to 0 or negative, and where you are not paying any tax at all. But department want to collect minimum some tax. But they gave deduction, no, they can't collect it, no, because you have a negative income here. As per your section logic, it is a negative income. But what department is doing, you know, they bought a section called 115 JEE and JC. What they are saying is, let me compute AMT for you. Let me compute alternate minimum tax for you. What the section says, so your income is what? 10 crore. Add back the deduction. How much deduction you claim? 200. Sorry. You are having loss of 190. You are having loss of 190 crore. Do one thing. Add back 200 crore deduction. Yes or no? Now how much is your income? Crore. Correct? Before adding the deduction, how much is your income? 10 crore. 35 AD deduction, 10 AA deduction, QQB, RRB, JJAA deduction. If at all you claimed, you first see, always first calculate as per normal. Whatever rules applicable, calculate total income. Add back these 3 deductions. Now see how much is the income. Department is asking pay 18.5% tax on. Pay 18.5% tax on this. How much? 1.85 crore. Pay through challan plus cess and all, add and pay. Pay minimum tax. This is the minimum tax you pay. Arey sir, you told me I am having 35 AD deduction. All these days I am thinking, all these days we are thinking my income is negative. I don't have any tax liability. Now you are saying you will add back and then collecting tax again. Then what is the purpose of the section? Don't worry. The department is saying you are paying this 1.85 crore now in cash right to me. Tax payment is over, right? This amount I will give you as AMT credit. I will give you this amount as what? AMT credit. This amount I will give you as, remember the section is actually little more different is there. First I am telling you basic how the section works. I am first telling you how basic section works. AMT credit I will give you first. I will give you. What will I do with this, sir? Next year you will calculate normal provisions based income tax, right? Suppose next year, no, your revenue income minus revenue profit is equal to 20 crore is there. That time you don't have 35 AD deduction. How many times you will invest? First year only you will invest in business. Second year also you constructed another building. No sir, second year and all I don't have. Okay, that in the second year, no, business, no, I don't have 35 AD deduction. 10 year not there, nothing is there. On normal income, 30% tax is equal to how much? 6 crore. Are you getting it? On 6 crore, this amount you set off. This amount you set off. Indirectly, what are they saying? In the year in which you claim a deduction, I will give you deduction. You show your loss, carry forward loss, everything is same. But when you are computing tax liability, no, at that time alone AMT provision will apply. Remember, AMT is not applicable for total income computation. AMT provision we should apply at the time of tax computation. Does AMT computation have any impact on set off, carry forward, gross total income computation? No. It is only a tax computation time you should do working note. That's it. AMT is just a working note at the time of tax computation. Minimum how much I should pay tax. For that reason only AMT you are doing. Are you getting it? So compute tax. AMT you pay. So every year as per AMT, whatever tax comes, that minimum you should pay. Beyond AMT you have a tax in normal regime only. Normally only you have 6 crore tax. Suppose in second year also I claimed 35 AD deduction. I claim 10 year deduction, something is there. But as per AMT, 2 crore only coming in the second year. But as per normal provisions, 6 crore tax is there. That time AMT will not apply. Normal provision will apply. That time what is applicable? AMT will not apply. Normal will apply. Remember, once again. Sir, I claim a deduction under 10 AA. I claim a deduction under 35 AD. Or I claim a deduction under 80 JJAA, QQB, RRP. Okay, you claim a deduction. You claim deduction, compute total income, all that. You compute total income, some amount is there. Compute tax on that, 5 crore is coming, for example. You compute your normal tax liabilities, how much is coming? 5 crore. Very good. Keep it aside. Don't pay this amount directly. Compute AMT now. How do I compute AMT? Your total income is there, right? For that, add back 35 AD, 10 AA, 80 series deductions, all that you claimed, right? Add back. Now you get some income, right? This is called as adjusted total income. This is called as what? Adjusted total income. The word adjusted total income is used here, ATG, but the meaning is altogether different. Compute adjusted total income. By the way, this entire working I should do in rough notes only. This is not affecting my income computation, set off and carry forward provision, nothing. My income tax computation is always same. My total income computation and all is this only. This is only for working note purpose, yes or no? Now, total income you take, add back the deductions, you get some amount on this. Straight away apply 18.5% tax. Straight away apply 18.5. Sir, this amount comes 7 crores, sir. This amount comes 7. Oh, as per normal income tax, your tax liability is 5 only, but as per AMT, 7 is there. You must pay alternate minimum tax. This is a minimum tax you must always pay. 7 crore you pay. Anyhow, you are liable to pay 5 crore, no? 7 crore because of AMT you paid, no? Now tell me, SSC problem is here what? Paying 7 crore is a problem, huh? Or paying more than 5 crore is a problem, huh? More than 5 crore is a problem. Do one thing. You paid extra in the form of AMT how much? 2 crore. This 2 crore I will give you as AMT credit. You can carry forward in the upcoming years. 15 years. You can carry forward for 15 years. What I will do after carry forward? Set off. Set off with regular income tax liability. Set off with regular income tax liability. Sir, okay, sir. This is year 1, sir. Year 1, no. Year 1, no. AMT credit is there, which is 2 crore. I will carry forward, sir. In year 2, no. I have regular tax, which is 4 crore. And I have AMT, which is 3 crore in year 2. Luckily, I have how much? 3 crore in year 2. Or else, let us assume 3.5 crore. How much I have? 3.5. Now, forget about year 1. Year 2, will I pay AMT or normal tax? Department clever. Hey, if normal tax is 4 crore, no, more than minimum, no, pay 4 crore only. But, sir, I have AMT credit, no. You told me I can set off, no. 4 crore minus 2 crore, balance 2 crore only should I pay? No. Minimum tax, AMT, whatever is there, I want to buy cash only always. To the extent of minimum 3.5 crore, I always want tax only, cash only. Department will not, out of 4, no. 3.5 crore is anyhow AMT you are liable, no. Extra how much you are paying? 50 lakh you are paying extra tax in the second year in normal provision. This 2 crore can be set off with this 50 lakhs. The 2 crore limit can be set off only with 50 lakh only. Whatever minimum 3.5 you are paying, no, that and all you should pay in cash only. Now tell me, balance AMT credit how much now? 1.5 crore is the balance. Again you carry forward 14 years. Again you carry forward for 14 years because year 1. By the way, in year 2, did you pay AMT? In year 2, did you pay AMT? No, you didn't pay. You paid only normal model applicable. AMT not apply. But to the extent of AMT liability, department will collect only in cash. Just because they are collecting in cash to the extent of AMT, does it mean are you paying AMT liability? You're not. You're paying normal tax liability. Why? The logic is what? AMT credit cannot be set off with AMT liability. Simple logic. Input tax credit cannot be used to set off input tax to be paid under reverse charge. Input tax liability you pay under reverse charge, no? Suppose if I have to pay in GST reverse charge, input tax, reverse charge tax, can I use my input tax and pay reverse charge tax? I cannot, because reverse charge is also input tax. Input tax you should pay, you should set off with output tax. You cannot set off with the same. AMT input credit can be set off only with regular income tax. It cannot be set off with AMT liability. Are you getting it? Don't worry, I will summarize. Indirectly, what are they saying? Suppose alternate minimum tax compute. Every year you compute AMT. By the way, you will compute AMT only when in that year, if the SSC claimed 35AD, NAA, JJAA, QQB, RRP. SSC claimed that deduction. Then to the total income, add back them. The adjusted total income you will get. On that 18.5% you compute. Then the tax is called as AMT minus. SSC, if AMT is not there, normal total income is there. As per that normal tax rate, 30% to special incomes, all the tax rate is there, right? You calculate regular tax. If AMT is more than regular tax, if it is positive, then you should pay AMT liability directly to the department, yes or no? And whatever tax amount paid under AMT in excess of regular tax, what is it? In excess of regular tax, that extra amount is called as AMT credit. Very good. AMT credit, what you can do? You can carry forward for 15 years. You can carry forward for 15 years. Against what you can set off? AMT credit you can set off against regular income tax in the next year, exceeding AMT liability in that year. In the second year, third year, like that, no. Calculate regular tax. Calculate AMT in that year also. Beyond AMT, how much extra regular tax you are getting? Something is there positive, then only you can set up with this. Sir, in second year also, my AMT is only higher than regular, sir. Which means in second year also AMT only applicable to me. Then what? No, then that time what you will do? No, AMT minus regular tax amount is there, right? That you will carry forward for another 15 years. Are you getting it? All of you. Simple. What is alternate minimum tax? Adjusted total income you compute. On that adjusted total income, apply 18.5% tax plus cess rate. Yes or no, 4% cess. All that you apply. Then whatever the tax you get is called as AMT. Are you clear? Here no, special incomes, 20% capital gains tax rate to 10% capital gains tax rate to 12.5% capital gains tax rate to 15% triple 1 year before amendment tax rate, that and all ignore. On adjusted total income, straight away tax rate is 18.5. Sir, adjusted total income consists of special income, sir, lottery income. Ignore. When you're calculating AMT, straight away entire income is taxable at 18.5%. Are you getting it? Now, okay, sir, AMT calculated. Now, what should I do? Compare this AMT with the normal tax, regular income tax payable. Is AMT more than regular income tax? Yes, sir. Then that excess amount is called as AMT credit. Getting it? By the way, AMT amount you should pay by challan. You should pay by challan. Now, immediately you might get a doubt. Sir, regular tax, optional tax regime, default tax regime. Optional tax regime only. You see, SSC, a person who is paying tax under default tax regime under 115 BAC, AMT itself will not apply. Logic is simple. 35 AD he can't claim. 80 JJA, QQB, RRB he can't claim. But remember, 80 JJA he can claim, no? 80 JJA he can claim under optional default, both the cases. But AMT provision will not apply if default tax regime is applicable. Simple logic. Suppose in the problem, no, SS is going for default tax regime. Blindly AMT question itself will not apply. Sir, SS is going optional tax regime. 35A deduction he is claiming. Or 10A he is claiming. 80 JJA, QQB, RRB he is claiming. Optional tax regimes are not default tax regime. Then AMT logic will apply. Are you getting it? Yes or no? So, now look at this. So excess amount is called as AMT credit. Please carry forward it for 15 years. This AMT credit, no, I can set off with regular tax amount which is in excess of AMT in that year. Are you getting it? Every year AMT will be there. For example, to the extent of AMT, always you should. Suppose in that year AMT itself is not there. Entire tax is regular tax. Then entire AMT credit I can set off with a regular tax. Here or not? Over. This is one of the tough provision, one of the toughest provision which many don't understand. Getting it? Simple logic like this. Clear all of you? Now look at this. How should I calculate? So when AMT is applicable, any person who is claiming deduction under these 5 sections, 10 AA, 35 AD, 80 JJAA, 80 QQB, 80 RRB, for them AMT is applicable. Exemption from AMT, non-applicability. When AMT does not apply, the individual is declaring income under default tax regime. If the SSC is declaring income under default tax regime, or there is one more, adjusted total income is not exceeding 20 lakh. Array small SSC, sir. Why for him also? Adjusted total income is not exceeding 20 lakhs. For individual, HUF, AOP, BOI, AJP, if the adjusted total income does not exceed 20 lakh, then AMT will not apply. Are you getting it? Sir, what is adjusted total income? First you calculate a total income, no? Normally you calculate a total income, no? How you calculated? After reducing 35 AD, after reducing 10 AA, after reducing 80 JJAA, QQB, RRB. Add back. Add 35 AD deduction. 35 AD deduction you claim, no? Add back. Deductions under 10 AA is there, no? Add back. Yes or no? And now tell, a deduction claimed under 80 JJAA, RRB also add back. Now actually you are not claiming deduction, right? Add back means what? You didn't claim deduction. Remember, capital expenditure under 35 AD, if at all I am not claiming, I am eligible for depreciation on that, right? Depreciation, additional depreciation, I am eligible on that, right? If at all I am not claiming 35 AD, reduce notional depreciation. What is it actually called as? notional depreciation for assets for which 35A deduction is claimed as if no deduction is claimed. Because no, in AMT computation purpose, no, you are adding back what? 35A deduction you claimed, you are adding back, means you are not claiming, no. That time you will get depreciation, no. That adjustment you do in exam, no. 99% of the students miss this point only. This point they will miss. They will add back 3580. They will compute very super fast, adjusted total income. They will pay 18.5. Entire answer is wrong. Depreciation they forgot. Depreciation they forgot to reduce. Are you getting the point? So, if at all 3580 deduction you claim, remember this logic will not apply for 10AA deduction, 80 JJAA, QQB, RRB. If at all SSE claimed 3580 deduction, add back when you are calculating adjusted total, less you calculate roughly on the same capital expenditure, depreciation will come. Now buildings 10%, plant and machinery 15%, computer 40%, like that. Calculate depreciation. Additional depreciation also calculate if it is a manufacturing activity. Reduce that depreciation. Notional depreciation we call. Are we really claiming depreciation here? We are not claiming at all, sir. We are claiming 3580 deduction, sir, as per our tax. As per our regular income tax provision, we are claiming 3580 deduction. I am not claiming depreciation at all. Then why are you claiming? Sir, here also I am not claiming, sir. I am computing adjusted total income for the purpose of computing tax liability. This is a working note. This is a rough note, working note in a tax liability purpose. AMT concept and all come at what stage? Tax liability computation stage only. It will not come at income computation stage. Yes or no? If at all somebody asks you what is SSC total income, normal income only. What is tax liability? Then wait, sir. I have a working note. Okay, normal income I will compute tax. AMT also I should compute. For AMT, I should compute ATI, adjusted total income. For computing adjusted total income, I should add back deduction under 35AD. Then I should reduce notional depreciation under section 32. Then I will get adjusted total income. If this adjusted total income is more than 20 lakh only, you will proceed further. If this adjusted total income is not exceeding 20 lakh, AMT provision itself will not apply. Yes or no? All of you, that's it. AMT is equal to what? Straight away 18.5% of ATI plus surcharge plus health and education cess. For surcharge, no, you will see adjusted total income limit with optional tax regime. Optional tax regime exceeding 1 crore but not exceeding 2 crore, exceeding 50 lakh, exceeding 2 crore, exceeding 5 crore. Yes or no? Optional tax regime, that limit 10%, 15%, 25%, 37% surcharge as the case may be. Then add cess. Are you clear? All of you? Yes or no? Then special incomes, if any, shall be ignored while computing. AMT, when you are computing, special incomes always ignore. Ignore means what? It's not reducing. Don't keep them in mind. Sir, for them separate tax rate. No, ignore. Entire adjusted total income is taxable at what rate? Straight away 18.5%. Correct? Now, what is the tax limit? Sir, I computed AMT, sir. Should I pay it? No. Wait, check. You have a checkpoint here. What checkpoint? If regular income tax payable by a person for a particular previous year as per normal provision is less than AMT, then adjusted total income shall be deemed to be total income of the person. AMT shall be payable through challan. Yes or no? Then if at all you paid AMT under 115 JC, AMT credit, you will get, what is AMT credit? Excess of AMT paid over regular income tax under the provision, that is called as AMT credit. What you will do with the credit? You will carry forward for set off up to a maximum period of 15 assessment years succeeding the assessment year in which AMT is computed. Correct? Okay, sir, I will carry forward. What I will do? Such credit can be set off against regular income tax payable. Full regular tax? No. Regular tax in that year which is in excess of exceeding AMT payable in that year. That is, an amount equal to AMT in every year must be paid by challan only. In other words, AMT credit cannot be set up with AMT liability in the subsequent years. It is just like an input tax under reverse charge mechanism. Yes or no? Now, sir, tax credit, no, can I even set off? Suppose I have a brought forward tax credit, sir. This year my adjusted total income is less than 20. AMT itself does not apply. Still doesn't matter. This year you have a regular income tax liability. Yes. AMT is not there. It's okay, no problem. Regular income tax is there, right? AMT credit is there. Set off. Yes or no? Tax credit is allowed even if the SSE is not claiming, sir, this year no deductions at all, sir. AMT itself is does not applicable, sir. Sir, moreover, I am going for default tax regime, sir. If at all you are claiming default tax regime, AMT credit will be lost. If at all you are claiming default tax regime, AMT credit will be completely lost. If you are going with optional tax regime, you can set off. Sir, in this year, I don't have any deduction under 10AA, 3580, nothing. AMT provision itself does not apply this year, sir. Still, your regular tax is there, you can set off AMT credit. No problem. Are you clear? Very simple. AMT credit can be carry forwarded and you can apply set off against regular income tax, which is in addition, which is in excess of AMT tax in that year. Sir, in that year, AMT tax is 0, sir. Still, you can set off. Are you clear? Sir, I am choosing default tax regime, sir, in the second year or third year. AMT credit will lapse. Now, just come back to our beginning page. Just come back to our beginning page. In AMT, here I will tell you, here I will show you. In the default tax regime, you see here, default tax regime. Okay, in the default tax regime, what happens? AMT liability, not at all liable for AMT. If at all SSE chooses default tax regime, correct? Look at the page number 18. AMT credit, not eligible for to claim AMT. You can't claim AMT credit itself. That will lapse. Able to understand? All of you. That's it. Once you choose default tax regime, AMT credit will be lost forever. Why? AMT credit is for whom? Business SSEs. AMT credit is for business. There is one more reason. Sir, who can go for default tax regime? Anybody. But there is one logic. Sir, SSE does not have PGBP income, sir. I am talking about default tax regime now. Sir, SSE does not have PGBP income, sir. Happily, he can go every year. He can happily choose every year whether to go with default or optional. Every year he can choose. Whichever is beneficial, he will opt that year. But SSE, who is having PGBP income, he must exercise this option, whether he will go with default or normal. Normal exercise, AMT provision is applicable. We will see all that. You choose default. You must choose it before filing IT return. Before the due date, you must choose that too. Sir, I choose a default tax regime, sir. Once exercised, all subsequent year default only. For example, sir, I want to withdraw, sir. Last year, I without knowledge, I choose a defaulter. I am losing 3580 all the benefits, sir, because I choose a default tax regime. I am losing all tax benefits, incentives, sir. I am losing. Okay, you withdraw. You withdraw. You can withdraw from the default tax regime. Which SSE I am talking about? SSE having PGBP income. SSE having PGBP income, he withdraw. So can withdraw option only once and pay tax under normal tax. Yes, sir, I did. Sir, next year again I want to pay under default. Sir. No, you cannot opt in. The business SSEs don't choose default tax. Go with optional. You choose in default. Pay only in default. You withdraw later. Forever you can't come back. Forever you can't. A business SSE came and choose a default tax regime. Later in the second year he withdrawn. Third year he withdrawn. Once earlier you declared under default tax regime and later now you withdrawn, you can never get back to default tax regime unless your business discontinued. Suppose you don't have a business income at all later on. Now you can again come back to optional default every year. Able to understand? All of you? Now look at this. Suppose I choose a default tax regime. AMT itself will not be there. AMT credit and all I will lost. Sir, I am not at all going for default tax regime, sir. Yes or no? Business SSE, sir. One time I choose, I am forever obliged. Or one time I withdraw, forever I will not have. So this is the risk I have. What should I do? Getting it? Happily go with optional tax regime. Pay alternate minimum tax, which is actually beneficial in reality. Are you clear? Everybody? Yes or no? That's it. So, annual exercise of option of shifting out. Compute income under both the regimes. Choose the regime whichever is beneficial. This option is there for SSE who do not have business income. For business SSEs, this option of choosing every year not applicable. You choose on one time, declare forever. You want to withdraw later, withdraw, no problem, I'll give you, but one time withdrawal only. You withdraw, you can't come back into default tax regime ever. And once you choose a default tax regime, remember all your AMT credit, everything will be lost. Later again, you withdraw on default, you are going back to optional, that credit can I brought forward, you can't do it. Are you clear? That is the punishment given to SSE who is choosing default. So SSE who is having 35 AD benefit, 10 AA benefit, they should go for default tax regime. That's tax advice I'm giving you. Tomorrow your clients, if at all they ask you, don't tell them to go with this. Are you clear? Now go back. Are you clear with AMT? Yes. Shall we do one problem on this? I will directly do the problem. Okay. Question number 12 in the total income topic. Fantastic provision. Question number 12 in total income chapter. I think this is TYK illustration. I'm not sure. You just see that. Okay. TYK only, I think. The illustrations, I think we don't have directly, all are TYK only in this chapter. Okay. Question number 12. Pause the video. Here they are asking, SSE is an individual. They are asking whether he should pay income tax on the default tax regime or normal tax, which means probably this might be his first year. So he is in dilemma. He is a business SSE. He has a doubt whether to go for default tax or whether to go for optional tax regime. He has a doubt. But remember, when he is going for optional tax regime, 35 AD, 10 AA, if at all these sections are there, he is liable for AMT also. But if at all he is going with the default tax, he can't claim any deduction. And he should pay tax as per default tax regime rates, and AMT and all does not apply. Correct? Fine. Okay. Now, let me compute. Pause the video. First you solve it. Okay. You solve along with me. Carefully you see. Mr. X, okay, an individual, he set up a unit in special economic zone for the year 1920 for production of washing machines. Okay, special economic zone, he produced washing machine. The unit fulfills all conditions of 10 AA. Very good. During the year 23-24, by the way, he started operations in 1920. So, okay, during the year, we are doing problem for 24-25, 1920 first year. Correct? Okay, 20-21, 21-22, 22-23, 23-24, we are in the 6th year. He can claim only 50% deduction of the export profit. Remember that. Fine. Next, in 23-24, he also set up, say, warehousing facility in the district of Tamil Nadu for storage of agricultural produce. Array, agricultural produce storage, warehouse, 35 AD business. It fulfills all the conditions of section 35 AD. Capital expenditure in respect of warehouse is 75 lakh, including land cost 10 lakh. You can claim 65 lakhs only deduction for building. Correct? You can't claim land cost under 35 AD. Yes, keep it. The warehouse became operational with effect from 1st April 2024 and expenditure 75 lakhs was capitalized. Oh, prior to operations, prior to commencement of business, 75 lakhs incurred. You can still claim deduction provided on opening date of the warehouse, on opening date of the business, the capital expenditure must be capitalized in the books. A condition also satisfied. 35 AD deduction he can claim. Yes or no? Next. They have given some details. Profits of the SEZ, how much? 40 lakh. Export turnover received in convertible foreign exchange within 6 months from the end of the financial year. 80 lakhs he received. Export turnover means only 80 you should consider now. Correct? Domestic sales of the above unit 20. Total sale is what? 1 crore. Yes or no? Then this is profit from 35 AD. Okay, fine. That I will come back to it later. Profit from warehouse before 35 AD deduction they gave. That's it. Compute income tax liability including AMT, all that as per regular provisions, as per normal default, which is better? They are asking yes or no. Now can I proceed? Now I will compute PGBP income computation. Correct? First 35 AD income I will compute. Warehouse. How much is the income? 1 crore 5 lakhs. Correct? Yes or no? Minus I am eligible for 35 AD deduction. No. How much deduction I am eligible for? 65 lakhs I am eligible for. So what is my balance income? 40 lakhs. Yes or no? Array, all of you. Then what is my SEZ profit totally? So where I have a factory, I have a factory, How much is the profit? Oh, profit located in SEZ is totally 40 lakhs. That is fully taxable under PGBP, right? What is the total profit? 40 lakh. Gross total income means what? I know, sir. What about 10A exemption? After GTA, you should do that adjustment. Yes or no? How much is that? 80 lakhs is my gross total minus 10AA deduction. How much is 10AA? Sir, profits of the SEZ 40 lakhs. Exports is 80 lakhs. Total sales is 1 crore. Remember, total sales, they didn't give information. They only told sales domestically 20 lakhs. See, export 80. Total sales means what? Are, yes or no? Yes or no, 1 crore. So how much is the deduction? 32 lakhs. How much is the 10AA deduction? 32 lakhs. What is the balance? Total income, how much? 48 lakh. Correct? Oh, wait a minute. Yes. 10AA. First itself I told. How much it? 50%. Ah, very good. How much? 16 lakh only he can claim deduction. Correct? So, how much is the tax total income? 80 minus 16. 64 lakh. Correct? Remember, if this question comes in exam, minimum 12 marks. Minimum 12 marks. 64. Okay, I will do one thing. First, I will compute income tax liability. Okay. By the way, SSC is who? SSC is individual, age not given, normal citizen I will assume. Yes or no? Fine. 64 lakhs, right? First I will compute basic tax. 64 lakhs basic tax is what? Very simple. Up to 10 lakh, 1,12,500. Correct? 54 lakh at the rate of 30% is equal to how much? 16 lakh 20,000. Correct? So total basic tax how much? 17 lakh 32,500 plus surcharge. Total income is exceeding 50 lakh. Surcharge is applicable at 10%. Yes or no? 1 crore 73 lakh 250. Correct? Subtotal 19 lakh 5,750. Yes or no? Plus cess at 4%. How much it is? 76,230. Okay, what is the gross tax liability? 81,980. Correct? That's it. Answer not yet over. This is tax liability under normal tax regime before considering AMT. Now I should also compute what? AMT liability, because SSC claim a deduction under 35 AD and he also claim a deduction under 10 AA. Now calculation of AMT. Correct? Until now everybody understood. Yeah. Now before I decide to pay this amount, I will first compute AMT. AMT liability. Fine. First total income as per normal provisions how much? 64 lakhs. Just now we computed. Correct? Hey everybody, add back 10 AA deduction. How much we claimed? 16 lakh we claimed. Add back 35 AD deduction. How much it is? 65 lakhs. But remember, immediately depreciation under section 32. 65 lakhs is building into 10% on 1st April onwards itself. Building is there. Full year is used. More than 180 days. 10% full you can claim. 6 lakh 50,000. What is the adjusted total income? 64 plus 16, 80. 80 plus 65. 1 crore 28 lakh 38. 1 crore 38 lakh 50,000. Now on this straight away 18.5% tax how much? Basic tax is equal to 25 lakh 250 plus surcharge at 15%. Why? Total income is exceeding surcharge at 15%. Yes or no? 1 crore to 2 crore surcharge rate is 15%. Yes or no? How much? 15% how much? 3 lakh 84,000. 3 lakh 84. 338. What is subtotal before cess? 28 lakh 29 lakh 46,000. Okay, plus 4% total. Tell me, gross tax liability. Sorry, I will call it as AMT liability. Yes or no? How much is that? 30 lakhs 64,451. Amma, AMT is more than. You see, this is normal tax. AMT is 30 lakh. Since AMT is more than normal tax, if I go with optional tax regime, if at all I am going with optional tax regime, minimum tax payable is equal to 30 lakhs 64,451. Agreed? Everybody? Now, since if I go with optional tax regime, this much tax minimum I should pay, and I am eligible for AMT credit. AMT credit is what? AMT 451 minus 19 lakh 81, 19 lakh 81, 19 lakh 81, 980. How much is the answer? 10 lakh 80. That's it. This is AMT credit. Correct? Fine. Under normal tax regime, I computed. Now I will go for default tax regime. Default tax regime. Okay. How do I compute default tax regime? First, I will see total income as per normal tax regime. How much it is? 64 lakh. Correct? Now, since I am going for default tax regime, 3580 deduction I cannot claim, right? When I am not claiming 3580, happily I can claim depreciation, no, in default tax regime. Remember, I can happily claim 32 depreciation if at all I am not claiming 3580 deduction. How much it is? 6 lakh 50. Again, I cannot claim 10AA exemption also, right? Array, how much I cannot claim? 16 lakhs. If at all I go for default tax regime, my total income, by mistake, don't write adjusted word here. It's a total income under default tax regime. How much it is? 1 crore 30, 38 lakh 50,000. Correct? Everybody, now compute basic tax on this. We know very well. Up to 15 lakh, 1 lakh 40,000 tax. Correct? Up to 15 lakh liability. Remember, default tax regime means up to 3 lakh 0, 3 to 7, 5%, 7 to 10, 10%, 10 to 12, 15%, 12 to 15, 20%, beyond 15, 30%. Yes or no? Up to 15 lakh, 1 lakh 40,000 rupees only the tax. I think I remember correctly. 1 lakh 40 only will come. Up to 15 lakh, how much is the tax? 1 lakh 40 only, no? 1 lakh 12,000 optional tax regime. That is up to 10 lakhs. This is default tax regime. Correct only. Okay. It's okay. My instinct says correct. Go ahead. Up to 15 lakhs rupees worth of income, no? In default tax regime, the fixed tax liability is 1 lakh 40. Beyond that, how much is there? 1 crore 23 lakh 50,000, which is taxable at 30%. How much? 37 lakh 5,000. Oh, basic tax totally. 38 lakh is coming. Plus surcharge 15% applicable. Total income crossed 1 crore. Up to 2 crore. 15%. How much? Okay, 44 lakh 21,750. Okay, fine. Plus 4%. Add final figure. Default tax regime tax liability. Yes or no? How much? 98,620. Array, if I go with default tax regime, I am getting 45 lakhs. If I go with optional tax regime, 30 lakhs I am getting. Moreover, I am getting 10 lakhs credit also. I will go with optional tax regime. Easy or not? I hope the numbers are right. I will see the numbers. Which regime it is? Default tax regime. 45, 98, 620. 45, 98, 620. Correct. Okay. Then computation of total income under regular provisions. 18 lakh 1,000. For us, how much we got? They did not add surcharge. Their computation is wrong. Surcharge they didn't add. 10% they are supposed to add. No. By the way, basic tax is right only, no? We computed basic tax right now. Under regular income tax, you see, 17 lakh 32, 500, right? Yes or no? That's it. They forgot to add. In the book, they forgot to add surcharge. That is where they did wrong answer. Clear? By the way, AMT, how much they got? AMT surcharge they added, luckily. Appa, AMT how much is 30 lakh 64 450. For us also same answer, no? 30 lakh 64 450. Perfect. Then AMT credit minus this one is equal to the tax. Are you clear? That's it. They did wrong calculation in the book. Surcharge they did not add here. They are supposed to add 10% surcharge. Then 4% says this answer would have been different. How much this answer is actually? How much is this answer? We have computed just now. 19 lakh 81 980. Correct? 19 lakh 81 980. AMT credit how much? This you remove. 19 lakh 81 980. AMT credit is what? 10 lakh 82,470. Correct? 10 lakh 82,470. That's it. Easy. You know, we computed differently from them. First they computed default tax regime. Then they computed tax. Then they arrived optional tax regime separately. Yes or no? In default tax regime, first they did default tax regime. So when they're doing default tax regime, profit from cess they took, profit from warehousing full amount they took, depreciation they reduced, all that. Whereas then they arrived optional tax regime. So how they arrived optional? Oh, they did freshly again. Freshly again they did. So total income is what? 64 lakh. Correct? So first they did default, then they arrived optional, then AMT. First we did what? Normal, then we did AMT, then we found out under normal, then part 2 of the section, part 2 of the question, then default tax regime. Since optional tax regime only with AMT, capital tax liability is lesser than default tax regime. Clear? That's it. So question number 12 is over. Everybody understood. All of you. I'm telling you, no, total income chapter is dead easy. Income tax is easy if you remember all the provisions. Any confusion until now? That's it. Okay. Now next we will see randomly, we will see some problem. Rosie Mary residential status related problem. Assuming both exercised option of shifting out of default tax regime. Both of them are exercising option of shifting out, means optional tax regime they are choosing. Yes or no? You know what are they asking? Rosie and Mary are sisters. Born and brought up at Mumbai. Rosie got married in 1982 and settled at Canada since 1982. Mary got married and settled in Mumbai. Both of them are below 60 years. Now you see, Rosie got married and settled in Canada. Okay, na? She settled in Canada. Rosie, she is a non-resident. Yes or no? Mary was settled in Mumbai. She is a resident and ordinarily resident. They are giving the following incomes. Pension from state government, taxable because it's a Indian income. Pension from Canadian government for Rosie, not taxable because she is a non-resident. Long-term capital gain on sale of land on 15th May. 15th May means before 23rd July, which means tax rate applicable on long-term capital gain is 20%. Yes or no? But anyhow, tax liability and all they are not asking, I think. Oh, tax liability they are asking. Oh my God. Here, crux. Here there is a crux. 1 minute. Just 1 minute. Yes. So, I will compute income, okay? Now I will compute income, correct? So now look at Rosie, non-resident, Mary, resident and ordinarily resident. Yes or no? Pension amount is taxable for Rosie, sorry, Mary. How much it is? 60,000, correct? Canadian government pension she is receiving. Okay, for Rosie, nothing is taxable. Then they are receiving what extra? Long-term capital gain, both of them 1 lakh. Long-term capital gain, both of them are having 1 lakh because they are from Indian company, source is in India. Yes or no? Short-term capital gain on sale of shares on 23rd April. Here also both are before amendment. Indian listed company STT paid 111A short-term capital gain. Yes or no? 111A short-term capital gain. This is before 23rd July. This is also before 23rd July. This is taxable at 20%. This is taxable at before amendment 15%. How much is for Mary? How much is for Rosie? 20,000. Rosie 20,000. Mary 2,50,000. Both are in India. Yes or no? LIC premium paid, that is ATC purpose. Premium paid to Canadian Life Insurance Corporation, where you pay doesn't matter, you can claim ATC deduction in India. Able to understand? Medical policy, oh, this is chapter 6, this is chapter 6, medical policy, deposit in PPF, rent received from house property, rent received it is, gross annual value it is, yes or no? So house property income, how much it is? 60,000 for Rosie minus 30%, net income is 42. Mary, how much she is receiving? 30,000, just 30,000 minus 30% is equal to 21,000. Understood or not? Gross total income, 1,62,000. Here it is 1,60,000, 4,10,000, 4,31,000, correct? Minus chapter 6A deduction, ATC. So Rosie, no. 1 minute. Hey, pension received, right? Yes. Very important observation. Pension received is taxable under salary. Flat 50,000 deduction. By the way, SSC is choosing optional tax receipt. Flat 50% deduction. So which means only 10,000 is taxable. Very good observation. 60K minus 50K is equal to how much? 10K. Remember, when you are computing income from salary, they gave pension received, not computed income. Yes or no? So 50,000 flat deduction, standard deduction. So here it is 3,81,000, correct? Now ATC deduction you have to compute. ATC what? LIC premium paid. Percentage and all we don't know. We assume that it is within the limit. Yes or no? Then Rosie, medical premium also she paid. PPF, deposit in PPF. PPF is also 20,000 ATC. Medical premium paid. Medical premium paid by account to pay check. So eligible, how much it is? 25,000 ATD. Yes or no? Then Rosie, 40,000 she paid for life insurance premium, that she can claim deduction, correct? What is the balance total income? 1,22,000. 3,81 minus 55. 3,26. Remember, both of them are normal citizens. Optional tax regime. Yes or no? And long-term capital gain they got right. Long-term capital gain, that is from sale of land, not an issue. Sale of land means no problem. Okay. Now you see tax computation. For her, no, short-term capital gain she has. Yes or no? Anyhow, let us compute basic exemption limit. She is a non-resident, remember. For non-resident, unutilized basic exemption limit concept is not applicable. Yes or no? Fine. So I am computing first Rosie tax liability. What is the total income? 1,22,000. In that, what is the capital gain income? 111A, 1 lakh. Balancing figure is what? 22. Since it is less than basic exemption limit, zero tax on normal income. Sir, unutilized limit is there? No. Can I set off? No. Residents only can set off. Resident individual only can set off unutilized basic exemption. Now this is taxable at 15% flat rate. This is taxable at 15% flat rate. How much is the tax? 15,000. So Rosie, basic tax is what? Just a minute. No. Before amendment 15%, 111A. For her, long term, this one. Okay. She has, got it. Understood. Okay. Which means 3 income she has. This means she is having 3 incomes, correct? 3 income she is having. Okay. You should have told me that information. I thought only one gain is there. Okay, fine. 1,22,000, right? Long-term capital gain how much? 1 lakh. This is before amendment she got, before 23rd July. Short-term capital gain she got. This is taxable at 20%. Sorry. Before amendment 15%. Before amendment 20%. Balancing figure 2,000 only. Correct. Balancing figure 2,000. Because she has 42,000 income from house property. LIC 40,000 is there. Able to understand? So entire 2,000 less than basic exemption, 0. Now long-term capital gain she got before 23rd July. We all know long-term capital gain tax rate is 20% if it is before 23rd July. 20,000 basic tax. Short-term capital gain 3,000. Total basic tax is equal to 23,000 plus surcharge will not apply. Education says 23 minus rebate. See, total income is less than 5 lakh. But rebate is not applicable for non-resident. 87A rebate is not applicable for non-resident. 4% is equal to gross tax liability. See how many complications are there. Small problem, but you see the complexity involved. So how much is that? 23,000 plus 4%. 23,000. That's it. This is rosy tax. Mary. Now we'll compute for Mary. Mary total income is how much? Mary total income is how much? 3,26,000. Antena? Correct, no? 3,26,000, right? Is it right? 3,26,000. Now, normal income is how much? Special income. For Mary, no, capital gain long term is there. Short term is not there, no? Short term is also there. Huh? Oh, both are there for both of them. Huh? Okay, 1 minute, just let me check. Oh, short term 2,50,000. Long term 1 lakh. Okay, okay, so big. Okay. I think we did something wrong here. Hey, wait. Remember chapter 6A deduction when you are claiming. This is not eligible. This is not eligible for chapter 6A. Chapter 6A total amount is what? I told you every checkpoint you should not take it granted. Luckily in this problem, since 350 is there, allocation 381, I could figure out that there is a mistake. But normally you can't figure out. If at all bigger amount is there, you will be doing wrong answer. Always follow the system. Whenever you are claiming chapter 6A, immediately checkpoint. How much of this is normal income? 31,000 only there. How much is there? Total chapter 6A deduction is very good. Now total income is exactly. Now Mary total income is what? 3,50,000, correct? Now remember, she got entirely special incomes only. Long term capital gain before amendment she got how much? 1 lakh, which is taxable at what rate? Short term capital gain 2,50,000, which is taxable at. Now fantastic observation I will tell you here. Now basic balance is 0, but she is eligible for 2,50,000 basic exemption. I can set off this. Because long-term capital gain is taxable at 20%, I will first set off long-term capital gain. Yes or no? Now balance still I have 1,50,000. That 1,50,000 I will set off here. Still I have balance long-term 0, balance short-term 1 lakh. Remember, if at all the capital gains are after amendment, 23rd July, if at all the capital gains, then first I will set up 2,50,000 with 2,50,000 which is taxable at 10. This is taxable at 15. Sorry, this is taxable at 12.5%. This is taxable at 20 if it is after amendment. That time I will set up with this. Because I have higher tax here. So I will use exemption for higher tax income. Understood the logic? I was thinking somewhere it should come problem. Luckily it came here. Okay. Then 1 lakh multiplied by 15%. So how much is the basic tax? 15,000. But remember, plus surcharge. How much is surcharge? 0. So 15,000 is subtotal plus cess. No. SSC is a resident. Yes or no? Total income is how much? Not exceeding 5 lakh. Remember, rebate will not come under 112A income. Here 111A she has. Not 112A is not there. So don't worry. If at all 112A tax is there, you will not claim rebate to that extent. Now maximum rebate, optional tax regime 12,500. Yes or no? So balance tax is what? 2,500 plus 4% is equal to fantastic provision 2,600. You see, such a complex problem. Yes or no? By the way, answers right? That you check first. Amma, thank God. 2,600, 23,920. Both are correct. Thank God. Are you clear? All of you? Since I remember entire provisions, I able to recollect everywhere. One provision at chapter 6A, I directly applied. If at all the problem, that number is bigger, no, I would have not discovered the mistake. At the time of tax computation, 350, is that special income 326? How come it is? Immediately I found out. Yes or no? Not every time you will be lucky like this to find. Able to understand. Every checkpoint, follow the system. Fantastic problem, no? So many observations are covered everywhere. That's it. Clear all of you? Yes. We'll take 5 minutes gap and then continue.